Yo.
Well, good morrow, everybody. Happy hump day. Dude, I talk about deja vu. It feels like yesterday I said this. Like, where's the week gone? A week is just flown by. I can literally remember saying, "Hello, everybody. Happy hump day," and it felt like yesterday. But anyway, I'll say it again. Hello, everybody. Happy hump day. It is indeed a Wednesday. How are we all doing? As you can tell, I can't take my this off because I've still got my vest on. Still got a little bit of skin going. Uh, so I'm a bit sweaty, so I'm gonna keep the hat on, gonna keep the sports stuff on, and then I can't wait to get in the shower in a bit. But I've made a coffee, and that is all that matters. And I've got a surprise for you, a little bit in just a little bit. The deadline for complaints has expired yesterday. Can I bring mine up?
You're a knobhead.
Your secret Santa thinks you're in our bed.
And I will not change that sentiment whatsoever.
Yeah, there seems to be a common reoccurrence because my this year's just gone Secret Santa also got me Lord Twat of Nobbington Manor. So there seems to be a reoccurring.
K-N-O-B, Nobbington Manor.
Yeah. There seems to be a little bit of a correlation here, or a bit of a consistency pattern forming. Anyway, what is good, guys? How are we all doing? Come and chat. Let us know how you're doing. Let us know how your week is going so far. Halfway through the week, nearly done. Tomorrow's the last stream day, my last trading day. So yeah, like I said, let us know how you're getting on. Let us know how your trading's going. Come say good morning. Let us know what you are trading today. And we shall say hello to Rich as well, because we do like Rich. Rich, how are you doing this morning?
Dude, I just read the best comment
Oh,
ever.
right.
Ever. I think this is comment of the year. I'm just gonna go straight ahead and just bring it up. My ego style.
Yeah.
Knock knock. Who's there? Euro who? You're only one who keeps moving against my stop loss. I love that, dude. That is so good.
Comment of the day.
Dude, that's comment of the day for me.
Style.
I was laughing at that because I saw the comment even as we were busy going live, like as the reel was running. I was like, oh, dude, that is so good. Dude, my ego style, dude, great comment. I love that.
What a name as well. You know, a great joke, great name. My ego, my style.
Yeah. Dude, I loved that. That was so good.
Yeah, I read that. That's quite funny. Anyway, how's you this morning, man? What's news? What's new or what's news in the life of Rich since what? 12
Since
hours?
yesterday.
Like 20 hours ago, not even that.
So I was in a meeting this morning, and we have an event that is in the works for June. So we've been working hard in the background, working on the event, which, from my perspective, is the biggest event the 5ers has ever done. And in my opinion, it is going to dwarf the 10-year event that we had.
Who organized the 10-year event?
What do you mean? Who organized it?
Who's like the front runner? Who's the organizer of the 10-year event? Because
that was Nora.
Okay, well, Nora, we do apologize. We do apologize in advance, but we're going to make your organized event look like garbage because this guy is going to blow that park.
Nice of you to say, but she's still the one in charge of it. So
I know. I was going to say it's
her event.
It's still Nora's event, isn't it?
Yeah. So for those who don't know, Nora is the managing director of the 5ers.
The legend behind the works.
Yes.
I try to give you some credit there. You could have piggybacked that all the way to the finish line.
I could have. I really could have. And then I would have to go and explain to Nora in my next meeting, or I'm going to have to go and beg her, please don't demote me. Please don't demote me.
Yeah, true. You'll have a lot of explaining to do. So Nora will be like, so Rich, tell me, why am I not getting any of this credit? Why does everyone seem that you're in charge of this project?
So all I'm saying about this is that everybody else will know very soon about the this event, as I believe we'll be going live with the event before the month is out. So keep your eyes peeled both on your emails and on the live streams, as well as your socials, for the information that's going to come out for that event. It is a pretty cool one. Just want to say that, yeah, that's just what I want to say. Anyway, so
Nice.
before we get to the rest of it, let's say hello to everybody else in chat, and then we'll get straight into the market, because the markets are moving. We have Ben Bernard. Ben Bernard.
Go on, give it one more go, but say it differently again.
Ben Bernard.
Nice.
Hi. Widigo or Idigo. Good morning, everyone. Already hit like. Dude, that's how we do it. Hit like, hit subscribe, follow socials. I don't know. Send us your social security numbers, all of that kind of stuff.
Send us your bank accounts. Send us your ID. Send us
pictures of your feet. Everything.
I don't pictures of me.
The real DC. Hello. Good morning to you. Kush asking, how can I get a free account? Well, you can get a free account by participating in one of our giveaways when we have a giveaway. We don't have a giveaway today, but we will probably have a giveaway next week, Monday. So rock up on Monday.
You can beg, though. We do like, you can beg us. That increases your chances. Not saying that you're gonna, it doesn't solidify them, but it certainly increases your chances.
Indeed, it does. Easy financing. Hello, guys. What's up?
Hello.
What's up?
Have you frozen? Or
yeah, there we go. No. It's just like
contemplating life over there.
King Zurak saying, what's happening with Euro USD? I don't know. But
I haven't looked at it. I've looked at gold.
William will have a look for you.
I will indeed.
Unbiased Trader saying, morning, come on you gunners. Finally, the wait is over. What wait?
No,
what
dude, I said this yesterday in the group. He was like, yes, the wait's over, 20 years. And I was like, what wait? I'm excited to know what wait, man. He was like, tomorrow's going to be a good day. I was like, damn right tomorrow's going to be a good day. Yes, Unbiased Trader. Love the energy.
But why? Why is it going to be a good day?
Why? The wait is over, but
sinking. Why? Euro is sinking.
Yes, there is rumours that the Euro had boarded the Titanic.
JPY is climbing. CHF is still around about the same spot. NZD and Australian dollar is around about the same spot. But Euro and Pound seems to want to...
Pound I don't like as much today.
We did have news on Pound, though.
That makes sense.
We had CPI year on year, which came out slightly less than what was anticipated and less than the previous one. So that's probably going to get a revision at some point, but...
yes, we did indeed. Yeah, I'm just seeing now. Yeah, it came out... Okay, yeah, wow, it came out less than forecasted and less than previous. It came out a lot lower, so 2.8%.
Yeah.
Okay,
yeah. 0.5% lower than the previous one, which is a significant drop from 3.3 to 2.8, so it's quite a bit. Asriel Trades, good morning, guys. I'm done for the month this week, up 2%, and Monday my semester exams are starting soon. This is the last day, and see you guys in June too, and you in June too, guys.
Awesome stuff, man. Well, good. Oh yeah, of course.
Good luck.
Exams finish what? You're going to be like the second week of June, I believe. It depends what grade you're in, what year you're in. If you're in like final exams or like university, I'm sure
probably uni.
Yeah, I'm sure great. Hopefully uni. Otherwise, maybe college. I think college you can be into like 19. Anything earlier than that, you shouldn't be trading. You've got to be over 18. So they say. No, you should be 18 plus. So I'm assuming it's uni. So, dude, big best of luck in your uni exams. This
Is this
it's not Tony Stark. It's Boney Ark. No, that
what?
feels so wrong.
I was about to say, dude, you can do better than that. Come
Yeah,
on.
I can definitely do better than that. It's Lonely Dark. Dude, I don't know. I still got Jim on my brain, I suppose. Mate, I need to go shower and get changed.
I'm not Iron Man. I'm who?
If only you traded gold, you could be Golden Man.
Doctor Strange.
No, you do look like Tony Stark.
Everybody keeps saying I'm Doctor Strange.
I much prefer the Tony Stark than Doctor Strange. You look like Tony Stark from Wish.com.
So I look like Robert Downey Jr. instead of Benedict Cumberbatch.
Yeah, you look like an AliExpress version of
AliExpress version.
Robert Downey Jr.
A 100% version.
Yeah, you're dude. That sounds like such an offense, but I mean, like, I suppose Robert Downey Jr. isn't.
I've been called many things, mate. In my life, I've been told that I look like Kevin Bacon at one point.
Really?
Footloose, dude.
Let me get a picture up.
Yeah, just search for him. But anyway, King's Light, is this Tony Stark? Lol. Dude, I wish.
Okay, you know what? It's okay. So names, I'm crap with names. You know what? I still prefer the Tony Stark. I still prefer the Robert Downey Jr. 100%.
I was 22 when we won last. Now I'm 44. A generation later, we win again. You're an Arsenal fan.
Right, now that makes more sense.
That makes a hell of a lot more sense now.
Right, okay.
You're an Arsenal fan, aren't you, Unbiased Trader? Because they won. They won yesterday, didn't they? It was yesterday, right?
Dude, me and football, I don't follow it. You know, unless I'm like at a live game, then I'll follow it. Or unless it's like the World Cup, for example, then I'll follow it. But when it comes to like league matches, I follow Liverpool because I have to, sort of thing. You know, I got sort of allocated that you will support Liverpool in this household, sort of thing. Easy. See,
no, I'm just reading.
This is what happens with Rich.
Rich will reading comments.
Rich
so
will
that I don't accidentally bring something up I'm not supposed to.
So you do what I should do, but I just bring it up and think, shit, I shouldn't have brought that up. And then Rich will do this thing where mid conversation he'll just stop talking and go, not move, not breathe, not twitch, not nothing. And I'm like, Rich, are you okay? He goes, yeah, I'm just reading a comment. I'm like, right, okay, fair. Okay, cool. So
I'm seeing a fair few people that are upset about the payout delays, which we've mentioned every single stream for the last month so far. Yeah, we cannot do anything about it. It is literally a patience game at this point in time. All you need to do is just be patient. That's all. Literally. So I'm just kind of like
looking. While you do that, I'm going to greetings, MGM talent here. I'm
going to bring your screen
up. While... In fact, guys, as well, I've sorted the lagging out. I'm no longer lagging. What was the problem? I think it was my other Chrome account that I logged into the stream on. I think it was just so sort of full. And so it was just using up so much sort of energy and memory that it was just lagging bad. So yeah, I'm now.
Yeah, you need to clear your cache from time to time, mate.
Rumor has it, I should. You know, rumor has it, but yeah, I will. To be fair, I will at some point when I get time or effort.
Pablo, I passed 100k eval. The dashboard was not reflecting. I placed 3 trades with a 0.01 lots on a 100k account. That's nothing. I did that to try if the dashboard would refresh. They called it bulk trading. So if you have any issues with any of your accounts, please reach out to help@the5ers.com. We here on the live stream, unfortunately, cannot assist you. We can only direct you to whom you need to contact. So for any account related issues, any payout related issues, or any issues with frequently asked questions. If we can assist you, we would. But in this case, for account-related stuff, payout delays, we cannot assist. We can only direct you to help@the5ers.com. So please don't go yelling and screaming at us because we're ignoring you or anything like that. But I can't assist you. I can just direct you. That's all.
Yeah, exactly.
So please go to help@the5ers.com.
Yeah.
Iconic gamer, like, what do you want me to do? What? You tell me what I should do for you from my side.
I was going to say, how about we put the options in their hands, okay? Iconic gamer. Like Rich just said, we've brought
Spoke about it yesterday.
Yeah. we've brought your comment up. Now, what would you like us to do about your issue? No, do tell us. And we will answer it honestly with what we can do about your issue. And if you want us to say, sort it out, we can't. So there's your answer. What next? What would you like us to do? Let us know.
Yeah. Okay, asking, when is the CEO coming? So Saul, the CEO of the 5ers, will be with us this afternoon. And the time that he will be joining us is 1 p.m. GMT. So awesome. The last hour of the stream is
GMT. Dude, that's annoying. I thought you were about to say 1 2. Well, I forget that I'm GMT +1 now because it's summertime. I was like, oh, sick! I get to stream with Sol again, but I don't. I think I've only streamed once with Sol, like properly, and that was just to do a quick introduction, and then I left.
As we'll trade second year in college at 21. Nice.
Oh, yeah, fair. There you go. That actually makes sense because you join at like 19 or 20 in college, I think. So yeah, dude, that's sick.
LJ looks like Thor. He does.
If LJ grew his hair out, he would. I reckon he'd really suit. But he's Australian, isn't he? He automatically suits that long hair look. He's like dirty blonde.
Pooley's correct. Shrek.
Wait, who looks like Shrek? You look like Shrek.
According to Pooley. Or maybe Pooley is referring to himself as Shrek.
I think so. I'm pretty sure Pooley's like, guys, you look like Robert Downey Jr., I look like Shrek. I'm pretty sure that...
Iconic gaming, I don't need to hear any selling words or promises. That's all I can give you is just a promise. I just need my payout. I just need to get my payout. I need my money, which I earned through skill. Well, like I said, reach out to help@the5ers.com. They're the ones that deal with payout, account issues, evaluations, all of that kind of stuff.
Iconic gamer, do me a favor, mate. I had a cold coffee the other day in Starbucks. Can you do something about that, please?
Look,
I had a bad experience with that coffee. Can you go get me another coffee?
I'm going to be straightforward with you guys. We've spoken about the payout delays multiple times. Every single stream. There's somebody coming in, quite frankly, almost always with a rude comment or two, calling us knobheads, dickheads, assholes, the like, which we take in stride, all right? But your anger is misdirected. You're taking it out on us when we, as the hosts, have no impact whatsoever on your delays or your payouts. And I'm going to just keep repeating the exact same thing that I'm going to say every day, and that is reach out to help@the5ers.com. Talk to our support agents. That's all I can do for you. I cannot talk on your behalf to a support agent. I don't have that power. I'm just a streamer.
I got power.
So you guys can come in here. You can call us scammers. You can call us whatever you want. It does not change the fact that I cannot assist you at all.
Yeah. Dude, don't get me wrong. It sucks that we can't assist you because, look, guys, no one likes a payout delay. No, that sucks. But there's guys in who have had payout delays. And in all fairness, they came out being like, "Oh, you guys are scams. You're frauding. Oh, you're this, that, and the other. You're all assholes. Oh, I've had a payout delay." And yes, they did have a payout delay of like 10, 15 days or whatever it is. And then they actually, in all fairness to them, came back and said, guys, I am genuinely so sorry. You are the best prop firm in the world. I was just upset. I did get my payout. It was just delayed. I was stressed. And they held themselves accountable and they did apologize. So, however, do you know what's really fucking annoying is that people like you, Iconic Gamer, will come out and slam us and be not so nice to us. And when I say us, I don't mean the 5ers, because the 5ers are just a company of people. So they don't really, they're just, it's just a company. Whereas when you come and attack us, it's like, dude, like we're humans. We've got feelings. So when you're personally attacking us and then you bugger off and get your payout and then you're sitting there all happy and then you're going to go, oh, yeah, I got a payout. Oh, this ain't so bad. I'm going to go gamble my profits away again because, you're clearly an impatient person. So you're probably gambling, not skill, so you're going to go and then potentially gamble away your chances of trying to get a payout again. And then what you're not going to do is realize, I was an arsehole to these really nice people who try and help me on the daily or try and stream with me in front of me on the daily. I'm going to go back and apologize and say, guys, look, I was just a bit stressed. I was just being impatient. I'm sorry. You guys are actually awesome. They're just delays. And perhaps I shouldn't be so desperate for my money. So guys, just have a bit of self-reflection. Hold yourself accountable. Yeah, it fucking sucks, man. That sucks. And we're sorry that you're going through that, but there's not much we can do about it. And truth be told, like we've gone over it before, we're not going to go over it again because, again, it's not our place. It was not something we can do. So, yeah, guys, we're sorry. That sucks, but it's nothing we can do. So before you go out and decide to be horrible in the world, and I talk about this off-stream, on-stream events. I talk about this in general when it comes to trading and non-trading. The most profitable, the most consistent, the most successful, and the best traders are traders who can self-reflect on themselves and actually look at themselves and say, ask themselves how they can be a better version of themselves. And usually it starts off-stream. Off trading. Like usually it's what you do in your daily life. So before you actually go and decide to redirect your anger to a human being with feelings and a person who's trying to do the best in their job or the best in whatever situation they're in. And before you go ahead and try and ruin someone else's day, just reflect on that. And I don't know what you do for work. Maybe you're a full-time trader. If you are, fair. Awesome stuff. Then you've got to try a little bit harder. However, if you're not, if you're someone who's worked in hospitality or you've worked in HR or you've worked in customer services, then try and reflect and think to yourself, okay, you know what? I've had shit off people before and it didn't feel great. So just a quick one to absolutely everyone out there. This isn't an attack to you guys. It's not an attack on you. However, it's an opportunity for... Hopefully this has resonated with some people. Like, hopefully some people are able... Because, look, none of us like to be told. So there's probably some of you out there thinking, shut up, Will, you're an arse. But there's also probably people out there thinking, wow, you know what? Will's got a little bit of a point. I was an absolute arse to my brother yesterday. I was an absolute awful human to my mum the other day. I was an absolutely... nasty piece of work to the barista. By the way, I didn't actually have a bad coffee. I make my own coffee, so I don't go to the Starbucks. I was an absolute horrible person to the barista. She was only trying to do a job, but I was stressed that I had a deadline. So when you can self-reflect and think, wow, actually, I'm not being the nicest person in the world. I'm not projecting the nicest version of myself. And before you realize, subconsciously, it comes back on you. How you project yourself is how you introject yourself as well. So just be patient, take a breath, and think about what you're truly doing and what it truly means. Put forward positivity. Yes, it's frustrating, but you've got to try and push that forward because that's going to reflect in the markets. Guys, if you're going to come with negativity, even on live stream, especially related to trading, especially if you're going to talk about negativity in trading, you're going to come to the markets, you're going to come to the charts, and you're actually going to, bring in that negative aura, that negative atmosphere to the charts, and potentially you're going to be psychologically offside. You're going to maybe go on tilt. You're going to be anger trading, revenge trading, frustration trading. There's going to be something in there that actually causes you to subconsciously and notify the word, guys, subconsciously. You're doing it without realizing. And why you're doing it without realizing is because there's something that's happened during your day that's pissed you off. Try not to let it affect you. You know, I was victim of this yesterday. Nothing pissed me off. Well, some things did, but I was just having a bad psychological day. I acknowledged that, I notified that, and I let it become there so I could notify it, notice it, and try and be the best going forward. So just a couple of words of advice.
So yeah, now that we've addressed it, it's done now. So
time to move on to gold and how we're all going to make.
We're just gonna go ahead now and start talking about the market. But yeah, straight and simple. Unfortunately, this is all we can assist you with. It's this. So please reach out to help@the5ers.com.
And for everyone else out there who's consistent and absolute legends who come through every single morning on the Fiverr stream with us to join us. Remember what I always say, well, it's better to be pissed off than pissed on. Yes, I suppose. I mean, it depends who you are. That's all I'm going to say.
Let's do this. Let's do this. You pick a pair, I take the other one, and we run through it, mate.
I'm going to go gold because I like how gold's setting up right now, and I think that... Oh. That was quick. I was going to say, if we get a nice break and close above, I may look at entering. That was quick. Let me fire up my chart. I'm going to be looking at a gold long here. And... No, it may leave without me. Don't leave without me. Hold for a minute.
Wait, you want to buy gold?
I want to buy gold, yes.
Okay. On the play account, I'm going to join you.
Ooh la la. Join me, Rich.
Ooh la la.
Come to the gold side.
Rexa, I will have a look for you on Euro GBP. So,
yeah, I'll tell you what we'll do. I'm gonna pick gold, and EU, and then you can have, I don't know, NAS and GU, for example. Does that sound good?
Yeah, sounds good.
Sweet and sour chicken balls. Okay, let me make sure that I'm opening the right account. I believe so. Okay. There we go. Okay, cool. There we go. So now let me just... Invalid TP. Oh god, I need to... Long. In fact, let me share my correct screen. Give me two. There you go. Let me drop this and bring it back up, and then I need this one, and then there we go. Cool. I am going invalid. What do you mean invalid TP? Oh, for God's sake! No, up there. Go up.
Yeah,
there.
your TP is on the wrong side of it.
Yeah, yeah. I realized I was in shorts. Let's just go ahead with that at the moment. I'm going to put on 1% risk, trade in, trade, notification, bosh.
There we go.
There we go. We're in 1% risk. Where do I want to put my TP? I'm going to put my TP at the yes. At that yes. Yeah, that's why I want my TP.
4508, I feel like, is a good take profit.
Okay, yeah, yeah, I got exact same. So if I now move back over onto my trading view real quick. There we go. Wash. As you can see, yeah, 450. Well, this is 4509, but yeah,
yeah, you're taking the high off that swing. I'm taking like a bracket. I'm taking
you're more looking at like an area zone.
Yeah.
Also, guys, this was the surprise that I was telling you about. What do you think of my chart? You guys all detested, not even hated, you detested the grey. So I've changed it up to like gold, like two-tone gold and black background. Let me know what your thoughts are.
Dude, I like it. However, I think your candle colors can be adjusted so slightly, ever so slightly.
Yeah, well, I like them at the moment.
Obstructive criticism? Obstructive criticism, 'tis all it is.
Yeah, no, to be fair, yeah, I rate that.
So I feel like we are going to depart a little bit from what we see on gold. So yesterday we had, well, yesterday when we were talking about gold, you and I was talking about these two zones, these two areas of support and resistance that I wanted us to break through. And we got the breakthrough late during the afternoon. So I was busy explaining my strategy with Victor and Samir. So I did not have a look at gold at all. But we eventually got that breakthrough off that zone quite strongly, to be dead honest with you. And then we created a base. So a strong volumetric reaction, an attempt to break this newly found directional move, and then a flat out drop from there. So you can mark this candle here on the 5-minute as a base area to potentially be tested at some point in the future. However, what we had since then was the New York session itself. Let's do this. Just so we can see it a little bit more clearly. We had that volumetric push down into the New York session. New York session opened up. We flattened out ever so slightly. We attempted to buy back into either the base area or into this support area that now is, or has become, let's rather say, a resistance area. However, we never even got close to it. And we ended up printing a base area on the 5-minute, well, not a base area, but a resistance point on the 5-minute. So if I just take that full candle, you can see that we tried to push lower and then slowly but surely started ticking back up again into it, coming back to the 50 EMA and then losing all momentum. This is very, very flat price action. And from there on, we try to push lower again. Come into today, we have the rollover, which was slightly higher on TradingView. Early morning price action on gold pushed us back into that area of resistance that we had over, let's say, the upper or the last section basically of the New York session. And then from there on, we had a volumetric reaction pushing price lower. And since then, we've tried pushing lower than this point down here, which was 4453, sorry. Slowed our downward descent, started pushing up again. This is where I am at odds with you, Will. You're looking for buys, okay? I agree to a point because we are bullish. We're bullishly above the 50 EMA. We are making higher lows and higher highs as we're going up, but the momentum is very slow, okay? So as of right now, we've effectively come to the rollover section. So this area of flat price action, that's basically where we've come to now. So a lot of jumping up and down, a lot of consolidation, an attempt to break up a retest, pushing back into this area of resistance above, coming back down again, breaking through that area, coming back into it, becoming a resistance point yet again, struggling, pushing lower, creating a lower low on this reaction that we've had, and now we're back at it. So what I'm saying with this is that we've kind of reached a current intraday area of interest. So we're trying to break above. We're failing a little bit. It looks as though we've got a little bit more, I wouldn't say conviction, because there's no conviction just yet, but it feels as though there's a little bit more stronger attempts to try and break this new upward cycle, because we're not getting any nice runs. Like even on the 15-minute as well, if you look at the 15, there's a lot of wicks above and below the candles. There's The moment we get a bit of an upward push, there's an immediate pullback, a bit of an upward push, immediate pullback. It's very slow. It's not convicting. It's the conviction I feel like is not really there. So here's what I'm thinking. I think if we are to go up, I don't think we're going to go any much higher than the Tokyo high, if we even reach the Tokyo high on gold, bar any sort of like news or high impact event happening today. I don't really see gold strongly push into this area. That trade of yours, I like it as a buy into this area, but I don't expect it to take profit in the next hour or even 2 hours. I'm going to be dead honest with you. I think this is going to be a slow burn.
Fair. If we can break above, like break and close above the sort of 490 area, if we can break and close above the 490 area, then I think we're off to the races. I think it's like, yeah, cool. Let's just wait and see now. Let's just watch and see what happens here. If we fail or struggle to break above the 4,489 level, then I think it could end up a bit like what happened yesterday, where we're going to dwindle. And that's the only issue with my gold strategy. My gold strategy is super profitable. However, the issue when you're trading consolidation zones is that it doesn't necessarily always work with if you don't get the volume. The issue with consolidation zones is consolidation is literally just showing lack of volume. That's all consolidation is. It's zero volume. Now, when you trade a breakout of zero volume, it doesn't mean the volume is there.
Yeah.
Sometimes it just means there's a spike in volume and then volume drops again. Or it reverses or goes into a different direction. So that's the only issue. Look, not all strategies are 100% perfect. They all come with their pros and cons. The con of my gold breakout strategy is sometimes the markets don't give you what you're looking, like the follow through you're looking for, even if they give you the perfect entry.
That's kind of what I'm like getting to. It's just like, I don't see any issue with buying into this upper section here. I really don't mind it at all. My only concern was the fact that this volumetric downward push created a new low, swept the previous day low from this area reaction, let's rather say. This is on the hourly, and yes, it's slowed down a lot down here. That is very slowed. So this section here, very, very slowed. But the reaction out of it seems also a little slowed as well. That's all I'm saying. Like, looking at it right now, a long wait, pushing price gold up. But it can happen.
Yeah, 100%. If you wanted to be really conservative about this and really sort of like wait your time through, there's probably two better stop losses you could have had. And that would have been down at this level here at 4,461. Or down here at 4,451. However, down here, just below the low here at 4,475, risky, but when it pays off, it pays off.
Tell you what, mate, I am going to hedge your trade.
You're going to sell?
I'm going to sell.
Yeah, nice. Like, look, this candle here, absolutely beautiful candle. We got the close up. What is that? We got a close above. I can't even draw it. There we go. Close above, pull back, beautiful candle, followed by this garbage, So it just may be a case of the volume's just not there. It may be a case of we're not ready yet. Maybe I'm a bit premature in this entry, which is fine. That's completely okay. We're just going to have to wait and see what happens next. This may absolutely wick up again, or it may destroy my stop loss. Either way, I followed my rules and I followed my plans. And providing I stay consistent with this strategy, I will end up on top.
Once again, not results orientated, but process orientated.
Exactly. Exactly that.
Yes. Okay, so we're both, I don't know, at opposite ends of gold. I feel like you're correct in the assessment that there's a potential for us to go and test that area. But I'm leaning more towards sells on gold intraday.
Yeah.
But
I can see why.
that's the nice thing. That's the nice thing is we can have opposing views and it's fine.
No,
it's
we
okay to have
can't,
opposing views.
Rich. You must
can.
always agree with me.
Oh no, poor baby, poor baby. All right,
Yeah,
I'm
but
gonna
no,
have a look at euro pound because you have a buy, I have a sell on gold, and then let's see, let the best man win. Who's going to be winner chicken dinner?
Well, hopefully me.
Okay, I don't mind you going into profit, you locking up a little bit, and then it coming down to mine. I don't mind that.
I used to say that to Rich all the time. So when me and Richard Wells used to stream together, we'd hedge each other's position. And I always used to say to him, I don't mind if I go into a bit of deep drawdown for you to take profit and then I go and hit TP. I used to say that all the time to him.
So I'm just simply hedging you. Like, I don't really care where the stop loss is. I'm just going to say, well, I'm selling from here. You're buying from here. Let's go.
Yeah, fair.
All right. Euro pound is at an interesting place right now. So if I go onto the daily on euro pound and we have a look, you'll see that we have, where's my drawing tool? We have this downward trajectory initially for the longest time. So this is basically all the way from November 2025. So it's been a fair few months of us being in this downward channel. If you're just looking at the daily, if that is the high point of the previous upward channel that we had, we have effectively come back down, creating a new low, a high, a lower high, a lower low, lower high, lower low. And lo and behold, a slightly higher low, maybe a bit equal, almost a triple low if you compare it to each of these three previous ones. And now a almost equal high in relation to that area over there. So we were quite bearish for a while. So this action that we had here was a little bit more bearish. But since then, we've plateaued. So this bottom section down here has become a very strong area of support for euro pound. So multiple touches on it. And then the area where we are right now, also, if you go all the way back here, you'll notice that there's multiple times that we've come in to test this area specifically. Yeah, we've had one crazy push out, but consider that this was a change from a bullish structure to a bearish structure. Okay, so where we are, or where we were initially, what was that, on Monday, was at that area. Was at that area of reaction and then started pushing lower. But now we're getting closer to this bottom section, this bottom area. Now there's a way for us to refine this bottom area to find, let's say, the absolute lows with the absolute highs of that section. So I'm going to go look towards the left to see if there's any price action here on the left that would signify a initial reaction here, that would cause an initial reaction here. So I'll go down to the 4 hour and I'm just going to go back to see if there's anything here. So what I can see is that we had this cluster over here, which aligns with this area of consolidation. We've had an attempt to try and push price lower, another reaction, reaction. So this area over here seems very nice for a potential area to put into focus. So let's do this. I'm just going to take this area of consolidation. Shall I take the whole one? Yeah, let's take this whole area.
Take the whole damn lot. Be greedy.
Take the whole. Yes, all of it. And we start pushing through. First of all, you can immediately see that the bottom wick here touches the bottom portion of this consolidation. So that's already telling me that this is definitely an area of interest. Let's zoom towards the right and we'll see what kind of reactions we have. There we go, in a line. So I'm just going to delete that for now. So that area on the left, this area, slight little area of consolidation that we've had, is the strongest area that I can mark up on the 4-hourly for a support zone, because we've had multiple attempts. Oh, sorry, that is the wrong drawing tool. We've had multiple attempts, slight slowing down on the 4-hour. On the lower time frame, it'll look like we were going a little bit sideways, consolidating as well. We've had an attempt, and the strongest portion is the fact that we didn't even wick below the lowest point that was created here on the left. Okay, so, and you have some struggles in this area, and then try and break out, struggling, come back down in, break out, retest, and so on, retest in this area again. To me, it just makes sense that this is a strong area to test. Now, if we come here towards the left, let's see where we are. So we've created a low, higher low, higher low, higher low, very strong push up higher. So obviously you can see that you have expansion. So price is volumetrically becoming stronger on its way up. It pushes all the way into this area up over here, which had reactions, consolidation, attempts at breaks, failures overall, and eventually had a strong volumetric sell out of this area here after a very strong attempt. So, are we bearish or are we bullish right now? Right now, on the 4-hourly, I would say that we are creating a bit more bearish structure, because we have areas of consolidation, which is where we are right now, and we've had consolidation as well. But when we're having breaks, it's breaking lower. So to me, we are currently in consolidation. However, if we look at the zone of where we are right now in consolidation, it aligns with consolidation that we had on Thursday last week, before we had volumetric push up higher. So that's why I'm saying we're at an interesting area. We're very close to this 4-hour area of support, where, granted, when we get into it, there's a bit of a waiting period, and then we start pushing up higher. But we've had a very strong reaction at the resistance point above. We're in an area of consolidation. So we're much further away from the resistance than we are from the support. And I feel like we need to come down and test this area of support first, potentially sweeping these lows that we've had here. So this cluster of trades that we've had here, the cluster of wicks, I feel like I want that to be tested for Euro Pound. And then, based on that, see whether or not it can start pushing up. So, right now, the question is, and I'm pretty sure that LJ and Dirk will go through the fundamentals and the macros of this, is talking about the strength of the euro versus the strength of the pound as of right now. Whether or not that's actually in contention, or if it's more to do with the strength of the dollar versus the pound and the dollar versus the euro, and that this is just correlation. So right now, it's a bit flat. We've had news on the pound. CPI came out less than expected and less than the previous information that we've had, the previous data release, signifying potentially a weakness in the pound. So you're looking at this thinking, but then euro pound should be doing what? Should it be going up or should it be going down? So the quote currency in this case is the euro, or the base currency is the euro, the quote currency is the pound. So it is 0.8, what is the current like? 0.866 at the moment, pound per euro. You want to see this go up, don't you? You want to see it become more expensive to buy a euro for a pound if pound was weakening. But that's looking at it in a nutshell. No, but like in a nutshell, you're looking at it from the sense that if we have pound weakness, this graph should be going up.
Yeah.
And it's not. So that's what I'm saying. Is it really pound or euro?
Strength in the euro coming, but we don't either.
Yeah, but like for it to go up, you need weakness in the pound or strength in the euro.
Yeah, exactly.
We've had weakness in the pound, but we're not seeing price really move all that much. Also, CPI on euro today. I had a look at that, and it's
It's yellow. I was gonna say because I didn't see that.
Yeah,
So I
it's yellow.
literally just looked at my my folder now, or my Forex factory now, and I got nothing.
Yes, yellow. So we don't expect it to change much. However, uh, for the euro pound, I don't know if this is going to make that much of a change. When the pound CPI effectively had very little difference. This is on the 4-hourly. If we go down to the hourly, yes, we've had a wick trying to push it up, but no follow through whatsoever. And that's my concern. So what am I looking for? I am looking for this to break. And I would prefer, where's my path to? I would prefer a break lower, retest, and do something like this to try and test these lows that we've had here. These areas where we've had stronger than normal reactions, specifically this area over here. That would be nice. So what is this? 08630. I would love to see us come back down and test this area because we've had a nice volumetric reaction out of this. Bit of consolidation, another volumetric reaction. So I'm looking for us to break lower, retest this area over here, and then from there on decide if it wants to push up or drop lower. That's what I'm looking for right now. And that's just purely based on the fact that reaction at the above, reaction at the bottom, consolidation, breakout, retest of the consolidation, not doing anything with it. We're not pushing higher. We've just basically come back down into consolidation. So the break above with the previous consolidation was nice, volumetric, and strong. We're not getting it right now. We've had consolidation, break, consolidation. I want to see a break lower. Simple.
You just had
Is it going to happen?
Beautiful close on gold, by the way. Beautiful close.
Oh, yeah.
I just want to see how the reaction to this close goes. So I'm $350 up now on my live account, just under a 1-to-1. I'm really close to hit my 1-to-1. And then nice. 20 bucks up, let's call it, on my play account.
So 0.4%. Yeah. Nice. Yeah, that's good. So, like I said, I don't mind it going into your profits a little bit, and then you decide to close out because you're like, ooh, it looks, and then I wanted to.
Yeah, fair.
Purely to stroke my own ego. That's all. But yes, Rexa, I hope that outlook that I've given you now assists you in your decision making. If not, sorry.
So yeah, my bad. Also seeing SGN coming out with hello Rich and Will, hello 5ers community, what's good bro, loving those chart colors Will, thank you my man, seeing you guys are liking the chart colors, like that.
Yes they do.
We're getting a pullback now, which is nice. I like that we're getting a pullback. I don't want to get a mitigation, and what I mean by that is I don't want price to come down and then just completely fill this candle. If we can completely fill this candle here just becomes a completely irrelevant volumetric candle instead of a momentumous push up. However, we wicked this wick. We didn't take it. We didn't. So price action is nicer than it was yesterday. I'll say that. We didn't get a close above a new higher high, which is a shame. Technically, I suppose we did if you look at your bodies. I like to put in a higher high above the wick because it's a better confirmation. But we're pulling back deeper, starting to pull back a little bit deeper than I want to. I don't mind pulling back probably into, let me get a fib up, probably into like the 6 level. So, okay, so we got a little bit further. We can pull back a little bit further, but I don't want this pulling back too deep. Because if this pulls back too deeply, then I'm just going to look at it and I'm just going to be like, you know what, there's no difference to what it was yesterday. This is still just a higher time frame range. You know, there's still consolidation here. It's impulse more than volume. So hopefully this is volume. Hopefully this is price volumetrically pushing up, saying we want to head to the highs. We want to be taking some nice bullish momentum to the upside. Hopefully, If we fully mitigate this candle, then it's going to be just an impulse. Oh, look, we're bullish. Now we're not. So I don't want that.
We're bullish. Ah, bye. We're
Yeah.
bearish.
Yeah, literally. So that's what I don't want. But if we can wick this candle, close with a nice, heavy, low wick candle, then because you asked him to see the gold and told your profits, that's why it's going down. Yeah. Yeah, true. True.
We know that the market moves on Will's willingness to take profit. I'm in profit. Market's like, no, you're not.
Well, no, you're not. I'll teach you a lesson now.
Nah, dude, I like what you're saying. Like, once again, we are agreed in the direction for the interim right now. I just think that overall, a higher term sell-off on gold might potentially come into play a bit more.
What I'm going to do as well, guys, I'm fully feeling it today. I'm a lot better. So I am going to be trading discretion today on my personal account, or on, not my personal account, on my live funded account that I trade on stream. However, my play account, I'll still hold TP or stop loss. And we'll see. We'll see in a few months if there's any,
is there correlation?
Yeah, if there's any correlation or anything.
Can we correlate this? See.
Trying to understand what gold wants to do.
Look, it's the same thing here, like got no chill. So which side should we take? It's really confusing markets right now. That's the thing.
It is a little bit.
It's like I said on gold. We're kind of in an just like flat area right now.
Hourly, like sort of indecision close as well.
On gold.
Yeah.
1 hourly. I mean, not bad.
No, not bad at all.
Bad.
Yeah, not bad at all, to be fair.
Unless we're going to definitely from here go and take out the bottom portion of that hourly wick. It feels...
This feels nice right now,
Yeah. Little bit of... I think you're fine, mate. I think your trade's going to go into profits.
I think so.
No issues. Yeah, no, I think you're good. I think
he's going to come on at any minute now and just be like, Will, gold's just going to melt. Yeah, I'm going to oh, okay.
LJ just left. LJ hopped into the back end of the stream and Will just said,
I'm not going to break Will's
He was like, well, in that case, if I'm not on stream, I can't tell him that.
Yeah, LJ came in, realized that he's going to break my heart and thought, I can't do that. I'm going to wait for Will to leave.
Yeah, we'll see. I do think 4508-ish is a good area.
Yeah,
potentially 4504 could also be a good just before that 4508 section.
I want to break and close into the 4.5 area, sort of like even if we can get into the sort of 4492 area first, just get some nice momentum into that area, then that would be nice. That would be really nice.
Dubakor, are you asking about MetaTrader or are you asking about TradingView? Because if we just go to my chart very quickly,
yeah.
Are you referring to this down here on the bottom right of the TradingView chart? Well, a MetaTrader chart.
Oh, yeah, I think so.
Are you referring to this risk here? So if you're referring to this, you are we are talking about, if I go to the navigator, so this one. So this show floating risk indicator is one that you can get from the 5ers. So, so that one. So when you're on the 5ers hub, if you're in your hub, there is a section where you can go and download this specific risk indicator. So it just takes all of your trades per chart. So if I had another trade on, this risk portion here would double. It will say total risk and risk per asset. You can download it from the hub. Just go in, scroll all the way down to the bottom, and I think at the bottom there should be the information. I'll log in and I'll go and check for you so I can confirm for you exactly. But you can get it on the 5ers. It's a 5ers specific one. So I use that and the position sizer. That's the only 2 indicators that I use. The rest of the stuff here is clean charting. So let's go and see if I can find it.
Yo.
Yo,
LJ. Hello,
wow,
boys.
I thought we had the energy today. Talk about bringing energy.
Let's go.
I feel like LJ slept well.
Trading.
LJ and Dirk have been absolutely caning those espressos all morning.
I did sleep well last night, Rich. I did.
We would never have noticed, mate. Never.
I played a couple hours of Dota before I went to bed and just chilled out. Like
nice.
3-4 hours, and then just had a good sleep. I turned off all alarms, didn't try to get up at any certain time to trade Asia. I was just like, no, I'm just going to sleep today. It was great. I just naturally woke up, and it was good. So
awesome stuff, man. Oh, that's sick. There's nothing better where the body feels fully recovered, doesn't it?
Oh, yeah.
Yeah.
Not going to lie, that is the truth.
Henry, just swap out, all right? Just come to the dark side, all right? Come to the Dota side. All right, forget your League of Legends. Lol. What garbage. Everyone laugh at him. League of Legends?
Everyone laugh.
Right.
You can't just tell chat boyfriend.
League of Legends had the better anime. I'm just going to put it out there. Arcane was amazing, whereas the Dota one, which was Dragon's Blood.
Yeah. It was still good. It was definitely good, but it wasn't the same. No. League of Legends definitely wins that.
Yeah. Dota, much better game. A lot more fun, visually better, more strategy, better.
Yeah.
League of Legends anime, goated. Great. Arcane was so good.
So coming from someone who's not a gamer and has no idea what you're on about, all I heard was anime. I didn't know anything about anime until I probably joined the 5ers and then, heard you guys talking about anime and stuff like that. So I was like, what the hell's anime? So I've got an Asian girlfriend and I know that anime is Asian. So I instantly said to her, I was like, babe, talk to me about anime. She replied with, absolutely not. And I was like, what do you mean? She's like, I'm not that sort of Asian. Like, I'm not.
I was about to say, you've got.
Like, I'm not that guy. And I was like, right, okay. So anyway, we were in Hong Kong. I'm not that type of Asian. In other words, she's not an anime sort of girl, anime lover. So whatever, because it's like a massive culture. So anyway, we went to this place called Mongkok, and Mongkok is like the sort of the stereotype gamer, anime lover type of people.
Weebs will love being there.
Yeah. So anyway, we were walking around the shops, and I'll tell you what, I can understand why you like anime. That's all I'm saying. I saw some of these things.
I think we know what you saw.
Whoa!
That special type of anime.
Dude, like I walked into this shop and I said to I looked at the missus and I said, because like I thought we walked into like a toy shop initially. I was like, babe, why are these kids' toys like this? They're like, these aren't kids' toys. These are anime collector figurine things. And I was like,
yeah.
Wait, so okay. So and then I started to learn a little bit more about anime. I started and like what you were talking about, like League of Legends and stuff like that. And I was like, wait, hang on a minute. What about this? And there's this whole cabinet of, I don't even know if I can explain
just blur
it.
The whole section.
Etchy material.
Like hot and heavy sort of. The detail, the craftsmanship was unreal. And I was like,
okay.
Babe, can I get one? I was like, can I
the number of times I see, like, we have these stores here as well, and you see like families bringing their kids in, and often the parents are interested in that kind of gear as well. But they bring the kids in. The kids are all around the Pokemon kind of section, like there's like plushies, that kind of stuff. And then they wander over here to the cabinet, and they just stand there and stare. And they're like, "Mummy, what's the?"
I know what I want to be when I grow up.
Yeah. And then so the missus said to me, she was like, people dress up like this and go to events. I was like, where?
Where?
When?
Tell me now. I just
I must know.
I just want to quickly address this quickly. Dubakor, so I see you're right. It does show a 404 error. I will contact support and just ask them to just have a look at this, because on the downloads tab, you're supposed to have all of the downloadable assets, extra ones. So you can download MetaTrader platform and the indicators, and it's supposed to work. The fact that it doesn't work is a problem. So we will get on them to fix this ASAP. So yeah, but yes, that's where you can get them.
Did you just refresh then though, and it worked, or?
No, I just tried to refresh. I did it previously. It didn't. It 404'd, but I wanted to show it when I clicked on it that it shows 404.
Oh, okay, right. That's it.
Yeah.
Yeah, fair.
Nice.
I heard you were talking about gold as well before.
Yes.
Like when I first came
just
in, my browser crashed immediately.
Yeah, just before I leave, I'm going to be dropping out any second now. Just before I do go, tell me that gold's going to go up.
Look, okay, I will say near term, yes, I'll give you that. Okay. Now there's caveat though. Caveat. I think it's similar deal to, and we're going to run over this with myself and Dirk shortly. Euro dollar, Aussie dollar. We've had these kind of downdrafts. I expect some kind of pickup and then pullback and then continuation lower, or somehow we break higher. I'm currently long on the Aussie dollar off the same kind of framework, but it's, as you can see, it's just a very small kind of bounce right here. So same deal with gold. This has been my longer run they've been looking for, and we're now gradually getting onto that. So I would say we've got like a small pickup in the same deal, and then we come off. So it's like yes, but no.
Yes.
Right.
Okay.
I think you've got like
level are we going to pull back to?
Tactical long. Okay, so this is where the gold chart, as far as that is kind of rubbish, right? So you've got these lows through here, which kind of somewhat coincide with some of the highs that we push through here and the wick low there, but there's this like just dirty, muddy, frothy kind of zone in there. So I'd be saying either you match that prior wick high through here that we pulled back from about 45.08, or it's just a touch below, potentially even out the candle.
Okay, I was going to say, like, I'm looking
right on
for
4,500.
Yeah, I was literally about to say I'm looking for around 4,500. If I can, 4,509.
Yeah. So I'd say you might just get something like this, and then because it's gold, you might have like a touch above that 4,500, and then probably off, unless somehow we get the catalyst of something else, which could propel, say, euro dollar, Aussie dollar, like risk on flows in general. We do have Nvidia tonight as well, which I would say is going to be better. I think there's a lot of doubts around Nvidia. All the other tangentials I've seen show very, very, very good revenue. And people are saying like, oh, it'll be good, but it won't be great. But from what I'm seeing, everything out of South Korea and stuff as well,
It looks good.
It shows it could actually be great. So it could actually over surprise. So in that case, you get a risk on flow across the board. And currently how gold is trading, in that sense, this is towards rollover, because they'll report after close of market. That's where you could actually see some kind of wandering down here, and then gold actually shoot right up. So that's why I call this cluster right here for gold as it's very murky, very muddy. I prefer other assets that are a bit cleaner.
That makes sense. Okay, that makes sense.
But that's your general 2-minute coverage of all the
to be fair, gold feels messy. It does feel messy, but it doesn't feel bad. It feels better than yesterday, but it does, like you said, it still feels that sort of like I'm swimming in dangerous waters still.
Yeah.
Hence why I've only risked like $400 instead of like a full 1% risk.
So just to finalize on it, and then I know you guys got to go. So we're getting this kind of megaphoning type price action. That's what I call it. It looks like a megaphone.
Yeah.
So it's basically the opposite of when you get price condensing into a tighter and tighter range. You're getting the opposite, where it expands into a broader and broader range, where you're kind of seeing more uncertainty overall. We've seen this in where's a good example? What else do I have it? I had it mapped out on some other stuff. I forget what it was, but Oh yeah. So Aussie right here, for instance, those tops, the bottoms through here. I think euro dollar. Maybe I didn't map it out on TradingView, or something else I was looking at. We've seen a number of assets all printing this kind of megaphone type range across the board. So it's all very highly correlated. So hence, if you see the other guys starting to shift up, gold in sympathy should come up. The only thing with gold is I think it'll have less of a pull overall. I think it'll be slightly lagging some of the other assets. So that's where I don't quite like it. But if you're looking for that movement as like an intraday kind of session to session trade, put it that way, I don't see that as bad.
Okay.
I see that as quite reasonable. So 15-minute, like you've got the 100 moving average coming down through here. That tends to cap so long as the current trend is still intact. And then you'd see this come off. And then the decision point's going to be back down here across the middle of this point. And then coming towards New York, if we either start to drive higher or snap lower, which will probably be led by like currency moves, which goes into that risk on, risk off.
I don't hate that. That's not ruined my hopes and dreams. It's as long as we get a
it's
reaction.
good. It's messy. It's just a messy,
messy
trade right now.
Yeah, no, 100%. Yeah,
I'm happy that you
say
say that.
Yeah, literally. That's the only thing. Like I did mention, the price action was quite clean. It got really messy, and I sort of looked at this and I thought, you know what, it is messy price action. But look, if we can move higher now, take highs, then if we can head into the 4,500, then I'm gonna be a happy chappy today. If not, look, if this hits stop, it hits stop. It's not the end of the world.
And I mean, that's how gold has been for ages. So if you've gotten used to trading that kind of messy,
exactly, yeah, and that's why I said earlier. I said the only issue when you are trading gold with the strategy that I'm using is when it works, it works, and it's a super profitable strategy. However, the issue when trading, especially with consolidation zones and especially with gold, it sometimes gets messy, and it will have messy moments. That's the only complaint I have about the strategy that I use on gold. It does have sloppy, messy moments.
Like look at all this. It's all back and forth, lots of wicks all over. Right, it's been like this for ages. So this is more of the same. So if you're taking that in consideration, you can work around it. If you're thinking it's acting like gold prior to the 2 months, the same way it has for the year and a half before that.
Yeah, if you think you've got the gold price action, you haven't.
Yeah. All right, guys. I'm going to have to hop out. I need to jump into another meeting. I will see you guys in just shy of 2 hours. Have fun, LJ and Dirk. And then we'll see you guys a little bit later. Cheers.
Awesome stuff. See you later, Rich.
Bye-bye.
Same as that, guys. I'm gonna pop out as well. I'm gonna hold this trade open. I'm now sitting in some pretty deep-ish drawdown. We're like 30 to 40% away from my stop loss now. So it looks okay. It could slop about.
Where'd you enter? Just before you go, where'd you actually enter? Yeah.
I entered in 4481.75.
4481.75. Okay, so we're over here somewhere.
Yeah, tight on the low. It is 4474.62.
Oh, that's very tight.
Yeah.
Oh, this is fine. And then if you're targeting like 4,500, or I'd always go like 4499, just because.
Yeah,
that's how stuff often goes. Yeah, but yeah, there's nothing wrong with that trade. I think that's completely fine.
I think it's a nice trade. We were just in like $300-400 profit, but gold just acting like gold sometimes, so is what it is. But anyway, guys, I'm gonna hold it. Hopefully we can hit TP, or at least hopefully in 2 hours time I can come back and show you that we're in some nice floating profit. If not, it may be a stop loss. If so, that's fine. We'll try and see if we can pick anything up for the rest of the day. But anyway, guys, please make sure you're going to smash that like button. Please make sure you subscribe to the channel if you are new here. If you are new here, welcome. Also click that bell notification so you get a notification every day that we're on. We are coming back up to break even. I'm going to leave you in the very capable hands of these two awesome gentlemen. And for now, peace.
Take care, man.
They will.
See you soon again. And that leaves the two of us again. How are you doing, man? I heard you slept well.
I did. I had a good rest, which was nice. I've been very busy, which also after yesterday, like I knocked out a bunch of stuff, and then I was like, okay, cool. Smashed out a huge amount of things. I haven't like sort of stopped and just chilled out for a bit, so I just played some Dota, and then went to bed. And I said, tomorrow, I'm just gonna have a sleep. I'm not gonna try to get up early to do more work. I'm just gonna take it as is, and quite good. So I'm now catching up on a heap of backlog. So ultimately, want to kind of keep that as a perpetual machine and actually get a full 8 hours.
Yeah, it's important.
So yeah. Well, it comes down to like a health stuff and all that kind of thing. I've definitely pushed the measure, which maybe you can do it, but long term, I mean, no one's you're not superhuman. So
no, and
it does have
so healthy. I remember
things.
When my daughter was born, she was like the first 3 to 6 months very fussy because she had like problems with her digestion. So like normal things for babies, of course, but you get these stretches like days on days on days where you sleep like 2 or 3 hours somewhere in between, and it really, really you're paying the price for that sooner or later. So nowadays I try to make also sure that I get my 8 hours of sleep. It's more like 6 to 7 hours actually for me, because the older you get, the less sleep you need eventually. And but it's okay, sometimes I like to get up at 5 a.m. or something, get some work done, drink a coffee, and slowly prepare breakfast for the rest of the family. Talking about NVIDIA with the numbers, I think I agree very much with you. I mean, if we look here at the last quarters, the reportings, in all of the last quarters, they've always exceeded their estimations. So I don't see why they cannot do that again. For this quarter, estimation is $1.75 per share. Last time they earned $1.62, and yeah, I'm looking forward to this, and the market also, as it seems, because pre-market they're already up by $3 and a little bit. So it's going to be an exciting one. I think actually because of NVIDIA, we might see more cautious moves, I would say, today. I think not many people want to speculate on this. Also, we have the FOMC minutes coming out.
Yeah, sorry, FOMC minutes as well. But just back to NVIDIA, I think that's exactly where the opportunity comes, right? Because I feel like we're getting now to a weird time where more and more people are trying to call almost media and stuff is so hyperbolic, like it's almost like end of days of NVIDIA, like, okay, everyone else is taking market share, they're done. That's not the case, right? I can see that other players might, from their current capital balance, like say you take an AMD or something, like, yeah, would I park the majority stake in NVIDIA where they're currently priced, or AMD? Yeah, I'd probably go heavier to AMD, obviously. But I think people still, we get into the cycle where people really want to call the end of NVIDIA and then printing good numbers, right? And it just doesn't happen. Like right now, there's still no other pplayers realistically.
It is. They don't have really competition. I mean, China is
even
coming and doing something too, but I mean, we're talking about like technology that takes like a lot of time, a lot of money, and specific machinery to develop, and they are ahead of everybody else. Not going to be that fast in catching up.
Yeah, this sort of delusion, even with them, where I've seen a bunch of the comments around them talking about China and going into China, and obviously the Trump-Xi talks, and people going like, oh, well, yeah, maybe if they get their way into China, it won't really be that great because they haven't been there, so other China players are already having to make up the difference, and then even if they do get in there, China will put controls on how much you can buy because they want players to buy it from China-owned companies themselves, etc. Who cares? Like, do you know how much demand there is for everything of it? It's going to be juiced out to the absolute tops regardless. It doesn't matter. Like the the direction is still up. So I think, yeah, that's where people get, I don't know, they're like too, it's kind of like when people are too much in the kind of area and the industry and that kind of thing, where they end up with blinders and they lose all perspective. So I think I kind of feel like that's where the market is now. And I think there's a slightly higher chance of them overperforming rather than underperforming. I've seen massive calls for underperforming, which is not underperforming, but hence it's just like good, but not great. I think there's a slightly higher tick for them to actually come out marginally more into that great factor rather than just good. And then plus we have that supplementary commentary around forward growth, everything else they're doing. They're decreasing the amount of like DRAM, that kind of stuff that's going to be needed in the chips, which has obviously become very expensive. There's all the upside to be had from what I can see. And all the tangential numbers point to that as well. So that's where I'd lean, at least.
I wonder how many people on Wall Street bets are betting their life savings and today on short-term options on Nvidia. I gotta have a look later on Reddit on Wall Street bets.
I was thinking we should maybe do it could be fun as far as for our sessions as well with some of the macro stuff in general. Bring up like Polymarket or Kalshi, which has the betting, and we can compare like where people are versus.
That's a great idea.
Yeah, there's so much arbitrage right now. Tangential thing for you guys. You guys can probably. I'll just give this out there, but everyone has probably heard of, or maybe not so much these days because they've been outlawed in general. But if you've been trading a while, probably pre-2020 in particular, you would have heard of like binary options. Kalshi and Polymarket offer essentially binary options on like close of day or close of the hour type stuff for things like Bitcoin. I will say, however, there is a huge latency gap, arbitrage gap between the betting and where the data feeds come in. And you can actually feed the data feeds in just before bet on it and then rerun that again and again. And I've been trying to build out a model right now just to full arb that stuff on things like Bitcoin. So I don't know if I get along, I'll try and share it with you, Dirk, because I think you'd be interested.
Yeah, it would be super fun, of course. Yeah. But look at this here, like on Poly markets, they are very sure 97% chance that Nvidia is going to beat their quarterly earnings. Interesting.
That's quite interesting.
That is.
I'd say the street is not that high.
Yeah.
Right.
Exactly. Yeah. But that's almost like something where I would, take the opposite.
But would you take the opposite because of Polymarket or because of the street? So which one do you lean on more?
If I would want to trade this now, this is like typical where I just, would bet like on no in this case. I don't really know how it works on this reason. I've never been using Polymarkets because what is it? You pay 3.7 cents and get $1 or what then?
Yeah, so think of it like a peer-to-peer binary option. Right, it's just like betting, but peer-to-peer. So instead of just you guys wagering like an equal amount, hence it's weighted in that split amount, but it is peer-to-peer, and then it's a binary outcome, of course. So the same thing where you basically exactly. So you can just put in the numbers and see. Hence, it's a multiple of the differential, right? So if it's 50-50, you'd be 2-1. And each subsequent percentage would be higher or lower. Yeah.
I mean, just from a like the statistical mindset, this is more when I see something like this, I would more lean to not betting $1,000, of course, but leaning towards a trade like this or a bet like this because the payoff is much larger, and by the end of the day. Nobody can really tell. Are they going to beat? Well, actually, like 97% chance. That looks for me a little bit like there are already insiders trading, like people that
Yes.
know already what the number is going to be.
Hence why people keep using Polymarket and Kalshi and that kind of stuff. And hence why I find it very interesting when we have the differential between these players versus the street, right? And like economists or people at certain banks or hedge funds or whatever, or pension funds or whatever, mutual funds, blah blah blah, commenting on certain stocks, and you get this clustering of things, and you do see the funds actually moving that way, because the funds move that way because that's the common consensus colloquially to everyone. So it protects them in their job by moving the fund that direction, even if they might personally have the idea that this is kind of wrong, but they don't have enough conviction to go against it if they are wrong, that they'd rather go with the consensus and be wrong. Hence they can say, well, that's what everyone thought, so you can't fire me. Right?
Yeah, right.
But Kalshi and Polymarket tend to then swing the other way. It's very direct betting your own money on the line, and there is a lot of insider trading. And this is where people have tried to, even Kalshi and Polymarket themselves, where you do have the problems with the insider trading stuff, as far as that actually making it a more fair assessment of an outcome of a certain, whatever the thing you're looking at is, right? Because insiders do come in, and hence it actually technically prices it more appropriately to what the realistic thing is, because they do have insider information. And that's where there's become this big arbitrage thing between public markets with that opaque obscurity, and then these places that do have a flood of insider trading, and hence when there's a differential, you're like, okay, what's going on here? Why? That kind of thing.
Would be very interesting to pass data like this and see, if you can use that for an actual trading system, like when certain thresholds, for example, are that because naturally, if there wouldn't be insiders, naturally, probably this number here would sit somewhere at, 60% or 55% conviction that they are going to beat the numbers, just because the last 4 quarters, they always bet the expectations. But 97% or 97.6% now, that is like crazy high, really. Yeah.
And so just like with markets, so the thing with traditional markets, obviously the liquidity is so massive that even if there are insiders, it's not going to sway the actual price, right?
Yeah.
But because Kalshi and Polymarket are not that big, and it's peer-to-peer, the total liquidity trading volume for these predictions is quite small.
Yeah.
And that is the only portion that restricts you from arbitraging things to the wazoo, is basically liquidity. But you can see how it does sway it very heavily. So very interesting. I have also spoken to recently a bunch of people that do work at firms, and they're trading for the firm or trading for them personally if they have certain exemptions where they can still do that. And then, right or wrong, they're getting certain information and then hedging out their own positions and arbing it through Polymarket and Kalshi. So I have firsthand things of people doing this, which right now it's sort of unregulated. I wouldn't go out and do that. This is not advice, but people are doing it across the board, and hence there's been more scrutiny on this, and I'm sure they will bring in.
Yeah.
They've already started to bring in controls around this.
From a regulatory standpoint, it's like actually you cannot call this betting. They call this prediction markets. They need to use the specific term prediction markets. Otherwise, you are in the territory of financial instruments, which of course are heavily regulated, especially in the USA. But I know Polymarket at one point they were fined quite a couple of millions of dollars also in the USA, and it's like a thin ice they are walking on from a regulatory standpoint.
Yeah, and a lot of banks, mainly in the US, and funds, mutual funds, prop firms, whatever, traditional prop, that kind of thing, have taken steps to block anyone that works from using them all together. So they're front running that because they know it's coming already. Gold dropping. Check Will's dream. Okay, we can do that. Give us 1 sec, Dirk.
Really?
I think Will did get stopped out.
Oh, yeah. Probably
I
got
need
stopped
to
out, yeah.
pump up.
One little.
So before Will left, the only final thing I was going to say, I was like, I like this trade, but if this was euro dollar, yes. If it's gold, I'd prefer to do that because you do get that overshooting in gold, which I think he may well have gotten. So we'll see. We'll see when Will comes back. But
did you get into the Aussie this morning?
I'm in the Aussie right now through here, not this morning,
Okay.
but about midday my time.
We are pretty much in the same trade.
I guess kind of this morning. But yeah, I'm looking at just under 71.30. So 71.20.
Mine is like this. Because
I don't know if we get that high.
I don't know.
I can see the exact levels you're looking at, but I think we've got.
That might be if we get up to, let's say, like 30, 35, I might put my stop loss actually to break even. But let's see. I simply did this trade really based on like what I texted you, I think, earlier yesterday on WhatsApp. Simply because we didn't close beneath the 8 weeks moving average, so that seems to be good supported there. Hence, I took this trade because from a risk perspective, in my opinion, makes a lot of sense too. You're still in levels that are reachable within a shorter period of time, and I have a risk reward ratio of 1.9, or I think in reality it's around 2.0 actually. So yeah, the Aussie is the currency that keeps on giving, man. My new favorite currency suddenly.
It is very good.
Yeah, I mean dollar yen, like I said on Monday already. I don't like what I see at the moment. I don't know. I have a feeling like sooner or later we're going to see something like this, like tick, bounce once and then off we go to, I don't know, 161 or something. Advanced EA.
That was from a while ago, but I just saw it now. Yeah, sorry, keep going. Yeah, I agree. I agree basically with dollar yen. So that's the same deal. I don't really want to touch it until either we hit some of those higher levels and then start to get some kind of rounding. Like we seem to have a brief few moments of intervention once again last night, and we just came right back up, and now we've gone to new highs, right? I think this is going to be a tough stretch overall for Bank of Japan to actually get the currency lower. I think, though, we're in this segment right now of a bit more dollar strength.
Yeah.
But it's very temporary. I do believe that Kevin Walsh will come out and be a bit more dovish than the market is currently expecting. We're pricing in sort of hikes, or at least, if not, so hikes in the future, and then in the near term, much more of like a hawkish hold type situation. I think he will actually come out and give a bit more commentary saying that we're pretty good and we're just waiting for the moment that we'll start to round rates to the downside. Now, part of that actually comes through where I've seen that bonds have been ripping higher.
Yeah, absolutely.
Which has already done a huge portion of the work for the Fed if they were potentially going to raise rates. So if you then get the combination of the Strait of Hormuz being opened, that geopolitical risk coming to a close, we've seen bond yields rip across the board. This takes a lot of that pressure off central banks in general. And then, so as far as the other central banks, because this is always relative, the Bank of England, ECB, that kind of thing, they probably now can just sit. They're not going to reduce, though. There's no chance they're going to reduce.
Of course not.
But the US with the Fed, they're probably the only players that are in a position to reduce.
Yeah, and I mean, there's going to be a lot of pressure on him, like from Trump now, because this is what Trump's needs, first of all, probably for his own businesses. He also needs like this as a little bit of a win as a president. And America as a whole needs that too. If you look at the amount of debt that is maturing this year, we're potentially talking about billions and billions of interest rate payments, more interest rate payments than they have for the bonds that are maturing right now, because those are still stemming from an interest rate environment, probably around 0.5%, 1%, and with a debt basically getting out of hand for in the last 20 years already for the USA. It's like, man, the amount of interest you pay, that's like the GDP of many other countries.
Yes, it's ridiculous. So yeah, I think I have a lean that will happen, and especially have a lean once the market and the general consensus has pushed to the opposite side.
Yeah.
Right. So almost the same way you were talking about 97% for NVIDIA to overperform. The risk reward, the asymmetric return is to go the opposite way. So I think right now is what we're seeing with that. And that, similar concept to back mid last year when I was talking about S&P and the NASDAQ and that kind of thing. And everyone's saying, inflation's going to go rampant, this kind of stuff, financial conditions will drop, blah, blah. All I could see from everything that's not going to happen. But the consensus is the common tongue saying we're going down. Everything's going to be bad, terrible. But when I look at the actual data, it was saying printing forward, we should be doing pretty well. ISMs pick up, liquidity picks up, all that kind of stuff. And so that's where you actually get the trade. You go from thesis, you're waiting for the trade entry point, that kind of thing. And we've seen that play through. So similar deal right now, as far as rates, I think that's more likely to come back off rather than actually push higher.
But I don't think it's going to be immediately in June, though, that we are.
No.
Maybe, what's the next one? I think September after this. We go on a summer break, no? If I'm not mistaken. Always there. Yeah. But I mean, what's kind of interesting, it's like with what we've seen in the NASDAQ, for example, in the past days, that we, of course, saw some selling pressure there. And the grand scheme of things, of course, it's like not a lot we saw there. But it's interesting how social media picks this up immediately. And suddenly I saw all of those posts. I told you, the crash is coming now. Crash is coming now. This looks exactly like the .com bubble and stuff like this. And I'm always like, why are people so keen, on everything crashing, everything going down? This sensationalize, I think is the word for that, no?
Yes.
Stuff. And I'm looking at this thing. I don't think we are coming that off. Did we overshoot since we made the low around 23,000 points in Vanessa? Yeah, for sure, But if you see like pullbacks, for example, I'm using here Fibonacci levels now to, for example, this zone or this zone, I don't think inside.
Sorry, I just saw this, Henry. I didn't say before.
And I think that those would be great opportunities, to get into US stocks again. And I simply do not understand. Like if we really go that low, people are going to flat out panic again. And start selling everything. It's the same over and over again. We are seeing this in gold. We are seeing this, especially, of course, in Bitcoin. We are seeing this in stocks. And I don't know. Is it just us, because we have done this so long that we see things like this when they happen as opportunities? Or is there something that I'm specifically missing,
But Dirk, surely you've... Okay, so the thing is, though, do you think that's a good thing or a bad thing?
For me personally, it's a good thing that people are like this, because I can, it gives me an edge that I need.
Yes, exactly. So the thing is that as much as it's cooked, it's wild, you look at this and you're like, dude, everyone's wilding out and this is ridiculous and it's wrong. As far as being a trader, this is the exact thing you want, because
Yeah.
you need enough people to believe in what you're doing. Whether you work for a fund, you manage your own money, then you need yourself to believe in you. You manage money for other people, whatever it is. You need enough people to believe in you that they back you, but you need enough people to be wrong to actually trade against. Otherwise, you don't make any money.
Of course, somebody needs to
se.
be wrong
So,
in order for you to earn money.
yes, there's a buyer and a seller. So technically, with all this stuff kicking on, means you can actually make a lot more money. Now,
And it's
these people have decided to come into the market, and if they haven't done the degree of work that you or I have, and they just want to take these immature type views that are not properly fleshed out, then fair game, right? That's what the market is. So it's a very weird system where you also want people to be clued up and skilled, and on top of it, it's almost like politics as well. Like these things, always economics, politics, taxes, they all kind of wrap into each other. Yeah. But the more people that are clued up, nothing is going to happen in terms of trading, in terms of economics. These right. And so you need just enough people to be uninformed for you to make money, but just enough to be informed enough for you to make money as well. So it's a very weird business. It's just something I always think about, that it's unlike sort of anything else.
There's this German YouTube channel called Finanzmarktwelt, and they feed off it. They are like always pessimistic. And about anything stock, they have been calling Nvidia like a scam for the past 10 years. Same with Bitcoin. And it's basically, they always tell you, well, everything is broken, everything is garbage, everything is a scam. What they never say is like, what is the alternative? So where should you invest that in? And it's interesting, like they have, I think, 100,000 subscribers on YouTube. And you always see the comments underneath, very German, like, oh yeah, you guys, you are so right. The crash is coming now, the crash is coming out, but it's never coming. It's and it always gets me a little bit angry, because I feel sorry for the audience. I feel sorry that you listen to something like that. You are kind of trained in a way that you only see the dangers everywhere around. Every corner there's a danger, or somebody who wants to skim you. That you never clear your mind and look at the opportunities. This is what we investors, what we traders need to do. Of course, the world can end tomorrow. Yeah, but then it doesn't matter where I'm invested in, because, we're going to hunt for rats just to survive, if we survive at all. But if the world is not ending, what is the likelihood? Is the economy probably going to grow over the next 10, 20, 30, 40, 50 years? Or are we not growing anymore at all? And then I might as well become a prepper or something and build myself a bunker.
Yes, and the exact of what you're talking about, I guess the English version, I'm sure you've probably heard of it, Zero Hedge.
Yeah, they used to be very good. I liked them a lot.
I was about to say, pre-COVID, used to be very good. Pre-COVID, they used to have more balance. Then they got banned, they got blocked. Their site got shut down. I think the company, whatever structure they had before, got completely shut as well. And then they had to reopen, and now it's just full doomer type stuff, complete doomer. Before it was more balanced, and it was looking at a bunch of critical stuff, and then they went to this doomer thing, and it's all paid now. And so I don't know what happened. They got shut down about a bunch of things. It was around COVID and posting things, and
pretty much around that time I stopped actually
misinformation,
following them.
Stuff. But in the past, I used to actually look at this. I was like, oh, that's actually critical thinking. Like, this is something to think about, but it was still a bit more neutral. But yeah, same deal. And then exactly the same, just like you were saying, where, you feel bad for people that aren't, I don't know, they don't have quite that depth to be able to perceive what is nonsense and what is fear mongering and what is critical thought, right? And then they just jump onto it and they get killed. And this also goes the same way when we talk about like trading gurus, where they sell the opposite, which is the euphoria. And you've got the doomers and the euphoria aspects, and people either go either way, right? Depending on your personal lean. Some people are slightly more optimistic and they say like, oh, I'm just going to make a bajillion. Other people are slightly more pessimistic. They go like, yeah, everything's done. It's dead. So I'm going to ride the wave down and then I'm going to make profit off it all declining. But it never ends up that way. We're always in the middle and slightly to the upside. Just like you're saying, stock market, etc. Yes, it's going to be but slightly up.
Yeah, but I mean, it's probably true for for everything in life. Of course, if you go about something and you always try to find like the easy way out. I want to use this super indicator, or I'm following this guru, and then I'm going to make money without using my own brain on autopilot. It's never going to end well. And with me actually developing a lot of indicators, like in my videos, this is the one thing I always try to highlight. I say, like, guys, my indicators are good. They are going to help you, but they are not the holy grail. You always risk management is on you, and especially this layer of confluence that we always keep talking about is important to you. You cannot just rely on one indicator, because I very often see people commenting under my video, what's the best setting that guarantees me to make X amount of money per month? And it's like, come on, have you not?
Just want to skip to the end.
Yeah, just skip to the end. You know what? So, of course, if you just watch the first 3 minutes, then you smash the indicator onto your chart and expect to become a millionaire next week, it's not how it's going. It's like using Excel. When you are profound in using Excel and good at it, it can be a very powerful tool. But if you don't know anything about it, and give up after 3 minutes, it's not going to help you with your business. But yeah. I think that's true for everything in life. I sometimes just feel like nowadays, like offerings also of company. A bad example of this is Duolingo, for example. Who sell you like.
No, you're actually completely right. This is where I was actually next going.
Okay, sorry.
Then you're completely right. No, keep going. Then keep going. No, finish what you're going to say.
Like an example, for example, Duolingo, who like try to sell you, hey, just 5 minutes or 10 minutes with our app every day, and you can learn a new language. But nobody actually ever learned a language to become fluent just by using Duolingo. You need to put in more effort, obviously. You need to speak with locals. You need to listen a lot. Like back then in the 80s and 90s, I learned a lot of English just by listening to MTV. It was not subbed, but and that frustrates me a lot, because it also means that people that are very capable normally are willing to give up sooner, because the reward is not there immediately.
Yeah, and so
like
where
this man yelling at the cloud. So.
Yeah, no, but it's not really. So this actually directly relates into all of you guys here in chat as traders. The way you'll actually succeed is the suckiest way. And that's why people don't do it, because it sucks. It's not fun. It's a grind, that kind of thing. All that old school yeah stuff, kind of like Dirk was saying, like your old man yelling at the clouds. It is very true. So we've seen that the same deal in business. We've seen it through another good example is like video games, right? Where in the past you play video games, in order to unlock the highest, most difficult stuff, you actually had to achieve something, and it was difficult, and there wasn't explainers or tutorials and all this kind of junk. Or even right now, you've got like skins, like that's the popular, like all these micro transactions, that kind of stuff. In the past, you'd buy the game, you got to unlock the top tier stuff, and you only unlock that by doing the highest skilled whatever things, and there'd always be levels all the way through that people could easily identify you as having done XYZ. Now you can just buy this or buy that, buy whatever, and then you've got it, and you just pay a couple bucks. You can absolutely suck at whatever the game is, but you look cool. And then now, because of that, to encourage the money machine, they also then pull people who have bought those skins against lower skilled players, even lower than whatever the internal rating structure they have for everyone is, from them who have bought it, to then go and rip shreds on even lower skilled players to make them feel good. And then hence people buy more of the skins, and it becomes this whole money machine rather than actual doing the work. And we've seen that same thing through trading and trading education, typically like social media, where it's selling this whole big spiel of stuff. And I mean, we've talked about this to death around ICT and all these things, but the main point for you guys, like if you can pull certain things from ICT, because like we've said before, it does pull from historic, traditional finance, trading, technical analysis type stuff, but it's just been repackaged. So it would be just encouraging people to actually go back to the old school stuff and figure out where that actually came from and fully understand it and then deploy it. And then from there in general, just, don't get wrapped up in the pizzazz of certain things, because it feels like it's been increasing and it feels like it was at max like some time ago, but it's also still just getting worse somehow. I don't know. So
when we talk about video games, what I like to see actually, I mean, there's this trend at the moment that video games are getting more difficult again. This whole Dark Souls and Elden Ring. I've never played that, but specifically making games like super, super difficult, so you can be proud of yourself. And I like that because maybe for some of the younger players out there, that translates later also into other aspects of their life, maybe, also into trading, that they are willing to start a career in trading because it's difficult, not because it's easy, because it's difficult. And because what you just said is, I completely 100% agree to, it's a hustle, and you really have to go multiple times and every now and then through the valley of tears, to arrive at the peak again, where you actually things start working out. By the end of the day, everything is always, support and resistance, supply and demand. Whether you package this as ICT or the standard deviation channel or draw the lines yourself, it's all the same. There's only so much information in price itself,
100%. So with that said, we've been rambling on for a bit. So guys, you guys in chat, anytime we do this and we keep talking, just hammer us with your comments, because as soon as we stop, we'll smash through them. So if there's something you want to look at, one of us will see it in the background whilst we're talking, and we'll bring stuff up in the background and map it out. That or else, just punch it through. So
this is a nice comment. I don't think institutional trading translates well into retail trading. It's just branding. Couldn't agree more. Like I said on Monday, institutional trading is not directional trading. Usually it's more arbitrage trading, be it statistical arbitrage or real price arbitrage because of latency lags or something, latency difference between exchanges.
A huge portion has become more mathematical. Right. You do still have the other players that are, I guess so you've got the mathematical sort of quant side, which is very heavily dominant on that. And they don't even care what's going on. They just, it's purely math pretty much. Then you've got the pension fund, retirement fund type sector, which is quite massive, and insurance funds in that mix, and commodity hedges, that kind of thing. And then you've pretty much, the other portion is like macro, right, which is a bit more directional. That's probably the only true directional player these days. So you would say that 60, if you put in even just thirds, you got 1/3 that is left as directional. And then you've now got the further question of size of capital base, which the others tend to now dwarf that smaller section overall. So then it becomes a different calculation. I think you can definitely still learn a bunch. If you can apply a bunch of the institutional trading to your retail, though, that is very helpful, because essentially they are the ones moving price, and you're kind of like that small fish hanging around a shark, and you're kind of trying to jump onto the coattails of the big boy. And the big boy does the work, and he eats like a seal, and there's a bit of blubber, and you're like a small fish, and you get your little snips around that,
Yeah, sometimes feels like you are picking up the coins in front of a steamroller, like flirting with death all the time. Very nice comment here also. Is there a way to anticipate, or a question actually, whether the market is likely to trend with high volatility or be slow and choppy? This is exactly the point. This is like the puzzle piece, that's probably unsolvable, but I spend a lot of time actually trying to design tools that are able to measure this. Just this morning, I was looking, and there's like from Lux Algo, who are very busy on TradingView developing indicators as well. Something that goes into the direction where they basically try to tell you, is that high volatility in the whole market context, or is it low volatility? High volatility usually is not going to be that much during a trend. You're usually going to see high volatility. Well, not really also. So it's quite difficult to answer a question like this. And I think if you find the solution for this, you are very fast able to become a very, very good trader, because this is like this puzzle piece where I personally also have to ask myself what I'm seeing on the market right now. Is this going to be the regime like 3 hours or 5 hours or 2 days or 5 days down the road still? Or are we seeing a change in regime? And thus I have to adapt as a trader to it, because this is like, for example, this is also the reason why a tool like, to have it on here right now, like the RSI, for example. So this is one of my own versions of the RSI that I designed, which basically does exactly that, that it looks at the last 300 bars and tells you basically, well, the RSI settings like this would have been the best settings for the RSI. And then it gives you like an indication of what are we actually doing here in terms of regime at the moment. So at the moment, for the 1 hourly gold, it says we are in a mean reverting chop for the past 702 bars. That means fast reversals are extreme, and RSI triggers are the most reliable here. But this is still going to be lagging, of course, because it looks at the last 300 bars. It's going to be quite slow in detecting a change in regime also, because the change in regime might be for the last 20 bars, but still the 280 bars before that have more impact on calculating what the regime currently is as the last 20 bars has. So you're always going to have a bit of a lag. And it's very, very, from a mathematical standpoint, also very interesting. And I spend a lot of time thinking exactly about things like this. When does a regime change? How can I measure this? And how can I reduce the lag in measuring the regime change? Because I want to detect it, of course, very, very fast, so I can adjust my strategies. Yeah, if we're in a choppy regime, I might want to play more mean reversion strategies. So things like an RSI or slow stochastic and so on and so forth are going to work well. If we are in a regime that is trending, for example, at the moment, I want to use trend following strategies, be it simple moving averages or be it something like this one here, for example, which is a super trend indicator. But that's really, really difficult. And for me, it took quite a while to understand this, honestly speaking. Welcome back. To get, a kind of feeling for, is the regime going to change or is it not going to change? It's also, by the way, the reason why LJ and I always talk about these fundamentals, or about the fact that NVIDIA is NVIDIA going to beat the numbers tonight, or is it not going to beat the numbers? Because it tells us something about regime and what we can expect in terms of volatility and the strategies. Are we mean reverting more? Okay, then I might be using something like standard deviation channel in combination with an RSI or stochastic or other momentum-based oscillators. Are we more in a trending market? Well, then I cannot use oscillators, because RSI is going to stay elevated above 70 in an uptrend very, very long. You see that, for example, in Bitcoin often. When Bitcoin really starts trending, RSI sits above 70, 80, 90 for months. And if you try to fade that, you're going to get destroyed, absolutely hammered.
Would you say using options is a reasonable way to try and interpret regime change.
Yes.
Like implied volatility, that kind of stuff. Because that's typically where I sort of go to and lean to. So
that's why we look at the VIX also, for example.
Yes, so exactly. The VIX is the same deal, but for the S&P. Hence why I often bring up these guys for you, at the money volatilities, right? So you guys can copy this. I've said this before. This site is not meant to actually be open to public. I think it's actually for like high tier Saxo Bank clients, whatever. But I got the link a while ago and it still works, and you can just punch it in and it works. So until it doesn't, because I think they had that before it got leaked and they changed it. But yes, so one of the ways is to look at this, and it will highlight if volatility is increasing. Obviously, it'll be green. Over other periods, if it's decreasing, it's shaded in like this kind of yellowy orange color. And depending on the degree it's actually declined, it'll be darker or lighter. Right? Pretty straightforward. So that's always a good way to see if we're in a current range and that is coming down, and you're seeing them either flat, so like white, like these guys over here, or you're seeing it start to decrease. That means you're probably going into some kind of consolidation, right? Now, if it's starting to increase green and it's expanding a large bunch, that means you can expect on the horizon increased volatility, right? So hence you've got the 1 week, 1 month, 3 months, 6, 9, 1 year. Primarily, this forward section is what you're going to focus on, obviously, especially when you're day trading. And then that will tell you where the perceived risks, are they increasing or they're consolidating, right? And then obviously, in order to go into regime change, normally you need kind of some volatility catalyst where you actually shift, I guess, the current trading range, right? So that's what I'd look at. And then 25 delta risk reversals, which is where people are hedging out upside or downside for a certain currency, in this case, that we're looking at. And we have gold and silver through here as well. So that's what I tend to look at. Now, same thing with the VIX. I don't know if you want to explain the VIX, Dirk, because also sometimes people don't quite understand the VIX, that you can actually see more market movement even though the VIX is going down.
Yeah,
well.
by the nature of it already, no? I mean, volatility is elevated. Let me look. Where is my VIX? Here.
So when volatility is elevated, it's simply more buying and selling. But then you can sometimes see these things drop when you've got an established direction.
Yeah, exactly that. Yeah.
Right.
So when you usually, and this is true across the board, so you might see the same, for example, for currencies as well. If you look like at the volatility profile, for example, for the Dixie, it's pretty much the same. When specifically for stocks, is volatility is high usually when markets go down, because the way markets move to the downside is most of the time quick and hard. You know, a crash comes suddenly. A lot of people push out of the market, so prices fall all of a sudden by 5%, 10%. You rarely see like a crash really playing out over months, you know, if we are not at least in an economic environment that is a depression or something. So looking at the early 1930s, for example, the Great Depression in America, that was the case. And so whenever we see the VIX specifically jumping up, that means that there's probably price pressure on stocks. And so it measures a regime change, actually, like going back to that vocabulary, but it's not forward projecting. Yeah, you see at the moment, okay, we are in a crash right now. There is pressure on prices, but that doesn't tell you what is going to happen after this, because obviously the VIX can also stay elevated for a while, like we saw here. But in general, you know, if we zoom out all the way now here and try to get as much data as possible, maybe it becomes noisy very fast.
It's a good measure of chaos, like unpredictability, right? Where people are very uncertain with what's going on, versus if you see like a market declining very heavily, say the stock market, but everyone knows this, and this is very obvious. The VIX will stay quite low, even though it's getting smashed, right? So,
but I mean, by the end of the what you can see when we are at very elevated levels, for me, that is whenever we are above 30, for example, sooner or later, volatility is coming down again, which means that we are going back into the uptrending mode, or at least or a slight uptrending mode. That is
typically,
typically, that it doesn't tell
because
you.
Stocks tend to go up,
yeah,
on average.
So I would look here. This specifically in terms of a VIX, I would always use it as an instrument for confluence. So when I see, for example, well, the VIX is above 30. And we are at multi-year support lines, for example, for stocks. That would like trigger me in thinking, well, maybe it's the time to buy the stock now. Sooner or later the turnaround is going to come. And you can do the same for currencies, but it's an instrument. You cannot have that by its own, not as anything. Same with any indicator out there. It's a puzzle piece in the whole piece for yourself. And if you see something like this, if you see, for example, the VIX is elevated. So we jumped up to 83 in the beginning of COVID, for example. It's also worth noting to pay attention, for example, to social media or media in general, because this is normally the time where you're going to see all those crash articles. The world is going to end. The S&P 500 is going down by 95%. Gold is jumping to 10,000, and all these beautiful things. This for me is this is when my internal alarm bells start ringing, and I'm going to ask myself, well, everybody is so negative at the moment. Here is my trade to take now. I should be the one, putting money on the table, buying stocks right now. Doesn't work, in my opinion, so well if you're just looking at intraday moves. It does in terms of what you were just talking about, at the ATM volatilities for currencies. You can weave this in, for example, into a framework that tells you how wide should my stop be at the moment. Because if you see the implied volatility, for example, for 7-day options jumping up by a quite margin, you probably need to be prepared that, we are going to see more swings. The candles are going to have larger wicks. And there's a higher likelihood that if you work with tight stops, for example, that you get stopped out sooner. So this is typically how I like to use it. But you need a lot of experience, in my opinion, to use this, because there's no model that can tell you if the ATM volatilities are there. My stop average pips, the stop measured in pips, for example, should be like this. Although it would be interesting to do research on this. Does that translate into, how do the ATM volatilities translate into actionable risk management things?
Yeah, exactly. I think it's a good indicator. So for a bunch of guys in chat, yes, this is some more level 2, level 3, level 4, whatever, more advanced stuff for you guys trading per se. But if you can start to incorporate some of this stuff, you'll be able to tighten a lot of your entries, your stops, all that kind of stuff, and increase your risk reward and your hit percentage massively, right? And just a couple percentage points of difference, like if you can curve out another 5, 6, 7% on both sides, that compounded is enormous. So that's why it's very important. But yeah, just like you were saying, at the money volatilities, I prefer, because it is a bit more real time, just like you were saying with intraday type stuff. You can use like further out implied and then realized volatilities, and then you get into this whole weird calculation where you got to do like put an actual algo together and base everything. But a perfect example, like if you zoom out, if you go back to the COVID era where we saw the VIX run that high, that's because there was massive extreme uncertainty just across the board on both sides. And then now go back to where we are currently.
So we topped out somewhere in the 80s then?
So near term, right?
And
now look at
now
this
we're
past
sitting at
bar.
18.
Yeah, and if you look at the runs that we've had in the S&P and the NASDAQ from the lows, percentage-wise, they've been absolutely bonkers. Far, far, far larger than the COVID recovery.
Yeah.
Right? but hence that's where you have to understand that translation. And just like Dirk was saying, that when you see these massive spikes, it tends to be a recovery standpoint, particularly in the terms of stocks, being that stocks have a tendency to go up over time. So that's where you guys can catch some of these massive flies.
It's here a question from Tony. Isn't VIX especially forward-looking due to its expected 30-day options volatility measurement? Of course, it's designed to be a bit forward-looking, but not in a sense that's going to tell you, this is where price is going, because volatility is always measured to the upside and the downside. But it's basically telling you the market as a whole. Is it expecting that in the next 30 days, there are going to be crazy swings? Or is the regime kind of normal, trending most of the times with a low VIX, at least on stocks? So back in March, when we saw that crashing and the VIX went up all the way to 35, what it tells you is market participants are, within the next 30 days, expecting a lot of volatility to the upside or to the downside, specifically for stocks, especially to the downside. So this is the only thing it does. And then all I do is looking like, well, historically, when we've been over 30, sooner or later, we came back from this, and that usually was a good time to buy stocks. It's as simple as this. And like I said, when I kind of try to translate this into, is my confluence layer, where are we at good levels of support? For example, if we are for a specific stock, for example, an index, somewhere still around somewhere in the nowhere zone, I still already might place my limit trades, for example. With the risk, of course, of missing out on this one, but long term, this has always paid off. Would I use this for intraday trading? No, absolutely not. Except we are really, for example, with ATM volatility for Forex at very, very high levels, then I might translate that also into, where are areas where I can buy euro dollar, for example, or sell euro dollar at the moment. It's very complex, guys. And like you said, it's a bit like level 2, 3, or 4 already.
Yeah.
It's this stuff, this is how you find your edge also when you dive more into things that like trading gurus out there are probably not talking about. At least I've never heard somebody talking about implied volatility on Forex options and how that translates to, day trading or scalping.
Yeah, so I wouldn't use it day trading as far as a pure directional move, but I'd use it as far as observing that, and then say if you've had a certain momentum of trend, and you're looking for where that trend might be stalling out. Like you can use things like the RSI stochastic on like a higher time frame, like 4 hour, 1 hour, daily, something like that. But they do have some kind of lags. Those option volatilities will start to price that earlier, right? It's kind of like looking at things like the COT data. Like we've had a bunch of guys in the past ask about the COT data, how to use that. Is it good? It's interesting if you're looking for like a 1 month, 3 month kind of time frame. Outside that, it's just too slow. It's too slow. So this will be a bit faster, where you can combine that with the current momentum. And if you're seeing the market structure in your day-to-day, like technicals as well, starting to begin to base, are you actually seeing that from forward projections in that 30-day window? Now, just like Tony was saying as well, isn't this forward-looking due to the 30-day options volatility measurement? So yes, people are looking 30 days out. However, the thing is they're also pricing that real-time day-to-day. So even though the measure is meant to be 30 days out, if they come back tomorrow, their measure could be completely different. It would be the same as me asking, what do you think your expected profit is going to be 30 days from now? And tell me that you can get a within measure number of how much profit you're going to make from your whatever accounts you have in 30 days, right? You probably have to have a large bar. You could go off the past averages and it will give you this mid bar, but maybe 15 days from now, you get a blockbuster day that pushes things way out, right? So hence each day, they're constantly repricing that as that within that 30-day sort of rollover. So hence why looking at the shift between each day is very poignant, and you can go, okay, has something actually changed, and you move with that or against it, or vice versa, right? That's kind of how it works. So
it's kind of like when you work in a finance department. This is exactly what you do. No, you make forward projections for management. So management gets an idea. You know what we're going to earn probably this quarter, and you probably very heavily rely on building a median on average of the last quarters and forward project this. Exactly what you're doing. But you can have those outliers like LJ was just mentioned. Maybe your product gets like hyped somewhere suddenly on social media, so you have more people buying your product, hence your bottom line is also probably going to increase. Can also be to the downside. Suddenly nobody wants your product anymore, and
or a competitor. It could be like what are the GLP-1s where they're injectables? Someone comes out with a proper pill version that has been approved, and everyone's way behind the board, and now everyone wants to just take the pill rather than injecting themselves, because most people don't like that. And then hence we've seen the GLP-1 leaders in the injectables come right off. But the pill providers zoom right up.
And especially, by the way, with the commitment of traders report, I think it's very interesting, but not in a way that it tells me where price is moving, but you can get an idea about, where's kind of the max pain for institutionals out there. Are they in general more long, or are they more short, for example? It tells you something about potential points of interest within the market, or where price might move. Not really might move, but where like zones of supply and demand is. Because if on average the institutional max pain is somewhere at, I don't know, in euro dollar, for example, at 115 until next week, it tells you something of that maybe 115 could be this area where things turn around again. But again, you need this as an additional layer of confluence. Just trading just based on that is not possible. And believe me, I tried it. I built machine learning models that took all of this data and basically tried to find out, is this report going to tell us something about where currencies are going to move? And it's not. It's not.
No, you need a cluster of relevant data points, right? Because if you've got 2 points, that creates a line, right? As people say. If you got 3, it now creates a trend, right? That kind of thing. So even just using, now this is going to be talking about 2, which sounds counterintuitive to what I just said, but if you use the COT report plus the at the money volatilities, the implied volatilities, that kind of stuff at that same date, and since they report at different standpoints, obviously COT data is every Friday, over time then you can go where this was at a static point, because it's reported infrequently. You can measure the change over that week to the next one. Are they declining or increasing? And now you've got something to actually measure from this point to that point and see if this is actually inclining or declining. Because if you just went off that static point, as we know in currencies in particular, 1 day or 2 days can change the entire narrative.
Yeah.
Right? It's not like the stock market or whatnot, where a month or 3 months and then things really start to change. Like there's a much longer lead time where FX, every 4 hours is kind of like a day in the stock market, as I like to think about it, right? Stuff can change on a dime so much quicker, whereas other markets tend to have more of a longer lasting trend because they're much slower. They're like a big moving Titanic type ship, and FX is kind of like a speedboat zipping around, so it can go the other way.
But in general, markets nowadays are much more fast moving than they were even 20 years ago. I still remember, especially in Forex,
Across
when
the
I
board.
started, it's like the intraday volatility was like nothing. Nothing really happened there. If you would see like a 50
or when it
move
did,
of euro dollar, then immediately.
when it did, it would be massive. Yeah, it'd be massive. Yeah.
And
so.
But like the Titanic is not a good metaphor, maybe, but the
just
slow
a big ship is the analogy.
Would maybe be the bond markets nowadays. But they are actually also moving fast now.
No, they're moving faster than stocks the past probably 5 years since COVID. yeah, they've gone bonkers nowadays relative, right? It's almost like stocks are the slow moving ship. Like stocks would be a cruise ship, bonds would be a yacht, and then FX would be a speedboat.
Exactly. Yeah.
And then crypto is just I don't know, a jet ski or something. Crypto is just crypto. They're not even on the ocean. They're like they've climbed up a tree and they're trying to get coconuts out, and then they see a coconut drop down and they run around. I don't know. They're doing some crazy stuff. So.
Franz Hermann. Max is asking, how long it's been since you traded YM, your money, or what is that supposed to be? And saw how fast it can move intraday. Well, I've been on the market for 26 years or 27 years, actually. 27 years now already. And I like completely just, if you mean that, YM, your money, completely just trading my money I've done now since 2019. This is where I finally made the decision, I don't want to trade for others anymore. I want to be the one that participates 100% from my trading.
He's talking about the futures ticker for the Dow.
Oh, okay. For the Dow, that is the futures ticker. I'm not trading the Dow.
Is that actually, is YM the futures ticker for the Dow? I didn't think it was.
Let's go. YM.
Are you trolling us?
No, it is. It is
Mr.
EMD
Futz?
Dow Jones Industrial Average Index Futures. But
Is it actually YM? I didn't think it was.
I'm also surprised, but I think it answers your question. I'm not trading the Dow. I'm trading only the S&P 500 and the Nasdaq for the simple reason that I don't think the Dow Jones is a good measurement of growth or decline of stocks, because the way the Dow is calculated is that the stock with the highest numeric value, which in this case, we talked about this before, I don't know, was it like Goldman Sachs or JP Morgan or something?
Yeah, Goldman.
Is also the stock that impacts the whole number of the Dow the highest. And JP Morgan might not be the largest company, but still its impact on the Dow Jones is the highest just because the stock price is so high. This is something you don't have in the calculation methods of the S&P 500 and of the Nasdaq. Hence, I do not like to trade the Dow.
Yeah, it's people use it these days as like a measure of like economic health. So I'm pretty sure it's Goldman Sachs number 1.
Let's have a quick look.
Caterpillar number 2.
Okay.
I think off memory. So hence that's industrial, like earth movers, that kind of thing. So that goes into production, that kind of stuff. I can't remember what's third. I think third is Microsoft. Someone can correct me on this. This is off memory. I could be completely off these days. I haven't checked the things, but I'm pretty sure it's Goldman Sachs, Caterpillar, Microsoft.
I'm looking it up right now.
I can't remember who's 4, 5, 6 at all, but it's normally a better measure of health of the economy as an indicator. So you can use it in that sense of, for instance, when in the past we've seen like a US 30 like hitting all-time highs, and then S&P and the Nasdaq is still playing catch up. You can impute, I don't know how good that correlation is, but I see people talking about it all the time, that if US 30 is still pumping on and in trend, and even if S&P and the Nasdaq are playing laggards, that means they need to play catch up to the S&P. Yeah. To the US 30. So typically the US 30 should roll off before the S&P and the Nasdaq. And so the US 30 becomes, the Dow these days becomes like a canary in the coal mine for the broader market.
You're good, LJ. So it's really Goldman Sachs, Caterpillar is the second, Microsoft third, fourth, Home Depot, and fifth, Nvidia. And all price weighted, whereas Nasdaq and Standard & Poor's, S&P 500, are market cap weighted. So
Wait, so I got how many did I get? The top 3?
You got the top 3, yeah.
That's pretty good.
Caterpillar, Microsoft.
I mean, it's 3 out of 30, 10%.
Not bad.
But at least I got the top 3, and they're in order, right?
They're in order, yeah, exactly like this.
Okay, all right, that's not too bad. All right, so yeah,
Not too shabby, not too shabby.
yeah, same deal. I never trade Dow. Only because you guys do. I look at it, but if you want, I can go more in depth in the future and actually pay attention. But normally, like I was saying, it's more. Yeah, exactly. Another asset to watch, and it's more one of those things around when we do go into the next cycle of potential down cycle. I'm sure I'll be very interested in it. But just now, since we're in that up cycle, it's less relevant.
Yeah,
overall.
Exactly. Yeah.
So yeah. I was going to bring up the Aussie, Dirk. So once again, for you guys in chat, hammer us with any questions. We're just yapping on. So literally just hammer us with everything. If you're sick of us talking, you can disrupt it and ask a question or whatever. Markets are a bit slow right now. We're moving upward. I think Dirk and I are both in Aussie dollar trades, which are now starting to come up. Mine's a bit closer to TP.
I'll be back in 5 minutes. I need to get some water.
All right, sure. I'll swap over to mine. All right, here we go, guys. So this is my trade now. I started with the TP down here just by the lows, just a touch under. So it was about a 2.2 to 1. I've now pulled that up to these lows. We've pushed higher. I'm still going to keep it at that low for now. And yeah, we're on the way. We're on the way there to that 29. So I think Dirk's got a similar trade. He's looking for a further push up towards just under 50, I believe it was. So kind of at the neckline around that high cluster of trading up here. See if we get that. I'm happy to take this here because I think we'll kind of pause around here. So I've got the TP at 29 overall. So this is also I don't have the same things on here. Never mind. I got to see if I can translate some of my MetaTrader indicators to trading view for you guys because they're always a bit different. France saying a Dow later, DAX this morning. Fair. I like down. I feel like old many when I traded and get humbled real quick. Max, I know you're Dutch, but can you speak English, please? Thanks, mate. Come on, Mr. Void. Speak English, right? What does that even mean? Henry saying dollar yen ranging at around 159. So yeah, I mean dollar yen. We talked about this. We touched on it. I'll say I don't know if there's too much further to go into from both myself and Dirk on both sides. So either somehow we get some kind of defense of this 159.20 or so level from the kind of intervention aspect that we gradually get this like zoop and then up and then zoop and then up and then zoop and then eventually we wander off because there's just this massive defense of this level, which will indeed be coming from the finance ministry. Or we get a massive punch through here and then Ministry of Finance goes like, no, we're just going to forget this, wait for it to come up here, and then we see the big downdraft. So I know we've talked about dollar yen a bunch, myself and Dirk. Right now, I think it's kind of something to avoid unless you want to take the speculative shorts, which you might get stopped out a number of times on trying to short these tops with, stops just above here, and you might have to re-enter. Like you could have done that all the way through here, get stopped out. But eventually you potentially get like a 200, 300, 400 point drop. So if you want to play that game, you can do that. This is the kind of trade I'd prefer to take on like a personal overall, to be honest. because I think this is going to take some time as well. So if you take it on a prop account, you might be holding this for several days. So day, and then down. And then, yes, you will clean up. But if it's day down just to here and then back through there, you might not jump out through here because you're waiting for that bigger take, especially after you've taken the swaps. It then recovers, then comes up through here, hits your stop loss, plus you've taken the swap counter, and then it just drives on. And now you're not in a great position. So
yeah, those swaps can kill you if you hold on too long to a position like this. I very much agree. I mean, I mentioned that earlier also. I am more prone actually to the upside there, like an even weaker yen. I think that might be the trade to look for. Question for you specifically, LJ. Hello, LJ. What made you long Aussie dollar when we were falling and you took short earlier? Sorry if asking a private question. Just trying to grasp as much knowledge as I can while on stream.
Yeah, sure. So we are falling and you took short earlier. So the short was from last night, right? So that was much earlier. This was my time, 11 a.m. yesterday. So that's about mid or sort of open of Asia, I say midday for me, which is about open of Asia, about an hour after the Australian stock market and just around the time of Japan opening. I held that through here, which basically went to when I was on stream with you guys. You can see that's 21:30, so 9:30. I stayed on a bit longer last night on stream, and then basically took that and, like I was saying, squared my trades and played some Dota, and then eventually went to bed. So that's basically why I TP'd through there. I was actually talking to Dirk about this prior to that as well, saying we would see further downside. I just got to that point and wanted to TP and do some other stuff. But so as far as that today, we've got this megaphone situation I often look at. So we've got the tops expanding like that, and we've got this trend line on the downside coming right through here. And we happen to tack right into that once again. So it's very similar to when you get consolidation in a market where you've had that further expansion, condenses, and then you get a breakout and either to the upside or the downside. The megaphone situation always tends to go whatever the current or the prior momentous direction has been. So where's momentum been? So in this case, obviously for the Aussie, it's been to the upside. You get that megaphone structure coming through. That typically means that you're now moving the opposite direction of whatever the prior momentum was. And that megaphone situation comes in where you've got a pricing of continuation of the prior direction, the momentum, and that's probably because of some kind of macro factor. You've got a portion of that being priced in, so people pricing out of that. Then more data comes in confirming the prior momentum, so we flip back the other way. But then hence people start to price it in because eventually you become mature. So I see that when you get certain trends becoming mature, and it's the ATR basically expands over a certain time frame that you're looking at. And then eventually you tend to drop out of that. So right now we're still on the edge of that. So hence you get a bit of a pushback. You get this up, down, you start to recover. It's basically kind of like a dead cat bounce is not quite the word because it's not that volatile. Normally that's when you have a very aggressive move. But we've basically just got a general retracement within a large drawdown, and then you'll tend to come back to the same momentum. So it's nothing more than that. It's just based on ATR. We've hit the general prospectus for the downside movement into support. Now we're picking back up. There you go.
Yeah, I'm actually thinking about moving my stop to break even.
Yeah, that's where. So this is sort of the technical aspect, and obviously, what I was roping in there is a lot of like macro stuff in the background, and then so you go the macro sort of picture in combination with the technical structure overall for the market. So the main point to look at here overall, what we're actually communicating is lower low, lower low, lower low, lower low. We had high, higher high, but then failed more high highs. These were kind of flat, marginally higher high just here to the two prior, but lower than the first. Then you've got this construction of higher lows. Snap through that. We've now created a lower low. We run down to some of the prior support, prior structure of lows, and then we smash through that. So hence you tend to go into some kind of sympathy with that line right there.
And I think what you just said pretty much ties also in with this question. How's euro dollar looking like? Wanted to enter a sell at 116, but I got late entering it. Well, you still have a chance. We're at 1601 right now if you want to enter this one. I think this ties also well into what you just were analyzing. If we see Aussie dollar going down, probably euro dollar is going down as well, because the pressure here comes from the US dollar side and not necessarily, at least for euro dollar, from the euro side, in my opinion. So we might see maybe prices, going all the way down to 115.50, maybe even 114.50. I mean, over the next days and weeks. I would be careful at the moment betting against the dollar, honestly speaking.
Yeah, so the further thing, if we just go out to the daily, just to wrap up on the Aussie, and then I'll rotate that into the euro.
Also funny, I say be careful betting against the US dollar while I'm long Aussie dollar.
Yeah, but hence. So one, we've come down into the 50-day moving average, if we look at the daily. Furthermore, we've had a massive run-up, what we are like 8.5% or something at peak for the year, right, since January, which is a major move for like a major currency, right? So when you tend to have that, and we've had 3 rate hikes whilst no one else is hiking rates. So we've jumped the gun, hiked rates. And then there's the question of how much, one, that's already priced in, that's already done. Those effects actually take time to come through. So therefore, are they going to keep hiking? Is that that buying pressure already cemented in? The further run-up that we had from... my chart's kind of been a bit weird. Let's go out to the weekly. So if we go out here, we had a massive drawdown towards, what was this, 59 at the bottom. This was during Trump's Liberation Day. Every other currency rallied hard after this. Australia was still lackluster. Now, obviously, that's because of our tie to China. So part of this run-up has also been a portion of us just playing catch-up with the rest of the world. Once the whole tariff situation has calmed down, that's relaxed, people say, okay, it's not really impacting things. China's had record exports, record imports, all that kind of stuff. It hasn't really changed, hasn't moved the dial, right? No one cares. Trade goes on. So we've seen the Aussie come up. Then we've had the backing of interest rates going higher. So now we're on the position of that coming off a touch. You also have the cross correlation of the euro, the pound. Pound currently has problems once again with their prime ministership. The euro is still has a bit of a struggle with the whole energy type spectre, even though the market has kind of forgotten about the whole Middle East situation. Oil is still moving higher. Gas prices are kind of still semi-elevated. They're not running off, but they're elevated. And so you get a suppression across the board. Plus, we've had a perception of potential rate increases for the US going forward, right? So overall, this means dollar up, everything else off. Now we've just come into that sector where we might pause, get a little snap up intraday, but I still expect us going much lower overall. So that's where we try and dive into the macro stuff of the tactical for intraday for the next hour, intra-session, from this session to the next session to tomorrow, and then also obviously going over the week and the next month, that kind of thing overall. Now, going into Euro, very similar situation. And just like with the Aussie right now, been looking for us to come up. Euro hasn't come up quite so much. It's much more suppressed. The Aussie does have the whole commodity sphere still running hot, which is also lifting it. So you got like copper prices, iron ore, all that jazz. I would say Euro probably comes up through here as well. And then it's the question of once we hit that kind of 100 moving average on the 1 hour, and if we go down to the 15, this comes in around the 200 moving average. If we actually pull back from there and then push higher, or it goes back to the same situation where we pull back down, take one more leg lower, after that, I expect we actually come much higher. Because that's when we start to transition into the situation of Kevin Walsh potentially pulling back on the whole rate hike expectancy and how much that's going to cost the US government as far as their debt. Like, regardless of political party, no one wants that debt going forward. Like, if the Democrats took over from Republicans right now, they would not want that. They would be pushing for whatever gets that out of the way and give certain wins to Trump and allow Trump to do whatever he needs or whatever enables rate cuts to come down. Because even if they win in the next election, not just the midterms, but the full country election, they'll be cooked because they have to deal with that. So it's a very bipartisan issue of getting rates down, regardless. Even though it's become like a on the surface like a one party type thing. It's not. It's in the interest of America in general, and so that's why I do still lean that people will eventually go like, yeah, we need to actually cut that off.
There's no way out of there. Absolutely. Yeah. Imagine going back to 5+% in interest rates in America. My God.
Yeah, well, we've seen like 30-year bonds are at the highest since, I think 2001.
True.
In a quarter of a century. You know, so we've already seen that. What's the what is it called on TradingView? I don't know. 30-year UST?
It must be US 30Y. Should be. Look at this.
Let's go out to the... So here we are. We're back above 5%.
So 2006.
Yeah, 2006. Yeah, so like 20 years.
Oh,
yeah,
crazy. Huh?
I was saying 2001, but yeah, 20 years. 2006 then. Yeah.
Yeah, for the 30 year. Question here from I don't know how to pronounce this. Hey, I just watched your live today. I'm currently struggling to pass my account. Can you just let me know about euro dollar today, buy or not? Listen, man, we do a lot of analysis here. What we don't do is tell you need to do this or that trade right now, and for a specific reason, because we want you to develop your own trading strategy. Because I imagine LJ and I decide for whatever reason tomorrow we are not going to stream anymore. Well, well, then you're back at square one again and have to start all over if you just want to rely on what we are telling you potentially to trade right now. So do your own analysis, what you can do for sure, and this is how we mean it here on the live stream. You can take, some of the wisdom nuggets from LJ, maybe from myself or other people who are hosts on the streams and incorporate into your strategy. Like maybe you get something like, oh, wow, the way LJ is analyzing a chart or looking at the market. This is actually something, I should incorporate as well. What we'll never do is to tell you specifically buy euro dollar now or sell this asset or buy this, because it's not going to help you long term, it might help you to get to the funded stage, maybe, but it's not going to help you like the next 12 months or 2 years or 5 years, to get constant payouts. Because once we're not here anymore, you're back to square one. And it would lead to the effect that everybody would suddenly trade into the same direction at the 5ers, which you're also not allowed to do.
Okay, so I think we've got a prior question as well, which we can relate into this. So, okay, I guess first and foremost, for that, if we just want to help a man out today, at least, right? Given all you said, right? What is our recommendation? Okay. Look, I would say up bias. That's where we've been positioned in general. Like, I'm long Aussie dollar, Dirk's long Aussie dollar. It's on the same thesis, right? So this is a cross correlation, similar deal. Just the Aussie was better positioned. We also saw euro dollar printing slightly lower lows through here, whereas the Aussie dollar actually held up a bunch of this. We didn't keep printing lower lows. We were actually printing higher highs. So it came off, but in sympathy with euro dollar, pound dollar, all the other majors, but didn't pull back just as much. So hence we're positioned in that. Now, where we are here, I would say yes to the upside. My thing would be you've probably kind of missed a majority of the move.
Yeah.
Right. This is kind of the move. So since euro dollar has been kind of underperforming, you might just get a top through here. So as far as this pip differential, this is not really a trade. You know what I mean? Like, if you're scalping, maybe, yeah, you can pick up 6 points and if it gets there, but you don't have 100% confidence it will. Maybe we get a deeper push up towards this declining 200, somewhere in line with the majority of head sort of body candles on the 15 up here. But this is a very weak, this is like a choppy, weak kind of area. And then from there, you probably decline, right? Overall, I would say look for another asset, or I'd wait for us to hit some kind of a peak and then see that there's actually a proper pullback and then short euro dollar from here. I think longing or anything is not a great idea. So if that's what you're looking at, if you're not in anything, great. But yeah.
But remember tonight, the FOMC minutes are coming out. It's going to move the markets for sure.
I don't think it will too much.
You don't think so?
No, well, I mean, we've got the crossover, right? From Powell to
yeah, you might be right.
Yeah, and then hence as well. I think Jerome Powell was pretty clear in his past conference and everything. They made everything very clear, and I think other Fed members have spoken individually since. I don't think there's going to be anything new or fascinating.
So NVIDIA is going to be more important than FOMC today.
Definitely. We've also had so the big takeaway from the previous FOMC was that we had the what do you call it? Some of the other Fed members diverting.
Yeah.
Right. From
we had this for a while actually already, no?
Yeah. Yeah, and we've had a bunch of them also come out since and saying hey, yeah, the market's been focusing on that, but it's really not as big of a deal as what you guys are kind of talking about. So I think that's already been quelled. So I can't honestly see much coming from it overall. Henry was saying, can I signal people to sell order? We have crazy inflation down here. Also, Henry, I'm curious to what you like. I'm sure you've digested the budget and all this kind of stuff after we had it last week and like had a further further thoughts about it and that kind of thing. I'm curious to hear what you think around it in general, because maybe we can talk on Friday in the Discord over it. But yeah, it's not great. It's not great. Like there's a whole bunch of problems. Obviously, we touched on this a bit on the Monday, Dirk, right? But there's a cluster of certain things with stocks, shares, bonds, that kind of stuff, where they've grouped not just real estate, which was the prime target, but they've ended up grouping all capital gains, all investment, all business structures, all that kind of stuff in the whole basket. And everyone's figured out either how this cooks people further, as well as figuring out further loopholes, and all the loopholes serve wealthy people, and hence the people it's meant to hit can get around certain things and this and that. I'd be curious to see what you think. Also, because I actually have Jim Chalmers' phone number. And yeah, there's actually a thing where I could actually have a chat with him. So I'd be curious this. So
Another comment. Will stream crush before the spike to 4,500 in gold? He's gonna flip. Yeah, this is really always, this is gold likes to do that. If you have tight stops, you're being stopped out, and then it moves into your direction. But for sure, not pleasant. But knowing him, he's not going to take it the hard way. And yeah. LJ, I need to jump out today, like in about 5 minutes, because I need to pick my daughter up from school today.
Oh, of course. Yeah, go for it.
So I'll be here another 2-3 minutes, and then I need to jump out today, very much on time.
Of course. Yeah, as soon as you need to, just
yeah,
that's all good. Yeah, no problem at all. In that case, is there anything else that you wanted to touch on that you might have been looking at? I think almost like we were talking about Monday, market was very, kind of one direction. Same with Tuesday. I think it's pretty similar today in general. We've got this slight uptick across the board. So euro dollar, we were looking at Aussie dollar just before. Pound dollar, same deal. We've got the NASDAQ recovering. We have NVIDIA tonight. This is the big thing. So hence these were some of the levels I marked out before. We hit up into that level and we have started coming off. Now it's the question of, do we meet the full kind of target down here? NVIDIA earnings come out, we spike up and then come off. This is a buy the rumor, sell the fact. Or do we somehow, they go blockbuster and we start pushing towards all-time highs? I don't think we'll quite get that.
I hope. So?
Yeah, you hope. But I think it'll be a bit mixed. So I don't know, is there anything else in particular that you're looking at? I think gold, this was Will's trade that has now roughly come up to take profit, but apparently would have got stopped out. So I don't know if he shuffled the stop at all or if he did get tapped on that. But I think everything is very highly correlated right now. So,
mega. Yeah. I mean, it's actually nice to see that gold is kind of detaching itself lately from risk-on correlation. Because before that, we had like stock markets moving up and gold moving up, and now gold is a little bit more...
It's more mixed. It's definitely still more highly correlated than it was, but it's moved back to like a 0.65, 0.7 versus the 0.85, 0.9 plus correlation. So
Exactly
it's
that.
slightly more mixed. It's still biased that way, but not entirely correlated.
All right, guys, I have to leave you now. As I said, I need to pick up my my daughter from school, and that is just perfect timing. Welcome back, Will. I'm going to see you not again next Monday because I'm going to be on holiday over the
Ooh la la.
No.
like holiday next Monday, but next Wednesday.
Please come back.
Sorry, mate. We long weekend. We're going to. To use to go on a short getaway. We haven't been on holiday for such a long time already. Last time was in August
beautiful.
last year. So yeah, bit time off from the markets. Take care, everybody, and let's see tonight how Nvidia is doing. I'm going to leave you in the capable hands of Will and later Richard, and I don't know how long you are staying, LJ. Enough talk from my side. See you guys. Peace out.
See you later, Dirk. Have a good one, man.
See you, Dirk. Cheers, mate. William.
Hello, LJ.
Hello.
Well, I can see that you're rubbing in my face. My trade.
Actually, that wasn't intentional. That was just really, But
I know. Dude, it was so annoying. I got my notification saying that I hit stop loss, and I thought, okay. I was like, that's annoying. So, like yesterday when I hit stop, I saw it coming. I was like, yeah, that's so fair. I was like, yeah, it was a crap trade anyway. Today, I was a little annoyed. I was like, really? I really saw that going up. Like, I really saw that going up. So I thought, okay, that's fine. So be it. Put my phone down. I went for a walk, and just did some other bits, just to get away from the office for a minute, just because I feel like, especially when you hit stop loss, there's nothing worse than looking at it and saying, okay, I've hit stop loss. What now? What now is just bugger off for a minute and just go walk away. So I did that, only to then come back and watch gold move in the direction I anticipated. I was like, fair.
Yeah, that's right. So, dude, I kind of also feel bad because the only thing before you left, obviously you were trying to jump out, so I didn't want to keep talking, but typically what I do on something like gold in particular is run something out like that, right?
Yeah.
If this was euro dollar, having that stop below
and
these cluster lows, because it tends to be more stable and it will actually hold that cluster low and then drive up. But it's gold. Like gold always snaps further. And then,
exactly. And perhaps
I'm sure. I don't know if you're watching this candle when we did have that. We came down through there and just instantly back right up. Not gradual. It was just doop, boop,
momentum straight back in the direction. And
so that's where I normally go something like that.
Yeah, mate, honestly,
often.
If anything, actually, what I should have done was traded that pullback. Because I marked this low. In fact, let me get my screen.
And then I will say that this, like we've had on the other currencies, we've got this megaphone situation like I've been talking about, which does come up through here. And you can see it actually did tap right on that. So this is where the sort of trend line rubbish, trend lines are rubbish, but it's normally because people talk about trend lines in the wrong way. Yeah, like some magical thing. They don't understand. Okay, if you can explain why the trend line is in play, why that's working out, that's a completely different thing, right? Most people, you say, okay, why is that going to hold? They're like,
because it's a trend.
Because I put a line. Okay, what's the methodology? What's the reasoning? Why is the market moving in this manner? Right,
100%. Rich, you need to sort your timings out, my friend.
Sorry, boss. I'll try again better next time.
No. You always say you're going to be late and you show up bang on time. Like, it's not a bad thing. You said earlier, you were like, oh, dude, I'm going to be 10 minutes late. I was like, yeah, sweet, man, no worries. Shows up before.
Richard, be worse at your job.
Yeah, literally, innit? Like, if you're going to be late, be late.
Yeah. So you guys know me well enough. If I say I'm gonna be late, it's as a precaution. So it's to say I might be late. You know, just in case of like I'm already late, and then say, guys, look, I'm gonna be late.
Yeah, better than saying I'm gonna be bang on time than being late.
Yeah, well, I try that, and then my precaution ends up being worse than the caution. Sometimes
I'm gonna be a few minutes late. One
Doesn't show
eternity later.
next minute. Yeah,
Yeah.
it's at the SpongeBob
Gonna be late.
thing.
2 hours
Hours later.
Anyway, I'm just going to bring my chart up real quick because I want to show you this.
No, I make up for it.
Trigger.
I make up for it.
Yeah, fair. True.
For being the very nice person that you are.
I hang around.
Yeah.
Dude, what is the mango thing? Mango, 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 mango.
I mean, I have no idea.
You gotta pass the
Who's
mango.
What do you think?
I
what
need
we're
to pass a
doing?
mango? I don't know. Diagonal
This is
man.
a pass the mango. Is this Franz Hermann? It is.
Yeah.
Don't you need to be
Loving the mustache, mind.
working on the car?
Yeah, yeah, fair. Haven't you
Yeah.
got a race
Aren't you
next
meant to be
week?
on the Nord? No, you're
Don't you
not even
need
there.
it?
You're on the Nordschleifer right now. Come on.
Yeah. Anyway, gold earlier, guys. So I could have looked at two different situations here. You know, I predicted that price could have come back to here, but at the same time, I kind of thought we already had. I thought we had here. So I sort of looked at it. I thought, no, you know what? We've already tested this area. I can't see us coming back in. And then price
You
came
lost
up.
the trade?
Yeah, dude, literally, I got wicked fractionally, and then it just moved up back into my direction. And I was like, we're slightly off TP now.
How does this work? I hedge your trade, I lose, and you lose? Like,
Yeah, dude, like
the
this is
hell?
what I mean. Like, so yesterday I was just wrong. Yeah,
You both got cooked.
we literally both
Yeah.
got cooked. We both got fried on the stove.
I hedged him. I was like, look, he's going to buy up. I'm going to hedge him for the fun of it. I'm going to sell. Hoping that I'm going to lose. And then when I looked at him, I was like, oh, my trade's lost.
Wow.
Will must have won. He must be so happy. And I look at that wick and I'm like, that looks like a loss.
Yeah, man.
What
It
the
was,
hell, mate?
dude, I was frustrated, and the reason I was frustrated, not vengeful, not like, oh my god, I was frustrated. However, you know, I did look at this and I thought, so be it. You know, who cares? So be it. It's just a part of the process. Wow, everyone's on board with the mango. Nonetheless, it was still frustrating, even though it's still part of the process. And I'm like, yeah, okay, I don't care. It's in the journal now. It is what it is. It's still frustrating because I genuinely looked at this as an A+ setup trade. It had its moments, of course. It did have its moments. But I looked at this and I thought, this is going to move in my direction. This looks beautiful. Nonetheless, it is in my direction. I'm not wrong about the bias. And I think that's what's frustrated me the most, is I usually have a discretionary TP. And usually when my discretionary TP gets hit, it is what it, you know, I'm like, okay, cool. Now I can look at potentially getting out of the trade. If my oh shit stop loss gets hit, then it's like, whoa, okay, you know, whoopsie, something's happened. So this would have hit my discretionary stop loss. Nonetheless, I put it as a hard stop. And then it moved in my intended direction. And I was like, I knew that I was right. I was like, this trade looked beautiful. I was just either too early or too tight on stop. So look, it is what it is. But it is
Okay, so I'm just going to say this, and I'll always say this exact same thing. Did you or did you not follow your process?
Exactly. No, and that's what I mean. That's why I don't care. That's why it is what it is. I followed the process. I followed my rules. Everything was done properly. I am actually happy about this trade. And the reason I'm happy about this trade is I'm still correct. My bias is still correct. The price was bullish. Price moved up. nonetheless, like even though price pushed up, I got taken, I got wicked, and this is just part of being a trader. It's just bloody frustrating.
Yeah, it is. It is what it is, and that's partially why I feel that a lot of people kind of just miss this point within trading, because they look at it on an individual basis and see, okay, cool. Yeah, but you were wrong because it hit your stop loss. Well, you're gonna be wrong. Why be so like attached to being right?
Yeah, exactly.
You're gonna be wrong from time to time. And then everybody in chat, pass the mango around. Pass it. We would like to see it end up being passed at least 100. We've got 220 people in chat, so I want 220 mangoes passed.
How do I increase the size of this text right here?
Double click.
Yeah, and then top
Double
right.
click on it. And then there. Yeah.
Put on 48.
Is that max? You can't just type in
40
red?
is max. Yeah, 40 is max.
I was going to type 500, but all right.
Just all you see is an S.
LJ was like, if the last person gets the mango or posts the mango, we'll get 500 hub credits. He wants to write 500. LJ, did you do a $500 trade? Apparently, LJ is making multiple $500 trades right now. Money, money, money.
Actually, hang on. How much was my? Because I left some orders in last night on the.
Yeah, well, I hit stop loss and then decided to give my $500 to LJ.
I did make a $400 trade.
Nice. Nice.
Very nice. Very nice.
I have not traded today as yet, so I'm.
This is on the like stream account.
Oh.
Yeah, but I left in trades.
Wait.
last night,
What's the
which I
size of the
didn't
stream
realize.
account?
10K.
And you did a $400 on the 10K.
Yes, but I also left in trades last night, so I was down like 300, which I didn't realize because I was playing Dota and then I went to bed, which I took on stream.
All right.
And just forgot about.
Let's just put it into perspective. A 10K account with a $400 trade is a 4% trade.
Yeah.
I hope your Dota games was worth it.
Yeah? Why would they not be?
$400, mate, like on a 10K. I hope my Dota game was worth 4%. Me potentially losing 4%. Well, you lost 7%.
This is on the stream account.
Yeah, fair, exactly. Yeah.
I'm not taking anything.
It's like
for
a
this.
nothing
They were
burger.
normal trades, actually. These are the same trades I've taken in other stuff.
Yeah, they were nice
like
trades, just not so nice risk.
It's technically a nothing burger trade on the stream account, but
Yeah.
like I know you take, even if it's on the stream account, you're probably going to take it on your personal accounts as well. And like, that is not $700 you're losing there. That's not $400 trade. That's a
No.
larger
So on
trade.
that I clean them out. So hence the stream one I left because hence it's not in my brain.
Okay, good.
But yeah, so I'll text them now on the stream accounts. I will definitely take more risk. Because that's what we're doing, right? Or we can make it. I just take more
Less
risk. If you guys actually want to see me take like normal risk, what I actually trade, we can do that as well, rather than like yeeting stuff.
I mean, I'm pretty sure that people in chat would welcome a LJ masterclass.
Well, we can do that if we want.
Yeah. I would love that. I would love to see that.
Okay. All right. Okay. So from every trade now, I would take them as normal.
Yeah.
Confirm?
Well,
Okay, cool.
you don't have to take them exactly how you normally would be trading. You can do a version of it, or you can do as, I don't know, a watered down version. Let's put it like that. A slightly simplified version of it.
Yeah, even what's normal when you're trading several different things, which are then balanced out in certain variations. Like it's hard to call like a exact normal. But I'll try and do the kind of stuff that we look for on stream, like we've talked about, and then take that and punch it, and then we can do that.
We've got Lance.
Oh,
we've got
Lance, get out of here.
And we've got Void.
We got Lance France. Lance and France.
Lance and France. And Void.
Dude.
So many mangoes, mate. So many mangoes.
That's funny. I've never thought about Lance and France.
I mean, it's Lance and France.
Yeah, but that's... I'm trying to figure out now, like, if there's a joke in there. Like some under-the-radar joke that Max has put in there. I now got to figure out, like, the location of each of the letters to see if this is the equal letters between both their names, that kind of thing. Like, because this is... I
mean...
That's funny. I feel like that might be a very subtle thing. And that is the exact type of thing that
a certain someone would do.
Yeah.
I'll
look at it later.
Yvonne Nita is asking, LJ Masterclass, now, or we have to wait for it?
I mean, we'll be seeing more of that soon.
Yes.
As well.
Yeah.
Right? We got some special events coming up.
I
don't know if you can say anything on that just yet, or no at all. No. Okay. Right.
Nope. Nope. I cannot divulge anything today.
Special tings. We'll say special tings going on.
Yes. Tings happening in the background. This special ting that's going to be happening is going to be a month-long event. That's all I'm saying. That's what I'm divulging.
Can we give some hype until when it starts, at least? Give the anticipation.
So,
just a little bit of teaser. Because I think we got
next week, some information is going to be sent out via email, on the live stream, via your socials. There's going to be some information sent out. And on that day, I can divulge and I can go into depth. Because I know that the two gentlemen above me are required to make a little reel.
Yes.
And I know that I myself am required to make a video as well. So that's why I was going to be late, because I had to go and purchase. I stole some stuff. I had to go and purchase some things.
Dude, did you need to explain that? You're South African.
Yeah.
Isn't that like redundant? Like,
yeah, it's like a round circle, mate. It's redundancy. I had to go and procure some items that are required. But anyway, so everybody else that's wondering, I've seen the web page. So this event is going to have a web page. And I've seen what everybody's web page information looks like. Dude, it's cool. Not gonna lie, it's cool. I've seen it. Looks cool.
Yeah. Okay.
Yeah.
Can you share with me after? Because clearly I haven't. So.
I don't have access to it. It was shown to me in a meeting this morning. It's not live yet. It's gonna go live soon. And then once it goes live, then everybody else will see. But it actually does look pretty cool. But I can send you a message. It's actually pretty cool. Yeah, in the meantime, there's a question here from Dusanalik asking, question for three of you. How kiss? Well, mouth. Keep it stupid simple, kiss. In trading, apply to you. What? how to keep it stupid simple in trading apply to you? Because more lines and zones to me just makes so much more noise. How to keep it simple in trading? Any ideas? I think that's a pretty great question because
An amazing question.
Theoretically,
I think this is interesting. Yeah, I think we're going to have some different
viewpoints
views
on it.
on this. And
Because you, LJ, if people can see your screen right now, you're known as Picasso. So
Yeah, literally.
yeah, this is my clean screens. Right?
I
Whereas
was literally about to say,
trading.
this is
I
like
don't
super
use this.
boring for LJ.
Yeah, I don't use this typically for my actual views or outlooks, that kind of stuff. If you see my C Trader, it's a mess.
I've seen it.
MetaTrader is a bit more clean, typically because MetaTrader just mainly use for execution. But I have a combination of like, hence even within that, I've split it up between a whole bunch of different platforms to
this is a fragment.
Decluttered. Yes, this is
a fragment of the chaos that happens in LJ's screen. Like the screen that's behind you is a good idea of what your stuff looks like. The
yeah,
one with
this,
the
yeah,
scribbles
it's
on
got a
it.
bunch of stuff everywhere. It's like, oh yeah,
Yeah. Okay, so
this is a good
simple.
conversation. So yeah, I think you guys go first and explain your standpoint.
Should we go like bottom top?
Yeah, sure. Because I'll go
sure.
grab. I'm just gonna grab some water while you guys start, and I'll be back in a sec.
Yeah,
Right.
sweet. Yeah, no worries.
Awesome. We went bottom to top. We can go bottom to top.
You guys competed. Well,
Would you like me to go first, Rich? I can go first if you like.
That's fine. I'll go first. Don't you worry, mate. Don't you worry. Awesome. So, keeping it stupid simple. In my mind, trading is a bunch of information that's constantly being fed to you. And it can become jarring. It can become overwhelming. It can lead to analysis paralysis so much, if you want to say, if you add too many factors, if you add too many things to a screen. So in general, I keep it visually appeasing, first and foremost, keeping it simple. So visually, I have a sessions indicator, which assists in helping me very quickly seeing where the highs and lows are of a previous session, because they are, to me, important enough. Okay, so if I were to go on a bang average clean chart like this, if I rocked up, I would need to expend mental energy to say, okay, where's the low of Tokyo? Where's the daily open? You know, I'm going to have to search for it. So for me, the idea is I want simplicity, quick visual information. So I get a sessions indicator to help me simplify that searching process. I can do it without it. It's time consumption that I just don't really want. So visually, I can see, okay, there is the high of Tokyo. It's the pink box. I can then very quickly just go ahead and draw a little box to say, okay, cool, that is an interesting area for me if it should get tested. Simple. What I can do then is also add lines, which I think it's an interesting thing to see if it gets broken, but I believe that zones, boxes, make a lot more sense because it captures a bit more information. So if I'm drawing something on the chart, I might start out with a line to indicate higher highs, higher lows, lower highs, that kind of like thing. So price action movements. But if I want to see an area of interest, it's always going to be a box. So once I've used a box and it's now no longer applicable to me, I delete the drawing. I remove it so that I can get back to this simplistic view. When I add indicators, I'm trying to visualize one thing at a time. I'm not trying to have multiple drawings in one place because this distracts me. And what I'm trying to do is I'm trying to simplify the entry, not necessarily the analysis. The analysis can be as complicated as it needs to be, but the trade entry needs to be very, very simplistic. So when I started doing backtesting, I realized that certain information to me just kind of drifts towards the side of like, I don't quite know what I want to do with this information. So if I don't know if this information is harming or helping, I get rid of it. So a simple EMA, just one. That's all I need. I do have a zero lag one as well that does help from time to time to see whether or not we're losing or gaining momentum. And I will look at this periodically and then just kind of hide it away. And then for the MACD, the same thing as well. I'm trying to also see whether or not we're gaining or losing momentum in a specific direction. And that's as much as I do. When it comes to drawing up, the most drawings that I do is when I'm going to take an entry and I have to mark each individual take profit point as a visual showcase on TradingView. But other than that, keeping the drawings and the information that I require simple is helpful. Minimal drawings, minimal lines. If an area is no longer applicable to what I'm looking for, I get rid of it. I remove the drawing. That's as simple as I can make it. It's the more lines and the more zones you have, you can complicate it to yourself. Like imagine if I go to the 15-minute and I say, okay, I'm looking for a base area. Okay, there's a base area. We've already had the reaction there once. Once we've had the reaction, I'm done with that area for now. I don't need to see it again. But now let's say, okay, I'm looking at, okay, so there's this area up over here. Okay, we're reacting at it now. Okay, now I need to add this base area over here. Okay, and now we have this high box over here. It gets confusing very, very quickly, because at what point am I going to look at this information and say, I need to have a sell on one of these zones? Where do I have my sell? It gets confusing. So I just remove the information or I move it aside just to indicate to myself, like, listen, don't forget that we are close to an area of interest, as an example. Let's see how we react. Once we've had the reaction, and it's in this case disrespected, I'm like, ooh, I don't know if this area is still an area of interest for me. But I might keep it up there. I'll just move it a little bit aside and then forget about it. That's as simple as I can make the trading itself.
Yeah, fair. I wasn't listening to all of that because I was trying to bring up some of my examples. But nonetheless, I probably fully agree with it. Well, what I did here, I fully agree with. But I'll bring up my screen real quick, and then I'll give my 2 cents on this. As you can see, I got 101 images up here. So that's what I was trying to find. So you can, when it comes to simplicity, it's one of the biggest things I focus on. And KISS, I like that. You know, keep it stupid simple, 110%. And that for me, I've literally just finished doing a video on how to read the markets like a pro, and it's basically KISS. Had I have heard you reference KISS before creating this video, I probably would have referenced KISS as well. So yeah, keeping it stupid simple. You guys know I like to look at the daily first. I look at the daily. What do I see on the daily? I look for my areas of interest, you know, highs, lows, consolidations, you know, weeklies, consolidations up here, you know, overall trend direction. I won't look at it for the rest of the week. Once I've done that, I'll drop down onto the 4 hour, and then I'll sort of like mix between the 4 hour and the 1 hour. It's exactly the same as the daily. I just do it on the hourly, you know, or the 4 hourly. Every single day, I try and mark out, right, okay, where am I interested in? Where's my consolidation? Where's lows? Where's highs, swing points, consolidation, high areas, you know, trend, you know, any imbalance zones. I just literally like to identify different zones. And then once I drop down to the 1 hour, the 15-minute, whatever I'm actually trading on, I'll then start looking at what I want to be trading, how I want to be trading it. And as you can see, you know, you can see yesterday took a loss, day before took a win. You can actually see how simple it all is. All I mark out is lines. That's all I've got. Lines, 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 a fib, a box and a line. Same today. Lines, trend line just to show trend. I don't need that. I just showed that for you guys. Box, box. Box, where's Max Verstappen?
Yeah, come on. Where's France home? Where's France?
Where's France? You know, so box, box, Like I can't not hear that now. Box line
Yeah,
box.
well, see, Lars Stroll never boxes anyway. He just
That's
crashes out.
fair.
So he doesn't get to the box point. He never
He just
switches
blows his
tires.
car
He
up and
just
says,
crashes
"Dad, I
out.
need a new car."
Yeah.
Yeah. So you know, when it comes to keeping it stupid simple, for me, it's the most important thing in the world. You know, I only I only get wrapped up in squiggly price. I only turn into LJ when on stream. You know, when I'm on stream, I'll be like, "Oh, guys, there's zones here, and there's zones down here, and then there's also zones up here and down here, and then you got here and here and here." And then by the end of the analysis, my screen looks like that. Only on, only on stream. The
If
rest
only
of
you
the
could
time,
match it with the language. You need to
yeah,
up that language as well, Will.
yeah,
Right? Yeah.
yeah.
Come on.
But yeah, like I say, only on stream do I do that. The rest of the time, if I'm off stream, it is literally the case of I see a zone, I box it, I mark out my highs, my lows, my areas of interest is in like, you know, my swing high, my swing low, what I want to see for a break and close above, what I want to see for a break and close below, my current consolidation. That's all I mark out. You know, I can trade, but the rest I suppose is in my head. Like I can trade with four items on my page. I can literally trade with and successfully trade with when I'm not on stream. Let's say this is price action. I will trade with a fib retracement, a consolidation or area of interest, a previous swing point, so a previous high and a current low, and then that's all. 1, 2, 3, 4, and then the entry. So I suppose 5.
I mean, that is not really an indicator for analysis. Let's put it like that. It's just a visual representation of a trade that you're taking.
100%.
But I wouldn't even mark that when I'm not in the trade or when I'm not on stream. Is what I'm trying to say.
What do you mean?
I only mark the.
So you wouldn't even mark it at all.
No.
Oh, see, I do. I will, and a bit like Rich, I do have sessions. If I'm going into New York or going into London, I will sort of like mark out my session. Oh, I've accidentally already marked out Tokyo high and low. I will mark out my pre-session highs and lows, or if I'm looking for a TP zone, then I'll, you know, put the indicator back on and be like, okay, that's where London high is, that's where London low is. Could I target that? No. Okay, cool. Let's mark it out anyway, and then I'll move back. So when it comes to keeping it super, super simple, it's the ability to not have to see any garbage. And what I'll do is, you know, you can see this. This is a trade that I've taken live. Yeah, sorry, not live, off live stream. Boom. Boom. Super simple. Literally, like I said, box, box, line. You know, maybe some arrows on where I want price to go. Again,
Yeah.
you know.
I mean, I print screen basically. So I take a screen grab.
Well, that's exactly. I've just taken this from my journal. This has literally been taken from my journal. You can see here.
So it's just for journaling.
Yeah.
But I do it for the benefit of the viewers. Let's put it like that.
Yeah. Like right now, I don't put anything on. There's no drawings. It's so boring to look at. Okay, to be fair, maybe I spoke to myself a little bit here. Okay, this missed me. Oh no, this I actually took on stream, to be fair. But again, I keep it all very... In fact, this was the gold trade from... This was the gold trade from not yesterday.
Day before.
Day before. Why is my trading view being so slow? There we go. So this is...
Because you have so many tabs open, that's why.
Yeah, true. This trade, I believe, is this trade here.
So, if I'm gonna capture a screen grab, it's gonna have the date and the time attached to it as well. It's not just going to be like,
Oh yeah, that I manually put in. To be fair.
oh, okay.
Yeah,
No,
that was just screenshot. Yeah, that is literally just screen grab from TradingView, chuck it into my journal. The rest of it I manually all put in from time, entry, date, long bias, short bias, etc. Yeah,
Awesome.
so keeping it super simple for me is the most important thing ever, because I can now then look at this and I saw that I hit stop loss. I was able to walk away, come back, and instead of having 1,001 drawings like this and start asking, oh, why did I even enter this? What's even going on there? I don't even get this anymore. I can literally look at it now and be like, okay, I can still see why I entered that consolidation there. Okay, I can see why it hit my stop loss because there is an area of interest here. Okay, although we did break and close under this low here, but nonetheless, we are still bull bias. Okay, cool. We did get confirmation of the break and close above there. I can even going back. It's that simple and that clear and obvious that I can go back and look at it and go, that makes sense. Even if I don't remember why, I've drawn out exactly why.
I see that Dusanelic has also just added like an add-on to that as well as like, great to know. So Will does top-down analysis, then trade on the 5 and 15. But does Richard do the same or stay on the 5 minute and mark zones? I jump between the 4, the 1, the 15, and the 5 minute. But I use them for different reasons. The 4 hourly, I want to see if there's a 4 hourly zone, so a slightly higher time frame areas of interest. Reversal points, support resistance levels. The hourly, I kind of look for the hourly bias, even though I don't trade the bias, but I want to see over the last hour or so when we've had volume, whether or not it's getting closer to an area of interest or moving further away volumetrically. 15 minute, the same area. I'm looking for bases, I'm looking for reversal points, and then on the 5 minute is generally when I enter.
Yeah, fair. Also, going back to that's on saying about I do a top down. Yes, I do. I do look at the 4 hour, not as often. I do look at the 1 hour once a day or once a session. Let's call it once a session. But I do float between the 5 and the 15, all regularly. Like when I'm at the charts, I'm 5:15, 5:15, 5:15. Whereas the 1 hour, I'll check once a session. The 4 hour, I'll probably check once a day.
Yeah. Generally, also don't check the 4 hourly all that much. Yourself, LJ, how do you keep it stupid simple?
Okay, so
if you
the
can.
thing with the whole
If
kiss
you can.
thing and keeping it simple, that kind of thing. So yes, that's definitely a base principle to adhere to across anything you do, whether it's trading, life. I don't know if you're doing engineering, architecture, literally anything else. Okay, right now, but the reason is as to why people normally think it as okay. If you got more complexity, then automatic bad. Why?
Not the case.
Like, what? Yeah, you need to say, why is there more on the board? Why should I have less? Why is simpler better? You need to have a why, not just simple equals good, right? That's not constructive. That's not critical thinking, that kind of aspect, right? So if you're slapping a bunch of things on, say we take trading, you're slapping a bunch of stuff on the chart, a whole bunch of indicators and this and that and blah, 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 and you're just taking when they're at the high or the low and just going like, okay, I just do this because. There's no critical thinking. There's no thoughtful enterprise before taking certain trades or potentially exiting trades or otherwise that goes into it. Hence, wasteful. You don't understand why that indicator or this piece of information is actually in front of you. Hence, yes, you should get rid of it because it might also disrupt what you're doing because it might be useless information. Now, as you go forward, you'll find that, yes, you do have to increase the overall volume of input if you really want to scale further and further and further, naturally. If you just want to trade, do your thing, make a couple bucks, you have no interest in massive expansion, probably not going to really need to do that. It's kind of, if I use the architecture engineering type aspect, if you want to build a cubby, a little fort in the backyard as a kid, you can do that. You can get a couple sticks and like some kind of tarp or something over the top, and it's great fun. And you put it by a tree, you lean off the tree. Awesome. If you want to build a building, more difficult. As you increase in size in buildings, more difficult. You do have to take in more pieces of information. If you want to build a construction that is 100, 150, 200 stories tall, more inputs, right? Keeping it simple does not work. It will collapse.
Yeah.
Right. So you have to understand exactly what environment you're working in, and are these things that you're adding to what you're doing necessary, or are they creating more difficulty? So it's not just to add more things in general. You have to understand why and how they actually assist you in the main provenance of what you were originally trying to execute on. Right? That's very different. Now, if you're just throwing them in there just because you want to be complex or feel sophisticated or professional, just because you're slapping more things on, then no, it's not going to help you. You don't understand why these things actually help or assist you, or how that's actually going to progress you forward. Now, the same deal, even with those aspects, oftentimes you can bloat those out where you do need to corral that back. But that's a very minor problem, because you're going to be rocketing so far ahead before you actually get to that point that most people won't need to worry about it. And when that's actually the case, you'll see it immediately, because you've got the other full stack that is very obvious, and you just cut that broad-based stuff. So I don't really like the whole keep it simple, stupid thing in general, because it's lacking context. There's often like the Einstein quote that gets wrapped into that, but it's meant to be more of a keep it as simple as it can be for something complex, but don't degrade it to anything less than as complex as it needs to be, right?
Yeah.
Which is very different, very, very different. So I basically, if something's not serving you, don't use it. It's a waste of time.
Yeah.
That's the point. You're wasting energy on that. You're wasting inputs. And also, if you don't fully understand it, it could be giving you false inputs. So when you decide to implement something further to your trading approach, your style, whatever it is, you need to know why you're doing it, how this benefits you, and actually concretely measure why you're incorporating this all together. Not just willy-nilly, like, okay, cool, I'm here, and I'm just going to slap that there, and I don't know what's going on.
It needs to serve a purpose. The addition of it needs to serve a purpose, and if its purpose is to distract you, yes,
intent is the keyword. Yeah.
Where if you are adding something that is not a benefit to you but a distraction, then remove it. That's, I think, baseline. That is what it means by keeping it stupid simple. Is, well, keeping it simple stupid. That kind of like thing as well. It's just, you can. The thing is, we keep searching for that little bit more. There's always that drive for that. Okay, but I can tweak this, and if I've tweaked this, I can get just that little bit more, and then you start adding and complicating. And what eventually happens, and what I think most people struggle with, is then they see information on the screen that they think it's relevant to what they're trying to achieve. And it's not necessarily relevant at that time. And all it's doing is just confusing you, giving you analysis paralysis, making you feel like, oh, I would like to enter, but my strategy says A, B, and C, but now I have a D and an E added onto the screen as well. And that D and E maybe doesn't work in this market. I don't know. But now you're relying on that because you've added it to the screen and you're making it extra complicated. I think that's the crux of it all. is that.
Yeah.
Dude, I love that, and I will build on it. Even when it comes to engineering, you can keep it stupid simple. But like you said, don't be dumb, though. Don't be dumb simple. So like you said, you can build a fort out of sticks. You can build a fort out of whatever the hell you want. 100% agree with that. You can't build a skyscraper out of sticks and dreams and a pen and paper on an A4. You can't do that. However, if you keep it simple, the reason I say this is, my dad's been, he was designing a bunch of properties that we were developing a couple of years ago, and I was like, oh yeah, this, and I was a lot, on our first building that we renovated, I was like young, I was like 14-ish, maybe around that age. And I remember coming, I just wanted to be part of it. I wanted to be like, I want to be part of this. Oh, let's do this. My dad, is an awesome guy, but when it comes to business, he's a savage. And, if you want to be a 14-year-old and try and converse with my dad as in a business sense, you'll get treated like a business guy. And so he said to me, he was like, no, that's irrelevant. Shut up. And I was like, oh, okay. And he was like, that's relevant. But he explained why. And he was like, that's not even to be considered right now. You need to consider this. And like, I started learning and I was like, huh, who gives a shit about this right now? We need to do this. And that's like you said, that's what you mentioned by keeping it stupid simple. It's not forget about it. It's not don't do it. It's if it doesn't serve a purpose now, forget about it now. Worry about it when it needs worrying about. And it's the same goes with life. And, you guys know that I love my life coaching. I love my sort of life side of things. When it comes to worrying and stressing, and I say this to the missus all the time. She's a big worrier. And I say, don't worry about it. She's like, how can I not worry about it? Because it's not going to affect you now. I was like, look, if you're putting in all the measures to stop this thing from affecting you, then you worry about it affecting you when it affects you. As long as you're putting in the best practice now, same goes with trading. If you're trading, for example, you're taking a long here, like I just did, and then you're like, oh, what if it worries? Oh, I'm worried about it hitting stop loss. If you put your stop loss where it's relevant and where you know that if it passes that area, it's going to invalidate your trade and potentially reverse, and maybe you're wrong about the bias, or maybe you wouldn't take it if it comes down to that area. If you do that, that's where you put your stop loss. You take the trade. You enter the trade. You're happy. If it then hits your stop loss, you worry about it then. You don't worry about it now because it's not now. It doesn't mean it's going to happen. So you're worrying and overstressing about something that's a potential and something that doesn't actually exist right now. It's complete fugazi. So what you want to be doing is keeping it simple and stressing about the now stress, not about the later stress. And the reason I say this, because there's going to be people out in the comments, I think they're smart asses, and go, oh, but you've got to worry about the future because, what if you got to put that into place? Yes, of course. Now, as long as you're putting into position things to prevent these necessary or these things that could come up, like I said, as long as you're putting a stop loss on at a point of interest that's relevant, and as long as you're putting a TP, and as long as you've got good analysis, that's keeping it simple, then you're doing the best practices to prevent stress later. However, don't stress about later now when you've already put in preventions or when you've already put in things in place to worry about it later.
I think Henry said it really well yesterday. He says, change the word worry to focus.
Yeah.
It's what you give energy to.
Yeah.
If you're going to focus on something that is a year from now versus something that's right in front of you.
Yeah, sort of. I feel like that one's more of skill per se, because sometimes people focus too much on what's now and not what's in a year, and then they get cooked, or vice versa, right? So I think that one's more.
So what is it about? It's about balance, right?
Keep it simple, stupid. Sometimes people swap it to keep it stupid, simple, which is not quite right, because
a little bit different. Yeah,
you don't need to think of if it's that simple. You wouldn't need to be throwing around these kind of acronyms, that kind of thing, right? The primary point of keep it simple, stupid is that you're progressing, you're doing very well, and you naturally in every environment, whether it's trading, whether it's a business, whether whatever it is, things become more complex, right? Even relationships like a family, a partner, you have kids, it had this, you get a house, you get what, everything gets progressively more complex.
There's dynamic
overall.
to it. It's
But
not
then
static.
people
It's
keep
dynamic.
trying to, yes, yeah, it's dynamic, and people keep trying to add certain parts that are potentially theoretically meant to make things easier going forward, but they're arbitrary. They haven't really thought about it properly. So hence the stupid part at the end is, why are you trying to complicate something that doesn't need that? So now you're being stupid. It's meant to be a keep it simple because you're being stupid right now.
Yeah, exactly.
There's meant to be like a little segment there.
Well, I said there's supposed to be a comma. The Oxford comma is supposed to kind of like just keep it simple. Stupid.
And wrap it back around. Now, if you're expanding things and it's all been on point, and you actually need to do this, like you figure out certain further structures and you have to expand, and say you got a business, something like that. Like, yes, that's not stupid. That's what's needed. You're doing smart things that are actually expanding stuff. It's when people expand or try to expand for the point of complexity because they feel like they're being more sophisticated or more professional or more like, I'm awesome, I'm doing it. And then they crimp themselves and actually curb their growth, curb their expansion, curb their velocity, their speed. And then that's not good. It's just junk, whatever stuff that jars up the whole thing. There's the same thing with investment banking, where they go and buy certain companies. They've gone and done that. They buy the company, strip out all the garbage,
unnecessary parts,
streamline them, and now they're profitable again. And then they make money. It's the same deal. Like, they just got too heady, right? That's what it is. So it's not simple as people can
simple
confuse
isn't
that
always
with
better.
Things needing to actually be simple. That's not
simple does.
Yeah, obviously. Obviously not. Right, okay, just go build a rocket ship simply. It's like,
literally.
it's not really how that works, right? Go build Amazon simply.
Yeah.
Go build
I
a
think at
government.
the end of the day is just that if you overcomplicate something, you're adding decision points, and the more decision points you have, it becomes more complicated and more complicated and more complicated for you to do something that in theory should not be as complicated. It should be a lot more simple, not just simple, but simpler than what you're doing to it right now, than what you're trying to achieve. So it's understanding that balance between the importance for it to be complicated enough that you can grow from it and learn from it, but do not have it that complicated that it impedes you from doing what is necessary for you to do right now. In which case, when referenced back to trading, if you're adding all these indicators and all of these extra layers just to take a trade, and you wonder why you're struggling to make a decision to take a trade, then kind of look at all of the information factors that you've added to your strategy. If you can simplify it, try and simplify it and see whether or not that impacts your decision making within trading. And if it doesn't, then that's not the problem. Then it's not the simplification or the complexity of the trade that is the problem for you. It might be something else. But you won't know because you've got so many factors and so many decision points that you kind of get lost in it.
Yeah, and hence if you have too few, right, and you're entering stuff and you wonder why it doesn't work, is because you don't have enough confluence.
Exactly.
So the point is signal over noise. So hence the keep it simple stupid is to eliminate noise and focus on signal. Oftentimes when people add too much stuff, it's more just noise. It's interesting to look at. Seems very sophisticated. You got all this stuff going on, but it doesn't actually produce signal. What is actually going to move the dial forward?
It looks nice.
Hence, that's what
it
you
looks
want.
nice.
Now, if you've got 10, 20, 30, 40 things that are all signal and they move the dial forward, punch it. Right? You want that 30.
That's the alignment.
5 that are signal, and you've got another 10 that are just noise, and it's disrupting the signal. It's almost like static interference. You want to strip that out because it's going to interfere with the actual clarity of what you're trying to do.
Yeah, you hear a lot of billionaires talk about that as well. You know, like I think it was, I don't know, I'm sure it was like Jeff Bezos or something that only wears a black t-shirt or only wears a cream or white t-shirt, whatever it is. He wears one color t-shirt, one color trousers because he gets up in the morning. He doesn't
Steve Jobs, all of them.
Steve Jobs, yes. You know, he's like,
with the polo neck.
Yeah, it's like
polo neck, what's that?
And the jeans, blue jeans.
Yeah, blue jeans. He's like, what shall I wear today? He eliminates all that because it's a bullshit decision that he has to make. He doesn't want to make it. And even there's something as small as your outfit. And you know, you hear podcasts of millionaires and billionaires talking, and they don't even cook. They have chefs. Why do they have chefs? Because they do not want to think what's for bloody dinner. They want to think about how they're scaling their company. You know, they want to be thinking about important streamlined decisions. So they're like, right, I can afford it. I'm going to get a chef. He, she, they're going to cook. They're going to cook. They worry about cooking. I'm going to have one black turtleneck and a blue pair of jeans and a white pair of trainers. I'm going to wear those every single day. I'm going to have 3,000 pairs of just those because then I don't have to make a decision on what I want to wear. You know, so yes, okay, it could be fashionable, it could be unfashionable. Who cares? He doesn't care about your opinion on it because he's trying to scale his company. We're not at that stage, you know? However, by taking that ideology and shifting that into our trading as beginner, as new, as semi-profitable traders, we want to overcomplicate it because we want to look smart. We want to be smart. We want to sound smart. So we're like, I gotta do this and have 3 billion screens, and I gotta do this and this and this, and oh my god, I'm so busy. I'm an absolute hedge fund man. I'm a finance bro, dude. Just have a couple of screens. Have the screens that you need. Don't overcomplicate it. Don't have 1,001 tabs open. You know, don't try and analysis paralysis yourself. Could have hired a stylist. That's true, I suppose. Yeah.
That would have been a decision point that he was unwilling to make. The right stylist.
Maybe he thought that was a wasted decision.
I don't know. He probably went to the closest Costco and just went, okay, color, done.
Yeah, exactly.
Well, he sent someone to go and do that. And he told them, keep it stupid, simple. Stupid.
But it's about streamlining those decisions. And like LJ just said, if we're looking at a pile of indicators and we realize that we're not using them, we're just having them on the chart to make ourselves look smart when we post it on social media.
Or feel good. Feel good about the trade.
Or
that's
show
one of the
our
biggest things.
family or, babe, come have a look at this GU trade. Oh my God, well done, babe. That looks so complicated. I could never do that. But okay, cool. If that's the ego kick you're going to get, if that's going to be the dopamine kick that you're going to get, fine, so be it. But I guarantee, like if you cleared up half the garbage on your chart that you don't use, your partner may still come in and go, "Oh my God, wow, babe, that looks really simple. Wow, I wish I could do
you." Babe does not care about the trade. She cares about that.
Either way,
the account
all they see is you made money. They're proud of you for making money because you get to buy them a nice date night or whatever. You get to take them out on
a Chanel bag.
Oh God, yeah. Yeah, you get to buy your partner a Chanel bag or a Hermes handbag.
Dior?
Birkin? No, she likes Hermes. She sent me a Chanel bag the other day, and I was looking at Hermes and Chanel, and she was like, "Oh, babe, I want a Chanel."
Did you say Hermes?
Yeah, I also heard Hermes.
Hermes.
What?
I don't know. It's a bloody bag. It's a leather bag.
I mean fair. Who cares how it's pronounced? We don't care.
Literally everything I
wear.
Dude,
Henry right now would be crying.
She likes Hermes, whatever it's called, and it's just a leather bag. It's a leather bag that she puts her lipstick in. That's all I know. No different to how she sees my trading. She sees my trading as a couple of different little candle or a couple of little lines on a chart that affords her Hermes handbag. So Simplicity is key. They don't care. No one really cares about your charts. You've just, dude. You know what? I kind of hope she's really not watching right now.
Low key, Will is in trouble tonight.
Yeah,
Low key,
no.
we're
Low
not going to see Will for the next few days. If Will rocks up with a blue eye, he's going to tell you, it was from the boxing ring, guys. I went to go and spar for the first time in a long time.
Yeah, I'll come up with like big sunglasses. Yeah, so guys, you've got to keep it simple. Reduce the noise on your chart, and you'll streamline your trading significantly.
I feel like that goes completely against what LJ just said. You've got to keep it simple, guys. Where LJ's like, well, you need
what I
context.
mean, but yeah,
sometimes you can, sometimes
It needs to be
complicated.
keep it as simple
It needs
as it needs to. Like, don't overcomplicate. Don't put in stuff that don't need to be there for you.
Okay. Yeah, it's about the thing. So as complex as it needs to be, but no more so, right?
Yeah.
As simple as it needs to be, but no less complex, right?
If you know,
if you want to do physics, you can't just learn 1 + 1 = 2 and you divide it by and multiplication mathematics, right? you need a lot more than that, right? That would be extremely simple. Yeah, you can count to 100 on your fingers and do some other stuff, but you're gonna have a bad time. So that's where it does need to become
abacus?
more complex for like a certain level, just as a base standard. But you don't want to go too crazy that you get into ethereal, weird stuff that's very
It's like using the moon phases to trade when you don't need to. Looking at
That
planetary
doesn't-
alignment.
I will
and
have you
charts.
know, astronomy has the 100% win rate when it comes to trading.
Astrology, you mean?
See, even Will just overcomplicated it for himself.
Astronomy
yeah,
is
no,
it
Last
would be
time.
astrology, wouldn't it? Yeah, fair.
Yes.
He uses the wrong. I don't know. He uses Taurus to determine his trade.
Orion's belt, bro. Check out
Yeah,
check out the bottom of his sword. It's clearly buy signal.
Yeah, and apparently your gold trade hit Orion's belt right there. Look at that stop
Yeah,
loss. That was right
actually,
on his
to be
belt,
fair,
and he
to
got
be-
taken
I
out.
could have
mate.
told you that
You know
3
what?
moons ago, mate.
That was
3
Orion's
moons
belt
ago.
right there.
You know what? We've got Orion's belt. It hit his sword.
See, you should have
And
put
then
it
it-
down to his kneecap, right? At least at his knees, and then it'd be all good.
Yeah.
You know?
I wanted to get to this because I feel like this is the psychological thing that a lot of people don't want to admit. When I get my first payout, I will cry like a baby. Not because of the money amount, but because I beat myself. It's the last section that I want to focus on, the beating yourself. It's when you're participating in something like this, realizing the importance and the impact of psychology within this numbers game, this financial institute, it's the fight of you versus you. It's you coming to terms with certain things, you realizing certain things about yourself, that maybe you're more impatient than you thought you were. Sit in a trade for, 4 hours and then realize I hated every moment of this. I wanted it to just go to take profit or stop loss. It's realizing certain things about yourself. It's like putting up a mirror and really having an in-depth look at yourself. Very specific things, obviously, that is being shown to you. And I like that comment because from Dusan Alex's point of view, he understands that it's a fight with himself, the market. You're not fighting the market at all because the market doesn't know you exist. The market doesn't see you as an individual. Collectively, yes, you may have an impact, but you individualistic as an entity trying to make money out of the market doesn't even know you're there. You have declared war on a country, and the country doesn't even know your ID number. It doesn't even know your photo. It doesn't even know you exist. Yeah. It hadn't even seen the declaration of war from you at all. They were like, what?
Yeah, if Will Davis declares war on Italy, they're never going to know. You know what? Right now, guys, I'm declaring war on Italy. They don't even know I exist. They're like, I'm sorry, who's Will Davis?
Yeah, but that's what I mean. It's just it's the realization that it's you versus you. Yeah, I feel bad for you.
That's the market.
I don't think about you at all. Yeah,
This is a meme from Madman.
Yeah.
yeah. I feel bad for you. I don't think about you at all. It's exactly this. It's and people get tired of hearing this. Like, I'm pretty sure there's a bunch of people in chat right now that's like, yeah, we've heard this, get to the trades. Risk management, in my opinion, is the single most important thing when it comes to trading, followed immediately by psychology. And those two alone can beat pretty much any strategy, or can make pretty much any strategy work. Mm-hmm. It's the psychology and the risk management.
Well, like
obviously
you said,
you can fill it up as much as you want with whatever you want. That's just like bracketing. I'm just bracketing something that's actually way more complicated. But
why do most traders say, like, what's the most common thing traders come in with issues on the live stream? When they come in with chat and say, guys, I'm struggling with this, it's usually revenge trading, greed trading, psychology, fear. It's always something that you can fix within yourself. You never look at the markets and goes, guys, I'm really struggling because the markets are they're bad markets. Yeah, okay, fair. Sometimes, we do have swings in the markets where it is, difficult to trade. However, 90% of the time, people come in with the idea that they're struggling with psychology, they're struggling with greed, they're struggling with consistency, they're struggling with analysis. It's always something they're struggling with internally. If you can master the internal self, then you will master trading.
Yes, I agree. I think with the whole psychology thing, I think the only reason we had somewhat portion of this yesterday with Rich, right? We were talking about it. Now, I think though that people look at psychology as some other thing, like as like psychology, like this kind of ephemeral, a bit more esoteric voodoo. Like, oh, I just got to get my psychology right.
You want to go see
they
my
just
will
keep
dog?
saying that, and they say it again and say it again. And like, what are you doing to actually do that? Like, rather than the same way you'd view your trading as trying to develop like an approach, a style, try and figure out the markets, how they work, where you can get an edge, where you can get alpha. People don't view psychology as an edge as well, and actually developing that almost in the same way, more strategically and programmatically almost. It ends up being just very, very soft and fudgy and whatever. And I hence yesterday we were talking about which one is more prominent, which I do still agree that most people that are saying psychology probably can't properly explain the edge, right? And just like Rich was saying that he's done the polls where a majority of people say they know the edge, but then they come up with this psychology thing and saying that's my
that they're
trouble.
struggling with psychology.
But then if you ask them to explain the edge, they're like,
they can't.
I got edge.
yeah,
and then that's it. Like they can't actually explain why. Like what is the portion of the market that is not being arbed out right now that you actually have some kind of relevant input that you can rely on this to actually make a decision or not, right? So I think psychology is very much an edge as well in that sense, where you do have to develop it and focus on, and that goes for all of life. Like we've talked about this before, not just trading. Business is obviously very close comparative. It also goes to relationships, friendships, like all that kind of stuff. Like someone does something you don't 100% like right now, you don't overreact and kick off. If you had that friend, you'd be like, oh, God, this guy's such a nuisance, right? And people have those kind of views of other people, but they're not recognizing themselves that when someone does that to them, they kick off in the same way or in a relationship. And then hence it's like, dude, you don't have an edge there because you're curbing yourself that way. So, and we were talking about how this translates across the board. And we had this arbitrary whatever thing where I'd often go to the gym late and line up at Hungry Jack's, which is basically like Burger King for you guys, any of you guys, just fast food thing after gym where I get a burger. Everyone gets it. It's very flooded, very active space, and people would be mad that there's delays and all that kind of stuff. There's always more demand than people working for the size of the store, and I'd always be there chill, right? And then I get discounts, but people aren't thinking about that. But it's the same way in life in general with that. Same with your trading, and then hence. I don't think people really approach psychology with that. It's like just a flip of the coin, how you woke up out of bed and then you came to the market. And if it's good, now you're happy. If it's not good, you're not happy. And there's little change around that. So I don't know. Maybe this is another deeper convo we can bring up with Rich.
We can definitely expand on that.
Because I could go on for another in depth. Like I was trying to wrap it up because I was thinking through in my head, like I could go on and on and on with this.
I would ask this, LJ. You very much like myself understand gambling. We understand probabilities, that kind of like stuff. What is your definition?
Risk, I guess.
Well,
gambling,
like
risk,
same
whatever.
Field. Same field, yeah.
It's just a syntax thing.
Yeah. So explain to me your definition of edge. And you can use whatever examples you want to, but what is LJ's definition of edge?
Okay, so I would say you understand the landscape that you're operating, right? Now you understand the conglomerate of participants that are in this game on the same landscape, and you understand exactly where the majority or lack thereof is operating, on which side and in what manner. And obviously you move to the other side, per se. Right now, if the majority over there, and you've got kind of this binary kind of win-loss thing over the landscape, if you are part of the minority, you're going to win more on average. Simple as that.
Okay.
That'll be the 2 cents form.
Yeah. Obviously, there's a long form essay version of it, like
yes. Yeah.
Like all good typical LJs. There's a very long form version of it. Will, what is your definition of edge?
A quick definition of edge: literally the ability to execute in a way that increases your gives you a higher probability of winning than losing. So finding a pattern in the market that you're able to execute on with confidence, and I think that's the biggest thing, because we can all gamble our way through what we think could be an edge. When you have an almost definitive strategy on a pattern and able to execute to increase your probabilities of winning in the long run, then that's edge. And if you can do it consistently.
So, to me, edge is whatever actions I take that lets me deviate from the expected norm or expected outcome.
Yeah.
So in trading, the expected outcome is that 70 to 85% of retail traders are going to lose money in the long run. So whatever I do, action-wise, that is going to allow me to be a part of that 15 to 30% of people and do it consistently. And it's the way that I've always viewed poker as well, because poker very much a psychological, statistics, mathematical game, very much reliant on the probability of outcome and the probability of result. So in this case, your edge in poker can be vastly different. There's different factors to take into consideration, but it ultimately boils down to whatever actions you are taking that kind of turns that statistical outcome slightly more in your favor. Knowing the outcome probability in this case for trading, we know on average 15% of people are going to make it and 85% are not going to make it. So edge, I feel like, is whatever you do, not a single thing. Not it is mindset, it is strategy, it's the whole encompassing thing. And I think that a lot of people want to think of edge as a singular thing that you do. How do I find edge? You don't find edge, you decide edge. It's like I'm looking for a purpose,
you do
and
find
you decide upon
per
it.
se as well.
No, but like, what I mean by it is that it's not a
it's not
single
something
realization.
you stumble upon. Yeah, you don't stumble upon it. You have to discover it.
Yes, I think discover is something a little bit better than finding, because finding feels like it wasn't really done on purpose. Where you discover something, there's intent. It's the alignment of words and actions, making sure that if I intend to do something, I do it, and that eventually leads to what I want. And in this case, that is edge. So that edge can be a multitude of things, and you can once again make it as simplistic or as complicated as you want to make your edge. But edge is not a singular thing that I can give someone an answer and say, well, the edge is this thing. And if you can conquer this thing, you're going to be a great trader. The reality of the matter is that it's going to be different from person to person, and it's not necessarily going to form fit. I mean, you know what's the funniest thing for me is every time any one of the hosts comes on the live stream and we have questions, more often than not, every single person that's on here is going to have either a different viewpoint, is going to have a different approach, is going to have a different strategy, different things that they look for, and so on and so forth. And pretty much every person that has come on here would probably say the same thing, in the sense of like, oh, their edge is this, or their edge is that, or their edge is the other thing. When people ask questions, they expect a singular directional answer. This is a path that I can follow in order to make this a success. When the problem, or the reality is that it's a tree with many branches and many roots. You're looking at only the stump. You're only looking at the base of the tree. But if you look forward, you realize that there's so many branches and so many different directions. But also at the same time, if you look back and you look at the roots of the tree, you realize that there's different areas where it comes from. And each one of these has some semblance of impact on what that tree's branches are going to look like. So you think that there's one path, but there's so many. It's so vast and it's so different. And it's realizing that you are going to choose something and you make it work for yourself, or you decide, this doesn't work for me at all, I move on to the next thing. So edge to me, I feel like it's the same with the psychology, exactly like you were mentioning just now, LJ. People think that psychology is this magic pill that is going to sort out and fix every little thing that, that they have problems with in the market or any aspect of life. And then they realize that psychology is a literal daily thing. It is a thing that you have to practice every single day. It's the same as patience. It's the same as resolve. It's the same as commitment, motivation, any of these things. You have it until you don't. You can easily lose it. It's difficult to find. It's even more difficult to maintain. It's a long process. It's a long journey. There is no simple yes or no, right or wrong answer for it. And it's always going to be a journey.
Indeed. That's exactly it. I mean, we spoke about this yesterday with high-tier athletes, right? It's the same thing. Like how many of the guys in NBA can shoot three-pointers? Yeah, probably no problem. How many can do it under pressure in the game? Now, is their ability to do it in question? Or is it their psychology once they're in in the game, under pressure, under time pressure, under other people trying to compete with them, that kind of thing.
The
Right?
same
You got,
boiling water
Steph
that
Curry,
softens the potato hardens the egg.
Yeah, literally.
Right? Yeah. So that's where, like we were talking about yesterday, these things oscillate. But yeah, edge ultimately is, like a bunch of you guys have said in the chat as well, you create your edge, that kind of thing. You just got to understand why it's actually happening. If you apparently got edge or you're making money, but you don't really know why, I would throw up some big amber lights right there. It doesn't mean stop because you got something, but you got to figure out, why is this happening and when is it going to end? What's going on?
Yeah.
So you do have to understand where that edge comes from. Like, why does this work? What is the rationale? Not just I did this thing and something else happened. Because there could be, especially in finance, in trading and markets, there's 800 other things going on in the market that might have propelled that to that level over time. And you think, oh yeah, I can just do this. Yeah, I picked this certain complex on gold, and for the past year, it's just gone up and up and up. Every time I see this structure, it goes up. It's, well, no, gold was just running up in general. So you could have picked any other structure, and if you've placed the stop at the appropriate amount, it would have just gone up. It's not whatever you were doing. It's just gold is going up. Right? So that's very different to understanding why and how, where your real edge is the fact that gold was being bought. It's very in favor. We've got the geopolitical sphere going on. We've got all the central banks buying gold. We've got interest rates starting to come down at the same time as geopolitical escalation coming up. ... And you'd be like, oh, well, I saw this go up, that go down, and then I bought. Like, that's not it.
Yeah, and then you have a random Trump tweet, and then, oops.
True that.
Like, okay, so I wanted to just also address that because it's edge also accounts for unexpected events as well. It's to a degree, let's rather say. Like, I'll go back again to the poker analogy. When you're playing poker, Texas Hold'em, you have a table of people. You're playing against a bunch of people and their decisions and their strategies. It's not I'm against the dealers, the casino, whatever. You're playing against other people who have thought, strategies, and ideas of what they're trying to, achieve. And you're participating. And you're participating on a round-to-round basis. You have to take into consideration that it's much like a chess move. You need to think of multiple outcomes and multiple moves in the event. Even if it's not happening, you need to be prepared for it. So be willing to... What was the thing that I used to say? Man, I've literally gone and forgotten it. It's not expect the unexpected. I'll remember now. I'll just blurt it out just after a little while. But it basically boils down to, even if you are making a decision, you need to make sure that you understand the decision that you're going to make, how this decision is going to impact everyone around you, and how everyone around you's decision is going to impact you. And you need to be sort of ready to it. Or you need to be ready to kind of divert and say, look, this is causing me too much pain. I need to step back from this. It's that awareness, being willing to look at the market and say, I can't just enter without thought, rhyme, or reason. Knowing that a Trump tweet can just as easily break my expectancy, can cause me to lose money and so impact me in, like financially, emotionally, physically, and all of that kind of stuff. And just realize that it was a singular moment. I'm not going to allow this. I'm going to be ready for it. I'm going to move on. I'm going to pay attention. You might start making different decisions saying, okay, I'm going to start following Trump just to be sure that when he sends something out, I'm not taking a trade while he's awake. I'm just using it as a stupid as an example, but you kind of like get the idea. It's being ready even though nothing's going to happen. But not being worried by it, but just understanding what it is that you're doing and knowing that when you're going to move forward to make a decision, that you've kind of taken into consideration that there's other people also making decisions that's outside of your control.
Yeah, exactly.
And nothing that you would have done could have impacted it.
Yeah, you got to expect it, even if it is expecting a egotistical orange man in America to come up with God knows what sort of garbage. Even then, he could move the markets exponentially, but you've got to have some form of risk parameter in place. Oh, LJ has disappeared.
Is it LJ? Yeah.
Yeah. Well, I can still see and hear you, and I'm assuming you can still see and hear me.
Yeah, no, I can still see and hear you.
Cool.
I think it's LJ.
Yeah, but building on what you were just talking about, you've got to have those sort of risk parameters in place. It's like someone asked me earlier, did I consider re-entering in gold here after this engulfing candle? No. Why? Because I had rules in place. I had areas where I thought, okay, if it comes down to this area, if it breaks and closes under this zone here, I'm not going to re-enter, or that'll take me out of the trade. Why? Because of this reason. That is my edge. The ability to actually put in risk parameters, rules, and have them all merge into one to create a
alignment.
To create that alignment on why you are trading, but also why you're not trading. And I think a lot of people don't understand, that, not trading is trading. And what I mean by that is literally the decision to not enter this trade here, even though it came back up to my entry point. There's a reason I've done that. I've thought, right, okay, let me do a risk assessment of this trade, or of anything that could potentially happen future from here, like post this move, like anything after this move. What, is there anything that I can put into place to prevent? Yes, not trade it. Just leave it alone. I've taken a stop. How much was the stop? 1 hour, half hour, 2 hour, whatever it be. Is that right? Okay. Am I comfortable trading more? Yes. Okay, cool. Am I comfortable trading more with this price action? No. Okay, cool. Don't trade. That's also a sense of strategy. That's also a sense of risk management.
Dusan Alex saying, Richard, do you have any educational videos on YouTube, either about psychology, strategy, trading in general? I do not. You get to listen to my mundane voice Mondays through to Thursdays right here on the live stream. That's where I am. So, yeah, you can literally just rock up every single day. And I'm pretty sure somebody is going to drop some sort of, I don't know, nuggets. We do mostly talk shit from time to time. But when we do get serious, I think it's usually when... Yeah, I think when we are serious about something, we try to give as much value as we can.
Yeah, I mean, we're on here day to day, every week, whatever. So eventually you're going to start having a bit of a laugh. It also gets boring for everyone else if we're just...
Yeah, if we're just constantly yapping about the same stuff. And that's why, Henry, let me show you my poker edge on Friday. Is that Texas Hold'em? Yes, it is Texas Hold'em. And you're on, baby.
Let's go. Come on. We can play proper.
Yeah, we can. I think that Yvonne is saying, I think the edges are present in the market rather than strategies. That some traders like you guys have skills that exploit them. If the edge was in a strategy, then it would work forever. Here's the thing. Edge doesn't last forever. No. Because edge requires input. It's the same as going to the gym and trying to build muscle. If you don't go to the gym, muscles start decaying. So there's a natural decay to edge as well. And so long as you're putting in effort and input, right effort, right input, you can either maintain or you can improve. Yeah, use it or lose it. But there is a natural decay to edge in general.
It lasts until everyone else figures it out. And then obviously because everyone else is jumping on the same trade, then the trade doesn't kick on, right? Simple as that.
Exactly.
It gets deleted, right? So the best way is to go to what other people are not looking at, what they're not doing. Hence, you'll find a greater degree of alpha overall. And that's what everyone's looking for. That's why funds still employ certain people, big brains from universities with, all the smarts right there, and then sitting down and say, hey, try and find everything that everyone is not seeing, and we're going to pay you a heap of money for you to go and do that. And then we're going to deploy it. So exactly the example of most of the stuff you guys see online is not going to be of very much use, which makes it very difficult.
I actually spoke about this yesterday as well. 90% of the gurus out there teaching you a strategy. The ones who are actually worth listening to don't teach you strategy. They teach you how to read the markets. They
teach you how to find strategy, how to find those
how
exploits,
to read the
find
market,
alpha.
how
Not
to
telling you
understand.
what it is. Not telling you this is this gap or that gap or a fair value thing, or this is the wick and that's the thing and this is how you do it and this is the structure. And if you do it outside that, you're wrong. No, obviously. What?
Yeah. One would think that common, not common knowledge, but like, what's the other one?
What do you mean? What's the other one outside of common knowledge? What do you mean?
Common sense.
Common sense. There we
sense?
go.
Yeah.
Yeah. Common sense is not so common, is it?
Oh, yes.
You'd like to believe it is, but no.
No, I mean, that's the saying.
Yeah.
Common sense is not so common.
Yeah.
The other saying was if the milkman tells you about trading a stock, it's too late.
Yeah.
It's the idea that if everybody's jumped on the bandwagon, yes, thanks, Abdos. If everybody knows about it, it's too late.
Yeah. And then there are some core things that if everyone knows about it, it's not too late because they are core factual things of like society and how that runs.
Yeah,
for instance,
sometimes you need it for everybody to know it in order for it to do a thing.
Yes, you need everyone to eventually come to that conclusion for you to actually profit from the trade. Like you're always trying to take it early before everyone figures whatever that thing is out, right? So an example would be the stock market. Like generally the stock market goes up. Why? We have currency debasement. The capital base continues to expand. Everyone knows this. So you keep investing in it. Yes, it goes up. And that's one of the things where everyone knows it, but it keeps working because that's just a factual base. But that's less alpha. That's more beta. You're just keeping up with that base of expansion. And hence that's where you learn to differentiate what is just beta versus alpha, right? So you take like hence we benchmark against like the S&P as the base level returns. That's just beta. You're keeping up with the market. Everything over and above is then alpha. So it doesn't mean you can't make returns, make good living, good profits by following this other stuff. You're just not going to do excessively well, right? You'll just be keeping up with the Joneses, keeping up with inflation, keeping up with the general economy, markets, global economy, where they go. Like, do well in stocks. Wow, house prices came up. Oh, everyone else's stocks came up. Hence, food, inflation in general comes up the same rate, and you're like, oh, I didn't really go anywhere. So hence, that's why we look for alpha over and above those kind of levels.
Yeah. So we have Saul that's going to be joining us in roughly, what is this, about
half an hour.
Yeah, half an hour. There we go. So I just wanted to make sure that everybody, if you want to see Saul do some live trading, which he generally does, and man, is he good at it. For those of you who don't know, Saul is predominantly a scalp trader, very much in and out of the market very quickly. But his edge, I feel like, if we're talking about edge, is lies in his ability to manage when and how he gets in and out of a trade. So you'll notice just pay attention to this. When he takes a trade, he adds certain positions and exits certain positions as he's taking his trades going up and going down. And it might not look fancy, but man, is it effective. So do pay attention to that. So in half an hour or so, in the meantime, we have two great traders in the background. We're just waiting for them to set up. to take over the rest of the segment. Thank you to everybody that has joined us so far. If you haven't already, please drop us a like, drop us a subscribe, and hit that notification bell. If you've hit the notification bell, you can see when we go live. We've had a little bit of an issue with the live stream not coming on the For You page or on the suggested page on YouTube. And it seems as though it's starting to slowly work its way back into everybody's favorites. But just to make sure you don't miss anything, just hit that notification bell. It helps. And then, like I said earlier, next week, we're going to release a information about an event that's going to be taking place next month. So keep your eyes and ears open to us here at the live stream, your socials, or our socials, as well as your email addresses. Something is going to release there. I'm very excited for it. I think it's going to be great. It's going to be so much fun. So yeah, I can't wait for that.
Brilliant.
Yes. Anyway, guys, I'm going to have to love you and leave you. I'm going to have to shoot off. I'm going to go get some lunch and then continue my boring admin stuff and go journal this trade. Go journal this trade as well. Just to summarize today, this is the only trade that I've managed to find. I did take it on both my live account that I trade on stream and my play account. It did hit stop loss, real shame, but you know, I'm a bit gutted it hit stop loss given that my analysis was beautifully played out. I did have my TP initially at 4,500, but then I also did take a look at the zone and take a look at the lower the zone, and it also would have been a 2R, so I suppose I could have refined my my TP a little bit, but nonetheless, it was still would have hit no matter where my TP was. So my overall analysis and bias for this trade, or for the trading session during London, was pretty bang on. It's just a real shame that we came down and you know, whipped me out at this lower zone. But it kind of makes sense. You know, I've already done my post-trade analysis and I've made peace with it. It kind of makes sense on why it happened. But nonetheless, that's my only trade for today. That's the luxury about having a good risk to reward, is that, you know, I could go back onto a 2 or 3 trade win streak and just completely mitigate all those losses. I'm still up for the month, which is nice. I'm still up 1%. So anyway, guys, on that note, I'm going to love you and leave you. Make sure, again, you do make sure you smash that like button, subscribe, and click the bell notification. But in the meantime, peace.
Cheers, Sir William. Yes. All right. I just heard the dingy ding.
Team coming in. Oh, yeah. How are we doing, guys? Oh, Victor's gone. How are we doing?
Oh no.
Hello, guys.
Oh no.
Can you hear me?
Oh, Victor's back. There we go.
All
right, you guys are
Samir,
back.
your volume is
Should be
very
fine.
low. Ah, there we go.
No, now it's better. Yeah.
All right.
Yeah.
Hello, guys.
What's up,
How
Samir?
are you?
What's up, Victor? Good and you?
Hi.
It's good. It's good.
Good.
How
Doing
is everyone watching? I am doing well. I'm digesting
What are you digesting? Lunch? Markets?
lunch. Just ate. I'm digesting.
What was lunch?
It was a goat cheese salad with sun-dried tomatoes with a vinaigrette. Yeah, it was great.
That sounds
Lovely.
pretty good. I'm going to go cook some eggs shortly, but I think I'll just be eating eggs. That's it.
Nice.
Which is
cut right
a solid choice.
So, been back into training and that kind of stuff. So
Smart man. Like that. I had a Cape Malay chicken roti. That was my lunch.
Nice. Roti.
what is a Cape Malay?
Ah.
What does that mean?
So Cape Malay is a kind of spicing that we use. It's derived from the immigrants and the travelers that came to the Cape of South Africa way back in the 1600s. So it is Malay spices added to curries.
Ah, okay.
And it's slightly sweeter, sometimes has something called sultanas in it, which is dried raisins. That with a...
What's a sultana?
It's a dried raisin. It's a very specific grape, a sultana grape.
Why did you have to explain that? Doesn't everyone know this?
Just in case they don't.
Fair enough.
Yeah, in
Continue.
a roti. Delicious. It was delicious.
Nice. That's good. Peace.
Samir,
Yeah.
what did you have for lunch?
Butter
Actually,
chicken.
it's 6 p.m. here. I haven't ate anything. Yes, I just had some fruits, did a workout, drank protein shake, and after the stream, I will take my first solid meal.
Which will be
Nice.
what? Tell us.
It will be just normal, some kind of chicken breast with some rice, some kind of rice ball type of thing, that
Nice.
I'm planning to eat.
Eating clean, I hear.
It's the ones
Yes,
that
I'll try
exercise
to.
that want to eat clean.
I try to do that.
Those of us are
Beautiful.
trying to get swole are going to eat clean.
All right, guys. I gotta tap out to do exactly that. Go and cook my food. So, because I'm just like Samir, I have not eaten. It's now 10:30 p.m. my time. I still need to eat something. This will be my first meal. So, I'll see you guys again tomorrow. Until then, good luck, and Saul will be around soon. You guys waiting?
Yes.
So,
Yes.
see you then. Ciao. See you guys.
Enjoy your eggs, LJ. Take care.
I am
Thanks, Victor.
also going to have to hop out because I have to do a few things before the end of the day. So, Victor and Samir, I hope you guys have fun today. And once again, to everybody in chat, thank you very much for joining us so far. Please be kind to Samir and Victor, and do look forward to Saul joining in a little bit to do some live trading for you guys. All right, I'm going to love and leave you all and see you all tomorrow for
Take care.
the last stream of the week. Cheers.
Richard,
Take care,
thank
Rich.
you very
Thank you
much.
so much. All right.
It's
So, how are you, Victor?
it's not chicken butter, but it is Richard Butler. So yes, I'm doing fine. I'm doing fine. I'm
That's
just being
awesome.
fun, just playing with words here. I'm having chicken butter later today, so that's why I mentioned that. How is everything on your side, Samir? I'm excited. I'm excited for because not in about what 20 minutes or so, if
Mm-hmm.
time permits, Saul, busy schedule, our CEO, for those who don't know, we will be sharing, an hour or so, a little bit less than an hour, with him, watching him trade, and that's always exciting. I mean, it's you always learn something from him. I mean, it doesn't matter, what level you are, you still there's things to be learned from a seasoned trader like Saul. So
Yeah, exactly. So I haven't taken any trade yet, but today's price action is looking. I'm just giving a first look at charts, and you can already see my screen. I'm just viewing some. Yeah, it's not really the cleanest price action today, and I think yesterday I requested my payout. Also, I'm waiting for that. So even if I trade or not trade today, that's fine. If I see the perfect setup, then only I will place the trade. And guys, you will not get bored because Saul is gonna Saul is gonna take trades live. So that is gonna be amazing. You are gonna witness that. And I also like the way he trades. Like he's very quick in actions, close the trade, open the trade whenever he see a pattern, which of course his pattern. So yeah, that's awesome. But here on the charts, nothing too special today. I can take a look at other pairs or other asset class, but US 30, maybe we can take a look at this area, potentially retest of this area, and probably bounce of this area, going to the 2 hour, 4 hour. Yeah, actually, the point is that if he came down this much, I think we are gonna take out these lows also because that will be some kind of momentum coming in. And we also took out this low. Let me do it for you guys. Okay, we took out this low. We are trying to respect this area. We are trying to push to the upside. Seems like it, because we are seeing some kind of volume picking up here. We can observe it. The candlesticks are, showing you that kind of volume. So I think we can take out these highs today. So the bias should be bullish, but now comes to the entry where we can enter. Can we enter around this area? Okay, actually we have a better area here because we have small fair value gap here and we have this demand area and there is also this 1 hour area. So why not to wait for price to tap this area? We will have a better entry, and if the trade didn't play it out, because this is the last zone from where it should go to the upside. So if it didn't play it out, we will just say our analysis is invalidated and potentially we can look for sells after that. If there is a stop loss, there will be a structure shift. There will be some kind of area from where price can go down. We can target these areas. So that will be the game plan for today. More focus will be on buys, but if we took a stop loss on buys, I am open to take some sells also if we see some kind of price action here on US 30. So this is the game plan for me today. And we can also, impulse to the upside. So in that scenario, what we can do? So let's go to the 30-minute and let's try to figure out what can be the game plan if price impulsed to the upside. This is the area where we may can see some kind of reaction going to the 4 hour, 2 hour. Okay, this is the 2 hour area. We can refine it down to maybe 15-minute or 5-minute. Let's see. Yeah, this is a huge wick from where price just melted down. So this may can get a retest. So I think this area that I have based off of 2 hour, so it makes sense. So we can look for some kind of selling scenario around this area. That will be the game plan for sells. But of course, buying makes more sense. And we can talk about NAS 100 also. This was a beautiful trade we took yesterday. Actually, I didn't took it, but the analysis was shared with our viewers, with you guys. So this was amazing trade. We was planning for sales around this area. The entry pattern was on the 1 minute. We was just waiting for price to show the momentum to the downside, and it did with this candle. So this was the entry candle. So amazing trade. Just look at the impulsiveness. Price closed on the VWAP, retested the VWAP, and the target was of course all the way to the downside, these lows. And you guys have often seen me, I talk about these kind of candles having no wicks. So price try to make the wick in future, which it did. So this was the target for NAS 100 to the downside, which was amazing. But I know this will not help you. Of course, it is going to help you if you take some kind of notes like this concept that I shared, that candles having no wick. Maybe you can utilize this in your trading strategy or your plan. But what NAS 100 can do today, I don't trade NAS 100 that often, but still let's do some analysis. For that, let's go to the daily time frame. Okay, this is the daily high. And okay, we have a very small fair value gap here. In case price showed way too much momentum, we can also tap the fair value gap. You can never know what kind of momentum price can carry in that particular trading day. So you can utilize few entry patterns that you have for yourself. And okay, now we have a question here. Let me read that first. Okay, I can see you're looking for buys Dow, but will you wait for candle close above the structure or confirm BOS or no? uh, I'll share my entry technique here on NAS 100, so you can utilize the same information and you can apply that in Dow also. Okay, so first of all, we have these two areas, and let's mark this area also in case price took out the liquidity and try to flip all the way to the downside. That can happen. So yeah, yeah, I'm seeing some comments here, guys. Thank you so much for engaging. Okay, I'll share the view on gold also, don't worry. So first let's cover the NAS 100. All right. And guys, if you haven't liked this stream yet, make sure you show some support so that we can bring new things to you guys. So, all right, let's go to the 1 hour straight. 4 hour, do we have anything? We have this kind of huge resistance. 2 hour, not that high quality supply area or resistance area, in my opinion. Going to the 1 hour. Okay, 1 hour from here, price showed a impulsive momentum to the downside. At least this leg was impulsive. Of course, here it went in a corrective way. Going to the 30-minute, do we have any information? We have this fair value gap, but the problem is that this is the daily high. So why to take a risk from here when you can have a better entry around this area if you are looking for sells? So we are not going to take the risk here. Why? Because this was the candle from where the impulsive momentum started. So I have noticed like these type of areas do act as a liquidity areas. Sometimes, when there is a leg, that leg is to be used as a supply area. And sometimes a leg is to be used as a liquidity area. You might be wondering, how do I know this? It is just experience observing how price behaves, or how some kind of momentum price is carrying in that particular leg. So the momentum price is carrying, I do think this can be used as a liquidity area. We should not use this as a selling area. If we are looking for sells, we may can sell around these areas. Okay, I will cover that, but let's take a look at NAS. Okay, this area is looking very interesting. If NYSE came up with the volume, something like this, I am open to take some buys around this area, and we can easily expect price to tap this area because this is the fair value gap, and price tries to, okay, we have this resistance area also. Why to expect way too much? We can even target this if we got the opportunity. Let me make it a little bit refined here based on the 15-minute. This scenario looks very interesting to me, looks promising to me, because these type of supply or demand area, in this case it is a demand area, it do act like a, or I can say it works well. So, and you was asking the entry pattern. Let me show you the entry pattern on here actually, so that you can know what I am looking for. Once it gets to your area, what entry pattern you can expect. First entry pattern is some kind of correction in that area, and second entry pattern can be inverse fair value gap and price closing below or above the fair value gap, depending upon the situation. In this case, it was a selling scenario, so this was a bullish fair value gap and then price closing below. This is the first entry scenario, and the second entry scenario can be some type of this behavior. Price is consolidating, spending its time in that particular area, struggling to break that area. We can utilize this information and we can say, yes, price is consolidating. Maybe we can push to the upside as we are losing the momentum which price was carrying in this particular leg. I'm just giving you an example. So here I will look for similar scenario, or either price is slowing down or we are seeing some inversion, and we can take that opportunity to the upside. To be honest, NAS 100 buys are looking more convincing, but the problem is that I don't have a good win rate on this pair. So of course these concepts do work on NAS also, but I have a little bit more confidence when I'm trading US 30, and both of the concepts do work on both of the pairs or asset class. I'm not sure about gold. I haven't tested this thing on gold, and I don't think so it is going to work good on gold, to be honest, guys. But we can share some thoughts on that. So here buys make sense, and the entry pattern will be the same pattern, which is gonna be some kind of slowing down of momentum or some kind of inversion. So that is the game plan for today on both of these pairs. So I hope you guys are getting
Nice.
my point. Yeah.
Nice. I think that's very useful for our viewers to get your idea right on Dow, on the other what other scenarios you're looking for on the NAS as well. I'm gonna be sharing my screen. Let me switch to mine. That's we have about 8 minutes before the turn of the hour, and anytime our CEO can get in, Saul can get in and start showing his screen. So let's get going. I have a couple of things I want to share with you guys. One is the EU, which we always come to. At least I come to, every day. That's the GU and E, or the assets that I trade the most. We can see on the higher time frames that we are Actually, on the monthly, you can see that after we had the interaction with the supply zone, the monthly supply zone above us, that everything changed, right? Market is not at all, and even if we, without going to the lower time frames, you can see this, the market is not being able to, um, put the buyers are not being able to put down their feet. They don't have a grounding. They keep on getting pushed lower and lower. And actually, we'll have to wait to see what the market does from other structures, maybe from a weekly or some new structure that we don't see yet. And if not, we are going to be looking to, price going all the way to the opposite direction, the same time frame, which is the order block we have right here. It's still, there's a lot that can happen. This is on a monthly, but just to give you some idea how we are positioning. The other thing that we have here is we have a weekly quasi that is, give a little more granularity from what I just explained. We have the monthly structure, which is still being seen here, and we have the reversal pattern that is on a weekly. That's a very, very large quasi that is very powerful. Right? You can take multiple trades on when this hits and when it signals and when it positions for a move down. And you're in luck because last week, that's exactly what it did. We have the established uptrend. This is the left shoulder, the head, the neckline, and price goes back to a wide, very wide order block on the weekly time frame and had a couple of reaction, actually just two. One was this upper wig, didn't really signal anything, but then we had a surgical reaction, and I say surgical without exaggerating. The lower border of this order block, as you can see here, is 1.17963. And the high of this candle, the one that the second time it interacted with it, you can see it here on the H, is 1.17967. We're talking about 4 pipettes here, at least on this price feed. And this is the weekly time frame. So just so you know how surgical the market can be sometimes when it moves. And what does it do on that second time we got there? We get a very beautiful bearish engulfing that indicates, what does it indicate? Sellers got in and pushed price, to control of those two candles, meaning those 2 weeks, telling us they are back in business. They are, on the attack. And I don't see anything. There is nothing to the left all the way up to the next candle here or the next order block, which is where most likely we're already heading there, but we're going to be reaching. That's why if you watch my screen from maybe, I think, probably from, I don't know, a month ago, you would see that this target, if you go back to YouTube, because obviously everything is recorded, you can go back and see that this TP was already there back then because of this order block. And I didn't know because, how deep it will penetrate this order block before it turns around. But, once it does, that's going to be likely the area that you can target. And we're talking about here about what? A move of about 244 pips. I don't have to explain to you, but I mean, that's plenty to be caught for any type of trader you are. If you're a swing trader, if you are a day trader, even if you're a scalper, if you know where the bigger move is and you just position yourself, with that bias, you're going to be having a higher win rate. You're going to, make more money, as simple as that. All right, so that's the weekly. On the day, on the daily time, the weekly time frame. The daily showed us a more granular, even more zoomed in, uh, you know, uh, picture, which is basically this. It's the same, but with more zoom. And we had the reaction on a daily order block from the left, which I'm not talking about, but it is there. I left it there so you can see how beautiful the market reacted. We went to one of the 3 areas, and it was the first one. We got one indication right here, the second indication right there, an outside bar. The market came back for a second retest. So you could say, which is the same surgical point that I remember that I mentioned first. And then we had on the 2nd of the 12th of May, you had an outside bar. And I was waiting for price to come back to that area because that's the way that I trade, to get in to that move. So I couldn't get in, and I'm not in that, not capturing that move. I'm just getting pieces of it as it goes down. But it doesn't always align exactly to the way that I trade. I was waiting for price to come back to this area where that I would be than getting a short in, and I would be these are the moments that I would definitely try to hold that trade for longer. I would have a daily target. I talk about this a lot. I'm a day trader most of the times, and at certain occasions where everything lines up, the stars lines up, and I have these kind of higher time frame alignment, I can actually hold a big portion, a relatively big portion of that trade all the way to the target on the higher time frame and actually capture 200 200 plus pips, in any case above 100, but sometimes over 200. And it is with the same tight stops that I get all the time. If you know me a little bit, my stops are sometimes they can be up to 10 pips depending on the volatility, but a lot of the time it's 4 pips, 5 pips, sometimes 3 pips, even lower sometimes, but that's even rarer. But anyways, the point is that the same trades with the same tight stops of maybe 4 or 5, 6 pips, I then hold them to this bigger target. You can just imagine what kind of R multiple we're talking about. But it doesn't happen very often. It's only when everything lines up, all the stars, lines up, Venus, Mars, Jupiter, etc. Just making sure you guys are awake. So, anyways, this is that's the that's the EU, and this is the area. So what happened? We had a break of a bullish structure, right? So clearly the market is telling us it's not done yet. We had a creation of a bearish structure, right? The market cannot be clearer. It is still bearish. It hasn't turned around yet, and that's the bias you should have, right? As long as the time frame that you trade hasn't switched, there's no need for you to think it's going to reverse before it actually shows you some kind of reversal pattern, right? So there was a bullish order block, but it never build all the alignment with the other time frames to show us that it wants to go up, and eventually just broke it and continue lower. So we can take that off as well. This was a very beautiful H4 order block that was reacted. I didn't, the market sometimes, it doesn't, it was invalidated right there because of my rules. And that's why that particular entry I couldn't get. I had to, get in other entries, other entry models, which are not the main strategy, but scalping mainly, to be profiting from this move. So that's on EU. Let's see what we have. We don't have a bullish order block, but we have in about 17 seconds. That's timing. In a couple of seconds, this is gonna close. And I was timing when I was gonna say anything, because this to me it could be the beginning. In 5 seconds, if we end up closing as a bullish engulfing, that could be the first beginning of me looking for a possible pop, and it didn't happen right there. Didn't happen. What does that tell us? It means that the market is still weak for buyers, and yes, it can still, without an H4 structure, it can still reverse and have a pop, but it's not going to be a very lasting one, most likely. Okay, if you go to lower time frames, there is a bullish order block here. On the 1 hour, there is another one here. So I'm keen to see if the market is able to bounce off of these. It's not going to be the main strategy because it doesn't have the H4, but it can still work. If you see the reaction of the lower time frame on the minutes, I can still catch something, and maybe 10, 20, maybe 30 pips, something like that. Not too much, because the market is, it's not ready to be ambitious. Just to the next level. If that's 20 pips, then so be it. That's AU. Let me check here. All right. As we are, what else? So because the hourlies are not set up, they're not clear. To me, there's no point in going to the minutes. I'm not going to be watching, price action that is still irrelevant to me. It becomes irrelevant when I have an H4 and the market actually reaches this area, that I can start thinking about going to look for a long, that is. All right, so that's one thing. Let's take a look on gold, perhaps. Let's take a look at the chat. Someone in the chat Let's see. We have. Let me read there. Uh, Thank you for those who are watching and reacting on the chat. We appreciate your engagement. Someone is asking Samir's YouTube channel, and it is Banks with Sam, right, Samir?
Yes, it is Banks with Sam. So, but I'm afraid I'm making in my native language. So maybe you will not able to understand. So yeah, that will be some kind of
But
barrier for you.
doesn't YouTube nowadays automatically translate the voice as well?
Yeah, but it is very it is not accurate. I have tried to listen my own videos in English dubbed.
Okay,
It is not that accurate. Maybe you will not enjoy the videos that much with the original language. So maybe I'll create another channel for a global audience. We'll see. We'll see.
perfect. We have a question here from Dusanalik. Thank you for that question, Victor. How are you able to trade on a 5 minute and do your monthly, weekly, daily bias? I've been struggling for 4 years, trying to do the same. Now I try just to write a trend using Fib on a 5 minute if aligned with the 1 hour. My friend, you've done things correctly. You don't have to match. It's not a competition. There's so many ways to trade. And if you found your way using this combination, then by all means stick to it, improve it, be a master of this skill, this combination, this strategy, this plan. Make it yours. And I can hear that you just did that in your message. But to answer your question, um, the fact that I start from the monthly, it just to me, very personal, but to me, and I think in my opinion, in my humble opinion, everyone should be doing it, right? But that's because to me, that's what helps me. And that may not be actually the case, but I would say it still. I think everyone should do it. Why? Because it gives you a panoramic view. And the fact that I start from the monthly, then I go to the weekly and the daily and so on, doesn't mean that I trade them in the sense that I check them every day. To me, it's like a routine that I do, and it makes me aware of the higher time frame. And most of the time, the monthly, there is no action to be done based on that time frame. The weekly also. However, now we just saw on daily that the weekly is in play. But how often is a weekly in play? Not very often. Okay, weeks can go by and there's nothing to do on that time frame. Monthly, even more, even longer. So even though I check them, it just it's like a summary for myself to refresh very quickly. Now I did a couple of minutes on it, but usually I go through it when I start trading my day. I just go through it like 30 seconds, right? Very little. I'm just I ask myself a couple of questions and I move on to the weekly, a couple of questions. And if there's nothing, I just move on. It takes me less than a minute, perhaps. But so to me, those time frames are just in case that there's that alignment, that star alignment that I talk about. The rest of the time, I start on the H4, right? So I start on the monthly, weekly, daily, and most of the time there isn't anything to do there. And the only when and most of the time the daily does give me more actionable ideas or things to do. But most of the time there isn't. Most days they're not. There isn't anything. So I start on the H4, and on a given day, I may not get a setup every day, but if I do get, I may get up to 2 setups, and one setup may offer me multiple entries. So it still gives me a lot of trade frequency, enough for me for the way that I like trading. And the other thing is, so my alignment is the 5 minute with the hourlies, and that's my alignment. What you're doing 5 minute with the HM is not different to what I do. I'm doing 5 minutes with the hourlies. Now I say hourlies, but because it's not the H1 only. I need overlapping of the H4 and the H1, but it's basically the same thing, right? It's an area that is defined by those time frame, the hourlies, and then I combine my entries with the 5 minute or lower time frame, meaning 5, 3, 2, 1 minute. Um, I think the same person just earlier had this discussion about KISS, keep it stupid simple, a very, very strong rule that is. And honestly, your view of trading is overcomplicated to me with so many areas of points of interest. So congrats on the trade. No problem. There is, I understand this and appreciate your feedback. And actually, I think it's a good thing what you did there, by recognizing what resonates with you, because we say this all the time. We have so many ways of trading, and you can make many of them can be uh, honed or can be improved into a profitable, durable, lasting edge. And I think there is so much power in keeping it simple. And even though, because I have multiple structures and things that it may not look that simple. Um, to me, it's that's the simplified version of how I trade. I'm always trying to make that. And there's another thing as well, right? Because right here I have multiple structures, but I'm I'm wired myself through the years by asking myself, whenever I see, I'm asking myself, okay, where's the H4? That's the first question I ask myself. Where's the H4? And there's usually one or two areas that is the answer. And that's it. Everything else at that singular moment in time fades away. And I'm only focusing. So I'm asking myself, okay, where's the H4? And in this case, there it is. That's the H4. And everything else I'm not interested in. So I'm selective and have a certain, I don't know, certain workflow, mental workflow, that I ask myself these questions, and I'm only focusing on the answers of those questions. And everything else it's there. I see it, but that doesn't bother me. And the next question I ask is there something on the H2? There isn't, or the H1 that is interested to me, and I look only to this part, and all of this and all of these structures, everything else just fades away in the background, and I answer and I say, yes, there is an order block here that I'm interested in. That's it. You see what I mean? It's about focusing. It's about thinking about, let's say you are in a big field, and you have two types of lights, right? You have the floodlights that illuminates everything, which is great. But where do you look at? Or do you have like a beamer, like a focus light, which only focus on one particular area of the jungle or whatever area you're in? I'm kind of using the focus light here and not the floodlight. So even though you see the whole jungle, I'm only interested in a couple of things. And to me, it makes, it's, anyways, I hope that explains to you. But I appreciate that I think it's a good thing to not to, for your personal tolerance, not overcomplicate things, and keep having that pressure or that intention, to the tendency to simplify your process all the time, constantly, right? Because there's always things we think about, we say, we think, okay, this might help me. That's an extra rule, and it's fine, because you need to explore to find and improve your skill all the time in your edge. But you'll have to also have that other tendency to simplify things and take away things that are not as useful, or are not responsible for the biggest part of your edge. Right? There are tiny marginal wins by these extra rules, but if you eliminate them, you end up with the bare bones of what works, and usually that's what is meant with KISS, that KISS rule. All right. Some No problem, no problem, my friend. Keep those great question actually coming in, because it shows us your guys are listening. It matters to you, and that's all that matters to us. I'm here. Samir is here. All the hosts here. We have one sole goal and mission, is to connect with you guys on the trading level. Connect with you. Share whatever knowledge, experience, flaws we have, so that we have you learn from it, and in the process, we learn as well, right? So we're all in the same boat. So thank you, my friend. Okay, let's see. We have. Let me take. Let me take a look again. So we have gold. So let's do the gold analysis very quickly, if that's okay with you, Samir, or is something pressing on your side? Maybe
Yeah, that's fine.
some VWAP calling your
No, no,
name, telling you. Okay, all right, all right. Okay,
not
so
right now.
okay, that's fine.
Yeah.
So we have on the monthly, we have the bearish order block that was created. We had some immediate retests, which are not considered the first retest. Sounds a little confusing, but ask me if you point is the first retest is one which is clean, where the candle has been completely without has been created without touching the order block that it's going to retest. Okay, if that's not too clear, I'm gonna make this. So let's say you have one candle goes up. Maybe I should do it with something like this. Let me make this a little wider. And let's say this is the bullish candle, or maybe something like this. Bullish candle, right? And here I would make the bearish candle just to explain what I'm, right? Just to explain what's happening here, at least through the eyes of, hold on. So, all right, so let me change this. All right, so something like this, right? So that's basically what creates the order block to me, right? So it's either a bearish engulfing or a outside bar, and you could have, a second candle come back. The range, either it's bullish or bearish, doesn't matter, which is this candle, and it still taps into the range, right? That the high and the low still interact with the order block. That's an immediate retest, and you can have multiple of these for some time. And to me, they're all immediate retests. So those are not the first retest yet. To me, the price needs to go completely outside, so the high and the low need to be completely outside of the order block. And then for it to have let me change this, this would be the first retest. Okay, so these are the two order blocks that created the two candles that created the order blocks, and these are the immediate. Usually there's only one, sometimes two. You can see it one here. This one isn't touching. So basically, whenever we get in the next month, we get a retest, that would be the first retest. I hope that's clear now. So these are the candles that created it. These are the immediate retests. Usually they're only one, sometimes none. And then you need one candle that doesn't touch the area to create that space to then consider this to be the first retest. Okay, hopefully that clears things up. Okay, so we have a fresh order block. We have immediate retest here, and the market could come back. So that's something we could be considering later, whenever price gets back to this level. But right now, there isn't anything to do, at least in this time frame. That's the only structure there is. As you can see, there's many things here, but I'm only focusing on one thing, which is the monthly structure, the last monthly structure, and how are we? Have we had a immediate retest? Have we had a first retest? Is it still fresh? Those are the questions I'm asking. That's it. Then I go to the weekly, and let's take this off. So on the weekly time frame, we have let's see, we have a couple of things here. We have one bullish order block that's still fresh, and we have another one on top of it, but that one is clearly because of the you always have to, if the market retest the first one, but also the second one, you also want to be using the extreme one. Okay, so that means that this isn't as relevant anymore. It is the lower one, the lowest one, that tells you what to do. Basically, there's a lot of space in here. So the market still, it's not clear yet what it will be doing. We just understand that this is a demand area, and price will likely have some kind of a reaction, either a pop, maybe this is the weekly, so a couple of days that could be, or an actual reversal, which actually takes out this high and even continues higher. We don't know yet. You never know in advance, right? So you have to build the case. What is the market doing? What is it trying to do to get a glimpse of what is actually going to happen? So you have the weekly demand area. An order block to be tradable, at least for me, it needs to be fresh, meaning, the number of candles since it was created is up to a certain limit, but also it needs to have not been mitigated or touched before. And this one was touched. We lost. Okay, you guys lost me. Let me check. Is that
I
so?
can here it's fine. I don't know about YouTube. Let me
Yeah.
check too. Okay, let me
I
see.
see myself on the YouTube stream. So I'm not sure
Yeah,
if
on
it's
YouTube also it's fine.
yeah. Okay, I don't know what happened there. Hopefully it's a temporary thing. But in any case, the point that I was trying to make is that it needs to have a limit. There's a limit on the number of candles since its creation before up to when price comes back to it. And that's one thing. The other thing is it needs to not have been visited before. An immediate retest is okay. That's why I don't consider it a first retest, right? So an immediate retest, if it had an immediate retest here, I would still consider it fresh. But once it leaves the order block completely, the whole range leaves it and comes back later, this is then the first retest. And this retest worked beautifully, even though it squeezed quite a lot. But you can see that the market, not very precise, but I mean, the market did get back in and push, the buyers pushed the price much, much higher. So the order block, in my understanding, since it didn't reach the next level, it was this one that did the magic, so to speak. It worked, but it's up to that point, I'll use it in the main strategy. I leave it because I know market will react to it on the second time, the third retest, but I don't trade them anymore on the main strategy. Okay, so we do have a fresh order block there on the daily time frame. What do we have? Do we have something on the daily? Actually, we don't. Market is very bearish. Why do I say that? Because, well, we have one bullish order block, and what does it do yesterday? It broke it. It invalidated, right? It's a invalidation of a bullish structure is obviously a bearish sign, right? So I left this here for you guys, but that's it validated. That's a bearish sign, and the other sign, if you didn't get the first memo, the other sign is that we have a bearish order block here as well. It's an almost outside bar, meaning it's a very strong bearish bar, almost outside bar, but it tells you, on this time frame on the daily, that the market is not ready for any kind of pop reversals whatsoever. At least it's not showing here. So there's nothing here on the daily time frame. I'm only looking for this order block and actually using this order block. Everything else is background noise. They're still important, but I mean, those are the questions that I ask myself. That's the only thing I focus on, and so there's nothing else to do. It's still bearish. If anything, I would be looking to short this when it comes back. Right? That's the whole idea of the order block. So then we go to the H4, and I go back to see if there's anything that I can use, and actually there is. This whole area, this is the H4. this whole area is actually a one big quasi. Quasi being the reversal pattern. That's the left shoulder, the head, breaking of the neckline, goes all the way up, and the 50% retracement is right here, and everything below there are possible areas for entry. You got one here on the H4, another one there, and a much bigger area much lower. And we are currently in one of them. So not because of the daily hasn't shifted yet. The weekly, we are in a demand zone, but you know that's the only thing. But the H4 is telling us that this area could be used for some kind of a reaction, a pop or a reversal, but a reaction. Okay, so we got the quasi here. If we go lower time frame, you would see that the market also on the H4 started creating bullish structure, right? Even though the daily isn't shifted yet, the H4 is telling us, all right, their buyers' appetite increasing. We could have a push to the upside. That's what it's telling us. And so I got the order block here on the H4, which sits inside the entry order block on the H4. So now we need to go look for more reasons to pinpoint, because this is still quite large. We're talking about, let's check here, about 30, 28 dollars of price range, which is quite wide still. And if you go to lower time frame on the H2, there isn't anything. Just looking to this pair, nothing else. Go to the H1, and voila, we see here a bullish order block, which it looks to me 4, 6, 8 is still fresh, but it looks to me that it's going to be invalidated before reaching 10. So it means that most likely we're not going to be able to use this. It leaves us with what? A weekly demand zone, daily still bearish. So weekly and daily, there's really nothing to do. They're conflicting. And we got a 4-hour order block that starts, 4-hour time frame that starts to build up something. That's what we have. And to me, that means a day trade, not a swing trade, a day trade. And that's it. We do have if there's anything, there is also this bearish order block that is right there. It's conflicting in the sense that it's the opposite direction. But if you were to trade this, I would just short it up to the next level, very next level, either on the H4 or something like the H1. Very very tight just to the next level, because I do see we are seeing H4 reaction. So that's the H1, and this is if I do get an entry here, because we don't have a daily reason for a long, our target should be just this. If there is an entry, I'm not saying there's not one right now, but it would be just this or whichever higher point it reached before coming back down, right? So if it goes a little bit higher, that would be my target, or something right before that level. All right. So do we have is this still fresh? This is 6, 8. Yes. So actually, this is also a bearish structure that we can take advantage of. H4. We go to that's H1, not H4. Do we have a 4-hour? We don't have a 4-hour. That means that still I don't have alignment, so I can't use that either. It's just a 1-hour order block. I can leave it there, but it's not very useful to me. Basically, we only have a bullish structure. Bullish structure, that's somewhat promising, and we will have to wait for the market to come back to this area, the H4, and perhaps either play with this within a certain number of candles, or create a quasi on a lower time frame, and then we can take the long and maybe take it. Well, it has to take out this first. Actually, don't have to take out this first, because this is a fresh order block, not a quasi on the hourly. For this order block to be, let me give you. Hopefully, this will not confuse you. But I got 2 reasons for a structure to be of interest. Okay, just 2 reasons. One is it's a fresh order block, which has all the criterias, and at a certain moment it stops being fresh, so I can't use it. And the H4 is fresh. The H1 is fresh. However, in 2-3 hours, this H1 is no longer fresh. So the order block, fresh order block reason would then be gone. If I still will be able to use this, it would be because of the quasi, okay? Meaning this, but by then it needs to actually break this level. If it doesn't break it, then it will never be a quasi, and this will never turn into a entry order block, okay? And if it doesn't, then I wouldn't have anything here to trade. Very simple, but hopefully that clears things up. So I'm interested in this whole area on the H4, and if this goes, if price goes quickly there, then I can see myself getting in, looking for a long there. Otherwise, we'll have to wait for the daily, not the daily, the H1 to give us some kind of reversal pattern, a fresh order block again that we can use. And if none of that happened, then we need to consider that price will perhaps just continue to go lower and eventually break these levels and make a lower low into lower levels, which I'm looking to go long from. That's my view on gold and EU. Hopefully that's helpful for everyone. And if not, let us know in the chat, and I will be happy to elaborate on anything we spoke about. Let's take a look here. We have something interesting. Nothing on the H4, so I can trade it, but this is a level that could have some kind of reaction. You have an H4, H2, I mean, H1 has an area here. This is not, valid for my main strategy, but if I'm scalping, I would definitely be, taking jabs of this level. Look at that. Look at that beautiful reaction. Tell me that's not tradable. Tell me that's not tradable. Look at that. It's about 2.6. Okay, so it's not big, a big move. 2.6, a little bit more than 2.6 pips, so it's not that great. Let's see, on the 5-minute, it hasn't switched back. It's still bearish. I need something a little bit higher time frame to indicate me that this could bounce. This is still bearish. Yeah, so I would want price to, let's see if this is the area. Remember, this is not the main strategy, so I wouldn't, this is a different type. This is the scalping, which I'm just going for a couple of pips and that's it. But understanding that we are likely to see, not all the time, but the chances that we could see a little pop here, maybe go to this level, is quite possible. Let me double check a couple of things before I say anything. Yeah, I think that from this area below to this order block, that could be the move that I would be intending to. Let's measure that. That's about 3.6. It's not great, but I think it's still tradable, especially if I can get a tight entry below, not on the edge, but maybe something quite, something like this. It squeezes a little bit, comes back, and I can get my entry there and target that area. So that would make it a little bit more than 3, maybe 5. That's plenty for a scalp. But it will have to show its intention first, and it's not there yet. So far, this is the quasi. On the 1 minute, we'll have to see. I'm gonna go give back the mic to Samir, but I'll be in the background showing, whenever I can, see if the market reacts here, and whether or not that's a viable little scalp for me or not. Samir, how is things on your side? Because the market on the other side of the pond has opened, and people are, scrambling to their screens, clicking,
Yes.
buying and selling. How about you? What do you see?
All right. So I'm looking at NAS and US 30. So as I mentioned, I'm looking for buys on NAS 100. Earlier, I was having this area on, and when I looked at 2-hour time frame, then below this there is a fair value gap. So I was like, maybe we can get a retest of this fair value gap. So I am planning to buy around this area, the orange line that I was having. And why I am planning to buy around this area, this candle is having very low wick. So I think we can liquidate all these areas, tap this VWAP, and try to go back to the upside. So this will be my idea for today. So I'm waiting for this. So let's see what we get on the US 30 side. Okay, we are tapping this area, this 1 hour demand area. Can we respect from this area going to the 1 minute time frame? All right. On the 1 minute time frame, we will know if we are going to respect this area or not. If we close above this area, and definitely we'll be seeing some kind of strength, this can indicate a buying opportunity for us. So let's see what price does today. I am just noticing. Okay, seems like we are not going to respect this area. But if this area still get respected, let me see where the VWAP is. I think VWAP will be bearish now. Okay, we can use other chart. Okay, yeah, it is getting bearish now. Going to the 30-minute, 1 hour. This is still the 1 hour area. 15-minute. Can we use this area as a buying opportunity?
NAS is going up nicely. Take a look at
Yeah,
that.
I just never tapped that area where I was eyeing on buys, but I think that's fine. Let me delete this for now. Okay, we have liquidated this. Can we still close above some kind of? Actually, VWAP is getting delayed here. Okay, now it's fine. 15-minute. I think we still have this area. Actually, price tab this area, so we cannot utilize this. The 30-minute area looks nice. This is the 30-minute area. So
Nice. So you're looking, you were looking to go long, I think, right? Or not?
yes, I'm looking to go longs around this area, but
Mm,
I want some kind of confirmation. To me, this is still the liquidity which is pending. So
mhm.
I will try to take some longs around this area. Let's see how it plays. But of course, 1 minute time frame. I want price to close above this area. That will be amazing if it did. That will be my entry signal. I can even place my stop loss, tight, probably like below this fair value gap and target all the way till here. So this is what I am looking for. So let's see what do we get today.
Okay, so
Yeah,
you wait price to come back to recapture that level. That would
yeah, the
indicate
VWAP.
or mhm.
Yeah, so this is the fair value gap. If we close above this, it will be closing above the VWAP also. So that is what I'm eyeing on. If that did happen, so I will take my trade here. But I'm seeing the MetaTrader price is going like very aggressively to the downside. So I don't think so. I'm gonna get a closure above that area. But still, if that is getting respected, do we have any other fair value gap? Now we have this very small fair value gap. Do we have any other area going to the 30-minute? Yeah, it is not getting respected. So I think we are not gonna get any momentum here. We are also closing below the VWAP. So if the trade rejected or the price rejected right from this area, that is good. If it didn't, this is not gonna be the trade here. Let's look at NAS 100. Okay, NAS can be the trade for today. Going to the 15-minute. Yeah, this is the area I will be looking on to go for longs.
That's 920 24.
Yes, close to that. This candle is also not having a wick. Very
I'll
little
show
wick.
I'll show you
Yes.
later on what I would be wanting to trade on NAS as well. and people will see
Intraday 30 minute.
how we use completely different things, but we're still getting to the same levels, right? 924, 924.
Okay.
That's where your level roughly is, and I'll show mine in a little bit.
I'm seeing US 30 is trying to pick up the momentum. Can we reject from this area? Because this area to me looks very nice. This is some kind of demand area. And this also was having a very low wick. This can be some kind of liquidity move, and price may can continue to the upside. If I draw the trend line also, it is right on the trend line. So it is a make or break level for US 30. I think I might can give US 30 a chance here if we close above this small fair value gap. I will want a little bit more impulsiveness, so my entry can be a little bit here. Stop loss can be 100 points, I think, because we do have very decent targeting range. So this is what I will be planning to do. Okay, we are trying to go above 3 minute, 5 minute. Okay, we are rejecting 15 minute. Yeah, let's see how it goes. And it is also creating this now, some kind of triangle pattern, which can break to the upside because I am making the story this way. This is a liquidity move, triangle pattern, maybe can break to the upside. Okay, on the MetaTrader side, I'm seeing huge volume. Okay, I'll just take a trade here. Let me punch it on the MetaTrader. Yeah, I'll place my stop loss around this area. The only problem is that we are below the VWAP, but I am just relying on this trend line, this triangle pattern. Price tested this support area, 30-minute area, decent demand area. So let's see what do we get in today's session. Is it gonna be our day, or it is gonna be a stop loss day? The risk to reward is very good actually. I managed to get entry here as right at the wick. Yeah, right below the wick here. Stop loss is
Yeah,
here.
we have a question from Big D guy, Samir. Maybe maybe you wanna answer that, or shall I?
Yes, definitely. Now the trade is on, so I can take a look at.
Or or maybe
Okay,
I should. Maybe I
yeah,
didn't want to take
definitely,
your I
definitely.
didn't want to. Okay, go ahead then.
No, no, you can answer, but there is the guy he was asking about the VWAP. So VWAP is default. It is default setting on the trading view. No need to change it. I'm using the default VWAP. And is it allowed to copy your trades? It is not allowed actually because that will flag. So you cannot copy the trades. So maybe I should not do this here because either you are gonna get in trouble or me. I will get in trouble because it is automated system. So maybe you can utilize this way because you can say his bias is also to the upside and you are also planning for some kind of longs. So you can use it as confluence, but do not copy trades because it is gonna flag the system.
Yeah, the rule is as with all prop firms. Uh, we are looking for individual traders who can produce profit in the market, and coordination, group trading, or taking trades in coordination with other traders is not allowed, right? So if you take the exact entry, stop, and take profit at the exact time, you understand that it's going to be flagged because it's going to be identical. That said, many people will be going long at the same time. So um, you can, actually, I don't want to say, I don't want to promote or stimulate people taking trades because you saw it either here or anywhere. You should not, in general, a trader should not be wanting to go taking a trade based on someone else's analysis and someone else's trade, simply because you have to own it. When you lose, when you win, you don't want it to be someone else's loss or someone else's win. You want it to be yours. And in order for you to own it, you have to, it has to be yours. Your plan take things that we use, even the same strategy, make it yours. Tweak it, test it, tweak it again, improve it. And once you're completely satisfied, then you go to the markets. But to come back to the question, copy trading is not allowed. And what Samir said is exactly right. Right, the system will flag identical or very close to identical trades, and if it's a pattern, the, that would be in breach of the contract, in breach of the terms and conditions of, and we don't want that. Neither party wants that. We don't want that for us, and that's one of the reasons I don't show the exact entries and the exact stop loss and the exact TP of my, because I'm afraid to lose, my profits. But
Yeah.
anyways, but we share enough, actually, plenty enough that you can build your own system with your own ingredients and sequence and little rules that are slightly different than ours, that will make you could be trading the same structure, the same idea, the same thought process, but your trades will be sufficiently different that we will not get into trouble. Neither will you.
I'm just trying to
Yeah,
notice what price did
that's
yesterday.
this message here. That's exactly what we think here at our live streaming here. It's not a signal service, and I wouldn't want that for you, right? We wouldn't want that for you. We want you to get hone a skill, develop a skill for you to have for yourself. And as long as someone is just following a signal, you're not building the skills, and you don't want to do that. So very spot on here. All right, let's take a look at let me take a look at NASDAQ, if that's okay with
Price
you,
signal
Samir.
balance. Yeah, definitely. I did my
Let me
part.
show my
Waited
screen.
for that.
Let me show my screen
Yes.
so I show people what I'm looking for. And we mentioned 9-4, no, 924 was it, right? That was roughly one of your levels that you were interested. Maybe let me put NAS, since that could be all right. So that level is a little bit higher, and I'll have to do my analysis again
Okay, you are
because it
using
was done.
Ovenda.
Yes.
There will be a little bit price difference, but I think the area will be somewhere similar,
Okay. Let me do the analysis again, since I don't have the same structures. So there is one here. It's still valid, but it's actually this area that's more important. The H4. Oops, that wasn't the intention. The H4. We're retesting this. But what I'm looking for is actually the order block right here. That's the one that indicates the possible reversal, or at least that big pop. I was gonna say a little pop, but it's more than just a little. And that came off of a area, another order block, right? All of this, if you guys remember, let me take these off so it becomes clear. All of these candles are immediate retest. This is just one process of immediate retest. That means that I'm still able to trade this move if it comes back for the first retest, right? The first retest, right? It's a anyways, you get the point. Don't want to confuse you. So that's one thing, but instead of that, we had a much tighter and beautiful area below, which is the fresh order block. So I'm actually interested in this area. And certainly because we had a reaction. You can't see it here, it didn't touch, but on NQ, you can see that it clearly touched, right? So that's the little price difference and spread and whatnot between price feeds. So I still consider that we are quite possibly in a reversal move that came off of this structure. Okay, that's the whole idea. So where do I have a quasi here? I don't. The quasi line would be all the way up here. Let me check. Yes, that will be all the way up here. So there's no quasi, but there is a fresh order block, right? The two reasons that I use for the trades. That's one. And so I'm waiting for price to come back. There's on the H2, there's a little area here that I'm interested in. and there was one on the 1 hour as well, right? It's actually on the 1 hour, it's a little bit tighter. So if we get a reaction, I can actually put my, and there was, actually, I'm not telling the thing, everything as it should be. For those who know me, you know what I'm talking about. We have a little nice reversal pattern here, which may or may not be used as market is going through that reversal process. But basically, this is what's happening, right? So you have an established uptrend. Here it goes all the way there, goes down. That's the established downtrend that gets broken on the 1 hour. It does come back, but we didn't have any entry order block on the same time frame. It moves away. So actually this move doesn't, I don't even count it. This is the highest point. It comes back possibly for the last move before continuing higher. And I think if this is going to happen, then the H4 and quite likely one of these two will be touched in the process, but only if the market actually comes down. And it looks like it's not going to come down. It's just going to continue much more strongly and likely using this area already. But that's not tradable to me last time I checked. Yeah, so I'm not able to take this area because the quasi that I'm trading, has the 50% retracement limitation, selection, how you want to call it. So this is where I want to be getting in. And if I do get an entry here, I can target this whole move from here all the way to the highest point it reached before coming down. Basically, let me show you guys. So something like this, put my stop as close as possible, and then target whatever level that is. 300 points, but it's not there. Don't know if it's ever, if it's even gonna come back, but that makes sense to me. You have an H4, got an H4 order block. You have a 2 hour and also one. Either one of them could be the basis or both of them. And then I would go to the lower time frame for the 5 minute and look for the quasis in the same time frame, right? So something like this touches one of these levels, something like that, comes back, breaks the neckline, tells me there's a possible reversal, comes back, and then make this moves on some kind of a entry order block on that quasi, and I'll be putting my stop. I'll be getting in someone as it moves, as it tells me that the buyer side taking control. I'll put my stop below that very tight area, or below the head, or below the whole structure, right? Whichever is most suitable at that time, because I need to read price action to see, can I get in with a tight end, with a tight stop, or is this not so clear and I need to have some margin for error? But this is basically this would be my game plan. But it looks like the market is may or may not be reaching those levels. If we go to the NQ to get the opening range, someone mentioned that in the chat. That's a very popular, trading strategy, and we talk about it quite often here at the 5ers as well on the futures channel. And we have here, this is the candle, the opening candle. This is the area that I'm interested in. As you can see, this is where I'm gonna be looking for possible entries long. And we have the low of the 15-minute, and we have the high. And basically you wait until either one of these sides gets broken for your indication that the setup is on. And you start, depending on how you trade, you either get in right away or you wait for some retracement. You get in right away, you put your stop at the other side or halfway, depending on different variation of the strategy, and you target a multiple of that same range or something else that makes sense to you. And some other people might, wait for a retest of the range before getting in. Other people want to go for the retest of something inside of the range before getting in. Something perhaps like maybe not that, but maybe this. If you're feeling, not a possible entry with just a regular order block, that is. Apparently, wait. take that away. All right, something like that. Didn't change. It will change in a little bit. Well, you wait for the price to first break the range and then come back to retest something that makes sense to you, and then you get in with your stop below the level that makes sense, which is the whole range, and then you target, whatever it is that you think is suitable, which could be the highest point so far, the high of the day, or a multiple of the range, or maybe just the other side of the range, depending on, the trade plan you came to build. Okay. Marcus is asking, do you guys follow any news channel in particular? Yes, we do. We as traders, I'm gonna switch to let's see if I can switch it here. I always have in the background, I have Forex Factory to look for the news, the macroeconomical news that comes out. For one, because it moves the market, and two, because of the rules, right? There's certain programs, the high stake program, for example, where you are not allowed to trade 2 minutes to enter the trade, 2 minutes before and 2 minutes after the release of red folder news. So you have to know for each day when that moment is. So you just wait 2 minutes, or get 2 minutes earlier, whatever it is that your trade plan tells you to do. That's one thing. The calendar and the news that I use it's a free website. It's called Financial Juice. As you can see, you might have seen it on our chat or on our video, on our stream more often. It's very quickly, as soon as these news comes out, they come out. They will be here in red if it's important, and otherwise in the colors you see here. And this is very especially with Trump, with a Middle East situation, you really, really want to have on one screen this, or at least on a tab, and this page on, so you can just quickly go to it. But I would prefer you have it on a screen, or maybe even on a tablet next to your trading setup, because you want to see it whenever it flashes red. You want to be at least know about it. Okay, there's something happening, and you can then go back to your position. Does that change my risk management? Do I readily need to abort this trade because something very good or very bad happened? And you want to be a good risk manager, and one of the first thing you have to do is be informed. Be informed by knowing what news is coming out as it happens. And this is free. There's a premium. I'm not affiliated to this. We are not. But I don't even have the premium. I'm just using the free, and it's just fine. That's enough. I don't need to have. I just need to know. Get fairly quick what's happening, and I can figure out myself if I need to do anything. I don't need the premium pack to do that. And financialjuice.com, not affiliated. Okay, so let's go back to the tab, and you can see how the market quickly, very beautifully, is interacting with that order block. We'll have to see. It's too early to say anything, but this is not surprising to me at all, because the market does this all the time, comes back, retests, and does its thing, either penetrates deeper or starts shifting order flow to the upside. The 5ers, let me check. Do you mean no? This is the Forex calendar, Forex Factory. As you can see here, that's not associated with the 5ers at all, but it is the calendar that is used in the terms of conditions, in the rules basically of your program, the high stake program. So, and it states there, you need to check Forex Factory. That's the authority, so to speak. That's the official list of red folder news that needs to be avoided if you're on high stake account. But it has nothing to do with the 5ers, in the sense that they're not associated whatsoever. And Financial Juice, same thing. It has no links to the 5ers at all. I mean, Financial Juice is just a great website, and the 5ers is just the best prop firm, but there's nothing else linking them together. All right, so here we are. This is the 1 minute market. All right,
What
so
is
let's
gold
take a
doing?
look.
Let me take a
Good
look at
question.
gold actually.
Yeah, go
Because
ahead.
a lot of people trade gold, right? So I was like, let's see what gold is trying to do. I think you was having the area around here where you was eyeing on. I know you do not trade gold that often, but you was looking for some kind of reaction from this area. So let's take a look at 4 hour candle, how it is performing. Okay, we have this some kind of fair value gap, 15-minute above the VWAP. We have this demand area. Let's go to the 1 minute time frame. Let's see if price is slowing down here. Yes, price is slowing down here. What it is telling you, price wise or the nature, if you can observe the nature, price is struggling to break this area. So maybe buyers can step in from here. So risk to reward wise, I will like to take trade around. Do we have any area which was untested? Okay, this can be the area where I will look for some kind of trades. Okay, let it dip down, pull back. You can take some aggressive entry around here, or you can wait for that breakout to the upside. And this will be your safer entry. But of course, your risk to reward will be sacrificed, but you will have a little bit more confirmation. So yes, maybe you can give some chance around here. You can look for buys as VWAP is bullish. So okay, we just tapped that. I'm just gonna mark my risk to reward tool like this. I don't want the price to go below the VWAP, so I'll just place my stop loss something like this. TP can be something like this. 5 minute time frame, yeah. We don't want it to go below the VWAP. Can go a little bit below, that's fine, but should not, go all the way to this area. It will just shift the trend. It means this analysis is wrong. So let's see how price reacts from this area. The only convincing thing was the nature of the price, which was slowing down around this area. So yes, I'll just leave this risk to reward tool on. So I don't know if this is going to be a stop loss trade or a winning trade, but normally I look for these similar things on my indices. Not my indices, my indices strategy. So I look around the same things. So let's see. I'm just going to leave it on. Tomorrow we can see, as I know it is also the stream time. We are almost about to end the stream, but I'll just leave this on. And my US 30 trade, if price hits this high, that will be good. So let's see. I'm in the trade right now. Took the trade from here. Right now I'm seeing around 1:2 risk to reward, if I'm not wrong, somewhere close to that. But I will hold this trade to here because we have a lot of potential to break all this area, and you can even map out this trend line. Oh, that was a terrible trend line, something like this. So I'm expecting the breakout of this trend line today. So let's see, because we are consolidating for a very long period of time, and I think it should break out. Why I'm saying that? Just because of this area. If this was a breakout, real breakout, it should have reacted from any of these areas. So right now we are consolidating. It means the strength may can shift to the upside. We are also bullish as per the VWAP. That is a crucial thing for me. So I'm just holding this trade, but the gold trade, uh, that to me, I was like, we may can see the upside momentum. So I'm just gonna leave this risk to reward tool on. Better entry could have been at this fair value gap, but that is also fine. My stop loss is still protected below. Of course, this is a paper trade. I don't trade gold, but this trade is looking convincing. So
Good.
yes, there is also the fair value gap. You can even extend the target till here. Okay.
We have a lot of questions in the chat and a lot of intention and desire to answer all of them. However, time did not permit this time around. I was gonna I'm going to show my screen so you guys know what I'm looking for on MNQ or NQ, which is all the same. We have the quasi, which is inside the opening range. This is the 15-minute opening range. That's the 30-minute opening range. You can have an hourly opening range as well, right? It's only the time that you look for that period, that range in the period, and you have a quasi and an entry order block right there on the 2-minute, just in case. So if you have a 2-minute indication that buyers are coming in, you could be looking for a long, putting your stop somewhere below the area, and then targeting whatever it is that you want to be targeting, a fixed risk reward ratio number, a level, a structure. It's up to you. But that's it. That's it for us for today. We Unfortunately, today our CEO wasn't able to make it to our stream. However, do not despair. He will be here next time around, as he is a vivid or an avid a trader, and we will have lots of him to show soon. He is on a very very busy schedule and wasn't able to join us today. So. But that's it for today. So, Samir, thank you for your time. We would like to thank everyone for being here, interacting. You guys were wonderful today. As always, talking and asking. We will keep those questions and we will answer them the next time around on Discord. If you're part of the Discord community on Discord, in about an hour less than that, we'll have another call, and you are all welcome to join us there. It's going to be coffee with traders, and we always give out 10 hub credits. That's $10 as a discount for your next purchase at the 5ers, to one lucky winner, sometimes two. So join us. You're all invited to our wonderful Discord community, as well as in the Hindi. We have a Hindi server as well. Samir, is very active there. So you're all invited. But for now, take care and goodbye.
Take care, guys.